geopolitical tension between the United States and China. Certainly, Chinese equities investors have gone very underweight because of those same concerns, and it just shows how interconnected the U.S. and Chinese economies are, why diplomats from those two countries should take a page from the business world, where obviously companies are getting well with one another just fine. I mean, actually, the China export-import data overnight shows that actually China's exports to the United States were very, very strong, showing that China needs the United States as well. It does look like, I did some looking at this situation, and it looks like the regulation, what this, the State Administration of Market Regulation, what they're looking at is specific to the Mellanox acquisition back in mid-April of 2020, that when NVIDIA bought Mellanox, they said that the company had to kind of unbundle some of its sales in China. So this investigation is about whether or not NVIDIA did fulfill that promise that it made to the Chinese regulators at the time. This says that if there is a violation, according to Article 58 of the anti-monopoly law in China, that they could be fined upwards of 10% of the previous year's sales. I don't know if that's the China sales, which, to your point, it's about low mid-teens to China. So it looks like it's a very specific issue about this one acquisition.
All right. Brendan Ahern, the Chief Investment Officer, view of China right now at Crane Shares. Thank you very much. We'll see you soon, sir.
Thank you, Don.
All right. Coming up on the show, smoother sailing ahead, the new bullish call on Norwegian cruise, and a better view for 2025, sending those shares sailing higher, not flying, sailing. We're back in a moment.
Yeah, we got a joke. Oop, got one thing. Yep, I should have thought about it.
Welcome back to Worldwide Exchange. Time now for your morning call sheet. Goldman Sachs is upgrading Norwegian Cruise Line to a buy rating. Goldman says it likes the setup for the stock next year, and it should begin to narrow the valuation gap with rival Royal Caribbean. Another upgrade, this time from Bernstein, on American Airlines, moving into an outperform rating. It cites a positive industry backdrop along with the announcement of an exclusive co-branded credit card deal with Citigroup that's set to generate a sizable cash flow. And then Piper Sandler downgrading Pinterest to a neutral rating. Piper says there are still unresolved questions after the social media company's Q3 result, and it also faces a competitive advertising landscape. So Pinterest shares offered by about 2% in the pre-market trade. Well, ahead, the one word that every investor needs to know today, and the stock pick that every investor needs to know as well. Plus, shares of Toll Brothers facing pressure ahead of the opening bell on the back of its results. Why our next guest says now may be the time to get into the stock. We'll be right back. Welcome back to Worldwide Exchange. Check out shares of Toll Brothers right now under pressure ahead of the opening bell, despite delivering actually a fourth quarter beat and full year guidance that came, call it, in line with estimates. Now, Toll says purchase contracts in its most recent quarter were up 30% from the same time last year, but margins might be one of the sore spots, expected to come in at just north of 26%. The analyst estimate was closer to 27.5%. So joining me now is somebody who knows a thing or two about Toll Brothers and the state of the U.S. housing market, UBS home building analyst John Lovallo. John, thank you very much, first of all, for being here in person, because like in real estate, it's all about location, 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 right? So let's talk about Toll Brothers.
Yeah.
It's been a dazzling run, medium to longer term, for many of these home builders. Is there any reason to think that the Toll Brothers results we got could be a change in catalyst, or are we reading too much into it?
Hey, Dom, thanks for having me. Look, it was a great quarter across the board. I mean, they beat across key metrics. I mean, orders, deliveries, ASP, margins, EPS. Everything was great. To your point, what people are a little bit nervous about today is the fact that the outlook on a full year basis was pretty good. Gross margin maybe a little light, but the first quarter outlook in particular was a little bit light in terms of deliveries and gross margin. But here's the key. They have beaten 8 consecutive quarters of their gross margin guide by 90 basis points on average. And then in terms of deliveries, 9 consecutive quarters by an average of 6% at the midpoint. So the guidance is conservative, and you know what, rightly so, given that there is still some uncertainty in the market.
But Toll's also a very specific home builder for a very specific and distinct part of the market there, and then it's kind of more skewing towards the middle to higher end of things. Does it say anything to you about the state of the housing market if we are seeing that kind of reaction from investors from a certain side of that market or a certain spectrum in price?
I think we might be looking a little too deeply into it, right? The stock's up 50-ish% year to date. It's had a nice run. We would argue, and this is a conversation for another time, but valuations need to re-rate in this group, and it's well overdue. But for Toll specifically, yes, they play a little bit at the higher end, but keep in mind, they have been migrating down, right? About 50% of their orders are on spec at this point, so they're starting the construction before there's a buyer in place. And so they've gravitated a little bit more towards the kind of mid and even to the lower end to some extent. So I think, look, they're saying that demand over the past 6 weeks was very strong. That's a good read for everybody.
All right, macro-wise, if we could just kind of go up a little bit more up that spectrum here to the funnel, is the state of the U.S. housing market by the companies that you cover in a healthy spot? And by extension, how predicated is the outlook for that housing market on a Fed interest rate easing cycle?
Yeah, tricky question. It's a tale of two markets, if you will. The existing home market is being impacted by that lock-in effect of higher rates. So we're at GFC levels of existing home sales. Now, what that has done is set up the stage for the new construction builders, the home builders, to come in and fill that void. And they're able to do so because they can offer things like mortgage rate buydowns and things of that nature. So the underlying demand is incredibly strong. If you have the ability to actually help that demand along, things are going very well. So I think the setup for the public builders and new construction is incredibly favorable.
And before we let you go, John, your top pick at UBS when it comes to all the home builders you cover?
D.R. Horton at this point, they really cater towards that first-time entry-level buyer, consistent executor, largest builder by 15% in terms of deliveries.
John Lovallo, location. Thank you very much.
Tom, thanks for having me.
All right. Coming up on the show, the slice of the market that's up nearly 20% this year. Our next guest says may be the place to be in 2025. We'll be right back after this.
Stocks at Night.
Welcome back to Worldwide Exchange. Here's what to watch today. We'll get the latest look at the health of the small business sector with the NFIB survey at the top of the hour, and a number of earnings on deck, including GameStop, the OG meme stock. And there's still time to join, by the way, CNBC's Financial Advisor Summit, bringing together industry experts to discuss the market trends, emerging risks, and strategic insights out there. Just scan the QR code on your screen that you see there to register, or go to cnbc.com/FA. I myself will be moderating a panel on the incoming Trump administration and the investing philosophies there. So register at the cnbc.com QR code that you're seeing right there. Turning back to the markets, with the Dow riding a 3-session losing streak, the S&P and Nasdaq coming off their worst daily performances roughly in about a month. Futures right now are relatively flat on the session. For more on the trading day ahead, let's bring in Keith Lerner, the co-chief investment officer at Truist Wealth. You're our second chief investment officer today. Keith, let's take us through, if you will, why you think the market is in a okay place, I'm thinking right now, Keith.
Yeah, hey, Dom, great to be with you. Listen, we're up over 25% for the year. We've had a big run the last few months. Having a little bit of digestion, I think, is perfectly normal. Our main thesis as we move into next year is a bull in a China shop. So we're staying aligned and anchored with that primary trend, which we think is still to the upside. But we also expect to see some disruptions along the way, which should provide investors some tactical opportunities along the way.
Where exactly then do we find some of those opportunities right now? Everybody has a different view on this, but I'm curious what you think is going to be the driving force in markets in 2025.
Yeah, well, I think the driving force in 2025 is still going to be the economy, and it's going to be earnings, right? Because valuations obviously are somewhat rich. But as we look big picture, we still have an emphasis on equities relative to fixed income. We're still Team USA, even though on a short-term basis, I think you might see international do a little bit better on a short-term basis, but fundamentals still support the U.S. for the overall year next year. And then we still think this bull market, the dominant theme is AI, and we think that technology has another good year as well.
What exactly are places right now where you are seeing at least a little bit more of this kind of move? Is it going to be in that Mag 7 side of things? Is it going to be in those small caps? What exactly is the view on whether this broadening out trade really has legs in 2025?
Yeah, I think it's more about complementing as opposed to saying, hey, this is only one area. We still like technology. We like Mag 7. We think artificial intelligence has longer to go. But we also think another part of the market that can complement that is mid caps. It's often an overlooked part of the market. An orphaned part of the market is trading at about a 25% discount to the S&P. Historically, it's traded close to parity. And some of those pro-growth policies and pickup in M&A should all benefit mid-caps. And they're only up about 15% above the peak from 2021. So we also think there's some catch-up as well.
All right, so that brings us to your word of the day, right? And let's kind of take us through what exactly it is and how that mid-cap story kind of fits into it.
Sure, and I kind of let the cat out of the bag that it is overlooked, and specifically with mid caps, a lot of times people say, what do you think about large caps? What do you think about small caps? What do you think about international? No one asks about the one in the middle, like the middle child. And in some ways, in our view, again, they're cheap. They're somewhat higher quality than small caps. They're trading at a discount. And they're over a cycle, they tend to be more stable than small caps. So again, they'll trade somewhat in tandem with small caps, but you get a higher quality version. And I think that we'll see a pickup in M&A, and I think that area specifically will benefit.
All right, overlooked in those mid caps. Keith Lerner at Truist, thank you very much. Happy holidays, sir.
Thank you, Dom. Happy holidays to you.
All right, as we close in on the 6 a.m. hour, let's check out a few stories that we are tracking this morning. Shares of Taiwan Semiconductor under pressure in the pre-market and in Asia. This despite its latest monthly sales data this morning showing a 34% jump from a year ago to $8.5 billion. Shares of eBay also falling. The UK announcing it will soon make online marketplaces pay more towards the cost of recycling waste from its electrical items. The Financial Times is reporting European regulators have asked Google for more information about a scrapped secret advertising partnership with Meta. The FT says the agreement would have involved targeting 13 to 17-year-olds who use Alphabet's YouTube to promote Meta's Instagram. All right, a check on futures right now. Relatively calm as things stand right now. Keep it right here. Squawk Box starts the market coverage right now.
Good morning. New York prosecutors have charged Luigi Mangione with the murder of United Healthcare CEO Brian Thompson. We'll tell you what we know at this hour. Shares of Oracle are falling. The company's earnings and revenue both missed estimates, and guidance was short of Wall Street expectations. And Boeing has reportedly restarted production of the 737 MAX about a month after the end of a strike. You might recall it involved more than 30,000 factory workers. It's Tuesday, December 10th, 2024. Squawk Box begins right now.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. It's Tuesday, and we're ready to go. Futures aren't doing much of anything at this hour. Dow's down by about 4 points. The S&P's up by about 3 points. The NASDAQ's up by 16. If you're watching the Treasury market, of course, we're waiting to get both the CPI and the PPI this week. Ahead of that, the 10-year yield's moved up a little bit. It's back to where it was last week at 4.21. The 2-year is at 4.13.
And let's talk about the story of the morning, the story of the day. New York prosecutors charging Luigi Mangione with the murder of United Healthcare CEO Brian Thompson. He was arrested yesterday at that McDonald's in Altoona, Pennsylvania, after that worker there told police he was acting suspiciously. He has now been charged with second-degree murder, criminal possession of a loaded firearm, possession of a silencer, and possession of a forged instrument. He's 26 years old, graduated from the University of Pennsylvania. We were just talking about that off air. In 2020, he was carrying a handwritten manifesto that referenced the healthcare industry and apparently had, I don't know if this is connected, apparently had a lot of back pain. You know, I've been reading a lot about his back issues and all sorts of other things. I don't know.
Why second degree?
What'd you say?
Why second degree?
Why second degree? I don't know. There's the question about the ghost guns. This was produced
Maybe, yeah.
Apparently on a 3D printer, silencer on a 3D printer.
I think he had a degree in engineering or science. He had a master's.
He had a Bachelor of Science in Engineering and Computer Science. He had a master's
Went to
degree as
Gilman, which is a prep school
Valedictorian
in Maryland.
Comes from a very wealthy family.
Family owns a golf course.
Yeah,
golf country
resort.
club.
Yeah, he had very privileged, very strange.
Very privileged. Apparently, if you really read some of, I've been following him on Twitter now.
I saw my son
previous tweets and other things. There is a turn where you can see a sort of more activist-like view about both being anti-capitalistic, but maybe thinking that violence is the answer.
I don't understand
which is really, obviously
there must be some type of
shocking,
fantastical defect in his thinking, though, because his life would have been so great, and it's going to be so bad now. And the other guy was 50 with 2 kids, so you ruined his life. He's dead. His kids got to deal with that. Now this guy's going to spend the rest of his life, likely anyway,
likely in prison, hopefully. I don't know if we say hopefully, but hopefully.
I don't understand. So it's confounding to me. I don't know how your mind, especially if you're an engineer and you've had all this. He knows how to think. I don't know how you get to that point, knowing what all the ramifications are. It almost reminds me of some people, and it's sad, and it's mental illness that causes suicide. Sometimes I don't think people realize how permanent things like that are. You know what I mean?
It's hard not to think that there's some form of mental illness to get to that point.
It does.
People have said it's like another Ivy League graduate, the Unabomber.
And I've been thinking a lot about the for-profit motive, and there are certain things that shouldn't be for profit, like police and fire. Healthcare, it's a discussion worth having because it's your health, it's the loved one's health, it's people get older, it's your kids, it's all these things. So the knee-jerk reaction would be, let's just subsidize everything that's needed. But then when you do that, sometimes the unintended consequences, the outcome becomes even worse. And you could basically argue against the profit incentive for just about anything. It'd be nice if we could pay everyone $1,000 an hour, if we could charge whatever it costs to make something, to give it to people so that it wouldn't cost. Everything would be better if there was no profit incentive, except that it wouldn't. And so I don't know. You could basically take this, though, this dislike or disdain for the profit incentive, and it's not just healthcare. You could go across the board of people that are harmed, or it looks like they're harmed by the profit incentive, but in reality, it's the best system that we have.
Yeah, I don't think there's any question that the healthcare industry is broken at this point. I think that no matter what political persuasion you come from, you probably look at this and say that there are things that we should and could do to fix things. And I think that conversation is going to take place in Washington.
But there's middlemen involved. There's a lot. If you aren't watching your P's and Q's, it's ripe for abuse. And if you want to cover everything and everything's going to be subsidized, you'll end up paying one way or the other.
No, but there's no question.
And it's hard to use a profit.
We're spending more and more and more on healthcare and not necessarily getting better and better outcomes.
Right.
We're getting potentially worse outcomes.
That's where the profit incentive is supposed to help. You're supposed to get better outcome if someone's minding the store.
Look, there are going to be, we talked about this yesterday, but Donald Trump in his conversation with the press.
He doesn't know what to do either.
No, but he did signal out the middlemen and the pharmacy benefits managers, and that is a call you will hear from both the right and the left. If there's going to be some, I think you will probably look back at this point and say that this could be the beginning of some major changes in the healthcare industry.
I mean, single pay
issues that have happened, and there was enough push and populist movement there from both the right and the left to try and come after something. There's a desire to try and fix things and make it better.
Single payer or nationalized health, there are people that think it should be like the police department or it should be like the fire department, where you're not going to make money.
A lot of nations where that is the case.
That's what I mean. And you can look at the outcomes. In some small countries with 7 million people always point to Sweden or one of those.
Where do you land on what has been a revolution in the last 5 years, 7 years, 10 years of private equity just buying up doctors' offices across the country so that they can collect the Medicare and Medicare payments? And by the way, they do this with nursing homes the same way, effectively preying, oddly enough, not only on the individuals themselves, but the government to pay for all of this, and they try to extract as much as they humanly can. I mean, so that's where, to me, there's like the profit incentive, yeah, but the profit incentive, it's actually great for the doctor who sells their practice the first time, right? Because he or she thinks that they've worked a long time, they've built this practice, and they want to sell it to somebody else. But then the person who buys it, their motives are completely different and totally unaligned with the patients. They just are. It's because it's a financial business. That's the business. It's the business of making money. It's the distinction between what people actually do and then what. And so it's very hard. I don't know what the right answer is.
And look, there were a lot of doctors' offices that had to get bought up after Obamacare because trying to deal with the paperwork that came through and the bureaucracy, you couldn't do it as a single doctor's office anymore. You had to get wrapped up into bigger things. So there's a lot of issues that have gotten worse over time. I still think we're very lucky to live here where we are and have access to this system. But there are some serious problems with it, and hopefully we can try and make things
get back
better.
to the whole, how much is a doctor who goes to school for 8 years minimum and then specializes, how much is he worth? Is he worth over $1 million, $2 million a year? You would think yes, but then again, with cost pressures and everything else, lately with what you said has happened, a lot of doctors are no longer practicing. They go into biotech, or some of them become financial advisors.
Medicine, they go into plastic surgery, they go into other parts of the medical system.
Or they have this concierge medicine system, which...
it's just a different business.
Yeah.
Well,
where the money is.
Thank God for the plastic surgeons. Shares of Oracle are falling. Earnings of $1.47 missed estimates by a penny. Revenue also fell short. Company's current quarter forecast was lighter than expected. Oracle said it just signed an agreement with Meta, allowing the social media company to use its infrastructure to help with projects related to its Llama. Actually, it's pronounced Llama, probably, unless you're Carl Spackler, family of large language models. Before today's decline, Oracle shares were up more than 80% year to date.
Shares of Toll Brothers are falling this morning after the luxury home builder beat expectations for orders in the most recent quarter. Earnings and revenue also beat expectations. The forecast for homes built in 2025 was roughly in line with estimates, but expectations for gross margins in the current quarter fell short of estimates, and as a result, that stock's down by about 3.5%.
Meantime, OpenAI now releasing its new AI video generation tool. It's called Sora, and works similarly to the company's image generation tool, except this. A user can now type out not just what they want to see, but really like a desired scene, and Sora will then return a high-definition video clip. It can also generate video clips inspired by still images and extend existing videos or fill in missing frames. It's remarkable. Services will be included for existing ChatGPT customers, including Plus and Pro. But I will say so far, unlike some of the other services, if you were to say, you know, make a movie of Becky Quick and Joe Kernan and Andrew Sorkin talking about whatever, they will not do that.
Although you look at this, and because they've left enough imperfections, it doesn't look like beautifully finished on everything. It looks real. It looks more real than what I've seen in some other.
Well, it depends what you're seeing is you need. So the prompt matters a lot.
Yeah.
If they said, if you were to write handheld camera, so what you're seeing here, by the way, is super sophisticated in that the prompt is you're telling it what kind of camera to hold, often like what the f-stop. I mean, literally like very specific things. You're going to say it's on a dolly. You're going to say it's going to track her. You're going to go, you know, you're going to go in, then you're going to go out. This is what it's got to feel like a certain, like this feels
just
very homey.
I guess
but
my point
yes,
is,
you
like,
can make it feel like whatever you want it to feel.
It just, I guess my point is, you can't believe anything you see anymore.
Yeah.
Based on how good this is, I don't believe anything you hear, and now don't believe anything you see.
Unfortunately, that's where this is all headed in some degree.
All right, in the meantime, Reuters is reporting that Boeing has restarted production of its 737 MAX jet in recent days. The best-selling product for the aerospace giant is seen as a critical component in its financial recovery. The restart comes about a month after the end of a strike by 33,000 workers, and if you're wondering, Boeing shares now trading around 157.62. Year to date, that's down by about 40%. When we come back, key inflation data is due this week. We're going to get you ready for the CPI report. That's the consumer inflation report, and the potential impact on the Fed's next move. We'll have that story next. Again, the futures basically flat this morning. NASDAQ's indicated up by about 22 points. S&P futures are up by 5. The Dow futures down by 3. Later this morning, we have an exit interview with one of the top officials in the DOJ's antitrust division. Jonathan Cantor will join us in a Squawk Box exclusive that's coming up at 8:40 a.m. Eastern Time, and Squawk Box will be right back.
cnbc.com/TV.
All right, welcome back, everybody. The main event for the markets this week is the inflation data at the consumer level. We get the CPI report for November. It's due out tomorrow morning, and it is expected to show that inflation ticked up slightly from October. You're talking up 0.3% for the estimates on this. Last month, it was 0.2%. You're also talking year over year up by 2.7% versus up by 2.6% for the previous month. For more on this right now, we want to bring in Eric Friedman. He is Chief Investment Officer of U.S. Bank Asset Management, which has nearly 496, I think it's just almost $500 billion in assets under management. And Eric, I want to welcome you here. Thank you for coming in today.
Yeah, great to be here. Absolutely.
So you do have a lot of money that you're managing.
We're happy to round up to 500. It depends on the day. But yeah, I would say it's a great client base, ultra high net worth, institutional, and also mass retail. So it's we see a lot of slices of life, and it's certainly fun to work with that many different client types.
What's the biggest concern you hear from your clients at this point?
And number one is inflation. I think that people are consistently saying, look, this is an environment where, as we kind of look at the sort of tail end of this year and into the start of next year, will we be able to sustain interest rates really below that magical 5% number? That's for the 10-year Treasury. Seems to be where the good thing has happened for capital markets. So we think that, again, still that risk-on perspective across a lot of different asset classes works. Inflation that pushes above, that 2.5% to 3% sustained level, that could be the elevated level, if you will. It keeps the interest rate bond vigilantes really still in play, and that push towards 5% could be more of a challenge for markets.
If your clients are worried about inflation, then they have to be worried about outpacing that inflation in their investments. What do you tell them?
Yeah, Becky, it's one of those things where it's been stubborn to get people out of cash. You've had this almost nostalgic view of cash above 4.5%. That's sort of been a level that people have really anchored on, if you will. So we've been emphasizing a variety of different things. Again, everything from dividend-paying stocks to international equities, also a lot of private assets, which we think makes sense, but even things that aren't so expensive that don't necessarily roll off the tongue. So things like structured credit, which does provide a pretty solid total yield that isn't just susceptible to interest rate risk. Those are things that we really entice people to move out of cash into more productive assets.
That's an interesting point, though. All this cash that's sitting there waiting on the sidelines, part of that is people have been waiting for a pullback that they haven't gotten.
Yeah, it's been this sort of, the waiting for Godot, and Godot never shows up. And I think that, there are a couple of catalysts out there. Again, there's CPI data. We're in this lull period where we don't have a lot of corporate earnings. We're sort of waiting for more concrete policies from the new administration. So there may be some opportunities, some pockets to pick up. Clearly, in anything that hasn't been dollar related, you've had lots of pullbacks. So the things that really haven't worked include, international equities, especially the European side. So for those that are looking for more of a valuation play, that's starting to become more interesting, but probably a little brave to step in before a lot of tariff releases emerge.
And that's what people say. Look, we have run so far over the last couple of years. Markets are up substantially. The PE ratio has gone up substantially on all of these things. And we're getting a lot of what you might anticipate coming from this new administration came from Election Day on. So you're seeing a front end loading of some of these gains. And that's why people will say, maybe we want to be cautious, maybe we want to see what comes next. But if you also have all this cash that's been building up on the sidelines, I wonder if any slight pullback that begins, 2, 3, 4, 5%, gets washed out because that brings new money in too.
Yeah, I think it's a great thesis. I mean, this sort of way we've been playing it is like ex ante before the next wave of, we think, animal spirits and sort of more progressive policies come through. We've been overweight global equities, especially the U.S. There's another leg to that trade, we think. But again, nothing solves high prices like high prices, and I think that enticement of getting people in, such a continued inflow, I should say, of assets into equities, particularly U.S. equities, that train just continues to roll. So we think there's still an opportunity to again, be aggressive, but there's probably another leg that has to be proved with a little more policy certainty. That's probably a good thing for us to focus in on.
And we started this conversation, we keep saying inflation is the biggest concern. Maybe that's the thing outside of geopolitical things that we can't control, don't know anything about. But if inflation were to rise again and be stronger than anticipated, and the Fed either had to stop cutting rates or start hiking rates as a result, maybe that's the game changer.
Yeah, agreed. That would be the sort of push, if you will. We haven't had interest rates in this country above 5% in 17 years. We had one day last year for like literally a millisecond, And since then we've obviously had some rate increases, and we've obviously had a bit of a pause from the Fed. But that move below 5%, which precedes the great financial crisis, that's really has been at least correlated with higher asset prices. So that's a test the markets don't want to see. We think we're in good shape if we stay below 5%.
We used to do fine at 7 and 8% for years, and companies deployed cash and took risks, and things were allocated. It was fine, but it seems like those are a bygone era. And then I was just thinking about inflation and just how debilitating it really is. So it goes up 20% in 1 year, and you're like, oh my God, I can't afford any of this stuff. And then the next year it goes up another 3 on top of the 20. Then the next year it goes up another 3 on top of the 23. Then the next year it goes up another 3 on top of that 23. So now you're at 20. Nothing's solved.
That's right.
The rate of increase, has moderated, but you're still buying the things that you couldn't afford when it was up 20, and they're up 26.
That's right.
What it would take for deflation?
I don't want deflation, I know, but we're in this, it's things that you're still scanning those things, and you get done, and you're still like, holy crap, things are different, things cost a lot
and it's
more.
also so unevenly distributed too. If you think about the impact on the balance sheet of a lower income consumer, I mean, it is,
Think about that.
it is both in terms of shelter costs as well as food, transportation. That's 60,
Think of
70%
weekly
of it.
take home or whatever it is,
Yeah.
when you go to the supermarket, and really you spend $250, even when you're scrimping for a family of 4,
Yeah.
and you're like, wow, what do I have left?
It's a big
Yeah.
number. Yeah, and it's persistent. Absolutely. Absolutely.
Eric, thank you for coming in.
Yeah, great to be here. Thanks for having me.
Thank you.
All right.
Okay. We got a lot more coming up. The Points guy is going to join us in just a moment. Take a look at the busy holiday travel season, what trends he's expecting heading into the new year. Stay tuned. Do not go anywhere. Squawk Box coming right back. This is CNBC. Welcome back to Squawk Box. Now for a look at the state of the holiday travel season and what is ahead in 2025. I want to welcome a guy that I follow religiously on social media and on everything. The Points Guy founder, Brian Kelly, is here today. They're unveiling the 2024 TPG Awards, highlighting the best companies in every phase of travel, from airlines to hotels and more. It's nice to see you, sir.
Thanks for having me.
Okay, so let's go through the list. What's at the top of the list? Who's the best?
So this year we did data surveys, and we had our editorial staff. We didn't want to just do popularity contests because we wanted to actually highlight the best brands in travel. And I would say the best airline loyalty program went to American Airlines.
Okay.
Because their miles are actually still really, really valuable.
Right.
60,000 miles on American, you can fly business class to Japan.
Wow.
70,000 miles, you want to go to Asia or the Maldives on Qatar Airways. So American.
Are you kidding?
Yeah, so people always equate the airline,
That's
you know,
way better.
well, I don't like American as much to fly on. We want to tell people it's not about the flying on that airline, their loyalty.
So we're not talking about the product,
The product,
per se.
that's
Is it
not
harder
it.
to get the miles?
No, so American miles are a little bit harder to get. I think that's why
Okay,
they're
that's
so much
why.
more
That
valuable.
makes sense.
And they're harder to get because what? And
Wait,
what?
Because you can't transfer in from all the major loyalty
Right.
programs.
So
You have
what credit
cards.
card can you use at all, if at all,
So
to attach to
The
this?
best premium credit card that won this year is a Capital One Venture X. So
Okay.
a lot of these credit cards are now, Amex Platinum is now $695. The Venture X is $395, and they give you $300 a year towards travel. And you get into Capital One lounges with guests still. So what we've seen in the lounge space is the airlines have really cut back. You have to spend $75,000 on Delta cards to get in.
Right.
Capital One, their lounges, they only have 3 right now. There's more coming out, but they're beautiful. And frankly,
Where
that
are
card's
they?
really only $95.
Yeah, where are they though?
They have
Road Warriors out there.
Dallas and Denver, Dulles, and opening up soon in JFK. But they're beautiful. They have Peloton bikes.
Okay, who else is on your list?
So best all-around credit card for the intro is Chase Sapphire Preferred, which wins year over year, really flexible. No annual fee is the Bilt card, because you can still, from a consumer perspective, earn points on rent, which is most people's largest expense, at no fee.
Built has come on strong. We had that. We had.
I saw that interview, yeah, and from the business side, from the consumer side, it's a slam dunk.
You're right.
No fees, so I tell people keep taking advantage of that.
That Bilt card.
If
No, I
you
see
pay
you
rent-
online talking about the Bilt card.
Yeah, so that's a no-brainer, and best business class internationally, Qatar Airways Q Suites, which is a perennial winner.
You're saying that for the product, it's
for the
best?
product itself in business class.
What's the best domestic airline in your mind, taking the points piece off the game?
Well, so for economy, it's JetBlue.
Okay.
Even though JetBlue has some operational problems. But I think our message with the TPG Awards this year, we hit 2 days in 2024 with over 3 million passengers. Travel's going to be up next year. There are production delays with Boeing. Like, there's a lot of pressure. Even with Spirit being in bankruptcy, there is pressure. If Spirit's going to come out smaller, airfares are going to go up, so consumers need to be savvier than ever with loyalty and credit cards, and there still are a lot of valuable cards out there for consumers. So I think the message of this awards is don't give up on the points world. In the US, it is still so incredibly lucrative. Ask your friends in Europe. They don't have all these points
Is there
options.
ever an advantage, ever? So normally, if you're trying to take advantage, I know all the tips you've been telling me. You take all the points that are on your credit card, you transfer it to the airline. You don't ever let American Express try to.
Yes.
Never try to book it through Amex or try to book it through the Chase Sapphire card itself, because you just
transferring points is where you get all the value.
Right. So, but every time I do that,
Yeah.
sometimes you check to see if there's availability.
Yeah.
And then you have to go transfer it. And I'm always scared for this 5-minute window.
Yeah.
Because also you don't know how quickly. Sometimes they say it could take 24 hours for the
It could,
points
and
to
once-
get transferred.
usually
and then you're
yeah.
sitting there going, oh my god.
Yeah. Well,
This is not
do you
gonna
use Point.me? So point.me/Amex. It's a free tool that'll actually show you live availability. I always recommend using that.
Point.me. This is news you can use.
Point.me/Amex. It's free for Amex users. It's actually built into Bilt as well. It's like $100 a year for $129, I think, for everyone else. But whether you have Chase or Amex, Citi, Cap One, it'll actually show you live availability.
Okay.
So you may, and what happens, Amex people will transfer to Delta, but it may be 400,000 miles for a flight. If you transferred it to Virgin or their partner Air
Right.
France, it's as low as 50,000. So
okay.
always check Point.me before transferring these huge sums. because there might be a much better transfer partner.
Is there ever going to be, or maybe this the airlines don't want to have it, a market for these points?
Well, we'd love to see a Google Flights for
Right.
awards.
Yes.
But the airlines, look, they want you going into their ecosystem.
Right.
Point Me is the closest thing to that. It's actually supported by the airlines. There are a bunch of other apps that are kind of cat and mouse. The airlines sue them. You know, loyalty is big business for these airlines. They're now making more money, you know, via
Right.
loyalty than flying planes. So
Okay, final question. Do you have any idea how the stowaway made it to Paris? I mean, I've read all the stories.
This isn't a first-time incident. This happens quite a bit.
Really?
Yeah, this is, you know, people slip through. It's human error, you know.
But they did have to go through security. That made me feel marginally better, like the actual security.
Yeah.
People don't dodge the security part.
Um,
But then they just get on the. That to me is the.
it's
How do
crazy, but
get
if
through
you look it up,
security
it
without a
happens
flight, without a ticket.
because they like snuck in. You
Into the
know, the
line.
gate area is always crazy.
Right.
One
They
person.
did make it through the gate. I mean, they did have to go through
But
the.
when you go through security, like,
Usually
you're
they
supposed
have
to
two
have-
tickets.
You're
You
supposed to have a
would think
ticket.
so, and this is why I'm a believer. Like, we need more biometrics at all points in airports. Like, the government already has our information. Like, there's no reason why, you know, we shouldn't have more technology verifying
Right.
facial recognition.
Where are you on Clear these days? How do you feel about it?
Clear's, it's challenging. I'm still a member, but it's not a slam dunk everywhere you go. I know a lot of people are sort of, you know, not happy that they have all these secondary checks. I know.
I have it, but it's more. I use it almost as like an insurance policy.
Yeah, I mean, it's good to have. If you ever lose your ID, Clear will get you through.
Right.
It's also at a lot of different sporting events and
Yep.
venues. So depending where you're based, I think it can still save time for the cost that it is.
Ryan, thank you for coming in.
Thanks for having me.
Appreciate it.
All right, when we come back, CNBC is heading west for the third installment of Cities of Success. We'll bring you a sneak peek of the showcase straight ahead. Right now, though, as we head to a break, let's take a look at yesterday's S&P 500 winners and losers. We'll be right back. Oh, Hershey, we got to talk about that too.
squawkbox.com/TV.
Good morning, welcome back to Squawk Box live from the NASDAQ market site in Times Square. Things didn't end well yesterday, but so far this morning kind of quiet. You can see the futures right there with the NASDAQ outperforming really the Dow and the S&P.
Tonight, CNBC travels to Salt Lake City, Utah for the third installment of Cities of Success. It's an hour-long primetime special showcasing American cities that have risen to prominence as business powerhouses. While women own less than 15% of local businesses there, a bold wave of female entrepreneurs are shattering barriers and reshaping the city's future. CNBC's Sharon Epperson has a preview.
When Tessa Arneson started her small Pilates studio in 2013, the conversations her mostly female clients had between workouts sparked an idea.
People would come up during and after class and say, hey, where did you get your brows done? Hey, my knee hurts. Any doctors you can recommend? We just started thinking about what would happen if we put like-minded businesses together and created this ecosystem.
The vision? A community of businesses supporting each other and growing together. 4 years later, Arneson partnered with Rocky Donati, who she met at Pilates. Together, the duo worked to make that dream a reality.
I was into it from the beginning. I could see the vision.
Over time, they invested in 10 buildings, 6 of them clustered around a single city block, in a business district now called Maven.
A lot of women-owned businesses are attracted to this concept of this ecosystem and being part of something better.
Along with Pilates, there's now a co-working space, boutique hotel, and more than 130 commercial tenants. 85% of those businesses are owned by women.
For that story and much more, make sure to catch Cities of Success Salt Lake City. That is tonight at 10 p.m. Eastern Time, right here on CNBC.
Coming up, more on the arrest of the suspected killer of the United Healthcare CEO and what it means for security in corporate America. Squawk Box coming right back.
DC.
New York prosecutors have charged Luigi Mangione with the murder of United Healthcare CEO Brian Thompson. The 26-year-old was arrested yesterday at a McDonald's in Altoona, Pennsylvania. The situation has led companies to rethink their security protocol. Join us now, Brian Stevens, Teneo Security Risk Advisory Senior Managing Director, helping Fortune 500 companies develop security strategies, manage emergencies, and handle crisis communications. Brian, like so many things, this refocuses everyone, but I guess I'd ask you, had security gotten lax, and now it's going to swing the other way? And is it necessary? It's going to happen either way, but I'm just wondering whether this is something to start worrying about or whether it's a one-off. I mean, if you've got an individual that really was looking at Ted Kaczynski, the Unabomber, as someone that you might want to emulate, I mean, you're talking about someone with some serious issues, in my view, that you know, is going to spend the rest of his life in jail. I can't imagine that this could just happen again and again and again, could it?
Well, Joe, you're right. This is an extreme example. Thankfully, this is very rare and does not occur on a regular basis. But to your point, it's a wake-up call. I mean, unfortunately, sometimes it takes these types of horrific tragedies and unfortunately the loss of life for us to relook at how we approach these issues, for us to take a fresh approach and a fresh look at how we're protecting those high-profile leaders who are out in the public on a daily basis, who have a lot of exposure, and who represent large companies, large investors, and are oftentimes the face of a brand and subsequently the face of an issue. So it is, unfortunately, a wake-up call.
It's so many different things swirling around when I think about things like that. Basically, if you have someone willing to spend the rest of their life in prison, it's almost like you can't, I don't think you can really necessarily prevent this from happening.
Well, it's certainly challenging when you have someone that is willing to make the ultimate sacrifice to carry out this type of attack and to carry out this type of violence. It becomes very, very difficult. So I think that really places the importance on these programs to be intelligence-driven and prevention-focused, really assessing every risk and every threat that comes in to a corporation, taking those seriously, and taking the time to assess those types of threats and the likelihood of them being able to be carried out, and then subsequently putting the appropriate protection measures around those high-profile senior leaders and CEOs.
Are there a ranking of, I mean, would you try to figure out which industries or which subgroups of the American economy that would be, I don't know, more vulnerable, or I don't know, a bigger target? I guess this was maybe an easy one, you know, health insurance, but there's probably 10 other ones I could come up with.
Well, you're right, Joe. So certainly healthcare is one that is highly emotional and highly personal and certainly can create a wide variety of, a wide range of reactions. But that can really happen in almost any industry. As you know, CEOs are now asked to take positions on political issues and social issues, which are highly polarizing. And when they do take a stance or position on those issues, it oftentimes results in the alienation of perhaps half the population that disagrees with that stance.
And then you got, politicians. We saw 2 attempts on President-elect Trump's life, and then, I mean, who was John Lennon? Anyone who's a celebrity is at risk of someone making a name for themselves by, but if you're wacky and crazy enough, it's hard to anticipate where you need to put your resources, Brian. So what's Teneo telling people? And are there going to be enough resources to protect everyone that needs protecting?
Yeah, Joe, the challenge is greater than ever. When you think about the accessibility of CEOs, when you think about their online social media presence, the ability for a threat actor to gain significant information about those individuals, to understand where they are, what they look like, what their habits are, what their patterns are, the ability for bad actors to gather that information is greater than it has ever been. I think on the positive side, the security industry has made significant strides in being able to prevent and detect these types of threats and these issues. We've made significant strides in collecting and analyzing threats. The technology with AI and harnessing big data has really helped us to focus on the actionable threats, really identifying those credible threats, to be better at taking action against those threats proactively. But as mentioned, on the flip side, the bad actors have access to better tools, more information, more sophisticated attacks. So the challenge for security professionals and the companies they support is to really stay ahead of that.
Yeah, and at the same time that social media seems to gin things up, you could also use it maybe to anticipate someone who's got some issues that needs to be monitored closely. So maybe they cancel each other out. Brian, not something we thought we'd necessarily be talking about, but we are, and we need to do it, and it's good to have you on this morning. Thanks.
Absolutely. Thanks for having me.
Okay, you're welcome.
Okay, coming up in just a moment, Amazon bringing it into its QuickBooks software to its Seller Hub. I'm going to bring you more details on that partnership after the break. It's an interesting one. Plus, later this morning, we've got an exit interview with one of the top officials in the DOJ's antitrust division. That is Jonathan Cantor. He's going to join us in a Squawk Box exclusive. It's at 8:40 Eastern Time. You do not want to miss what he's going to have to say about what he's done over the past 4 years and what may happen and come over the next 4. Squawk Box returns after this.
$60% off.
Nude.
Welcome back to Squawk Box. Amazon's partnering with Intuit to bring the company's online accounting tools to its network of sellers. This is interesting. So starting in mid-2025, the company is adding QuickBooks as a tool on its Amazon Seller Central Hub that now third-party sellers can use to manage their businesses. So some sellers will also have access to loans through Intuit's QuickBooks Capital, which is, a way for them to be able to get access to capital. Third-party sellers make up about 60% of products that are sold on Amazon. The software integration gives the seller a real-time view of their financial health of the business, including profitability, cash flow, and tax estimates. And I think it's a welcome thing for probably a lot of folks inside or who use the Amazon platform. Having said that, it's another way to tie more of the sellers into the Amazon platform.
All right, when we come back, we're going to talk to the founder of Betweened. That's a social media app for families on how to navigate online safety for kids. That comes following Australia's ban for children under the age of 16. Right now, though, as we head to a break, check out shares of Norwegian Cruise Lines. Goldman Sachs upgrading the stock from neutral to a buy and raising its price target to $35. It's citing a strong outlook for demand in 2025. We'll be right back. Welcome back, everybody. Australia has passed legislation that would ban social media, including Facebook, Instagram, Snapchat, and X for children under the age of 16 starting next year. Some are praising that blanket ban, but others argue that online safety for kids is more nuanced and needs to be dealt as such. Joining us right now is Carla Engelbrecht. She's the founder of Between. That's a social media app for families. She previously led product innovation at Netflix. And Carla, welcome. It's really great to have you here today. Why don't you explain what Between is for those who aren't familiar?
Absolutely. So parents are navigating a minefield of dangers and risks, and also a lot of really good things that come with all of the screen time that kids can have. So Between is about providing resources for parents, whether it is toddlers first screen time or teens navigating social media, and all of the challenging uh-oh moments that happen in between, to really be their partner in digital parenting.
Yeah, it's something that I could use help with, because I think all of my kids, including the 8-year-old, are better with technology than I am. Like, I figure something out. If I'm going to be setting guardrails for them, they will probably figure out how to turn them off.
Yes, absolutely.
So what do you do? What do you tell parents? Because I understand the idea that maybe we shouldn't have this blanket situation, but it's the same thing as, you know, if you don't have laws that require kids to wear bike helmets, nobody does because it's not cool. So how do we find a moderate middle ground in terms of making sure our kids are protected online? I mean, to me, it feels like on social media, you could have anybody out there pretending to be anyone, and there are predators. There are lots of situations we can point to in this instance. We haven't figured out how to police that.
Yeah, it's a very tricky situation, because to your point, it's, you know, it's akin to if you walked into a liquor store and they said, "Are you 21?" and you were just like, "Yep," and they said, "Here's your vodka."
Right.
We're in this, you know, in the rest of the world, you have to prove you are of age in order to get access to things. And with these bans, it's interesting because it's, you know, by saying no social media for kids under 16, we're putting it on par with alcohol, with tobacco, even with you can't vote until you are of a certain age. Versus if you think about a car, to your point, bike helmets, we definitely say you can't drive until you've gotten a license and you've learned, but there's a lot of rules prior to that that doesn't stop you from engaging with a car. But there's car seats and seatbelt rules, and are you in the back seat or front seat, that allow us to scaffold your experience and keep you safe over time. I think about social media and screen time in that same way, but right now the onus is on parents to learn how to do that, which is why we do the work we do. And in doing that, it's learning things like being mindful about our screen time. So even for us as adults, same as you might go to the refrigerator, open that door and think about, am I actually hungry? It's like, why am I picking up this phone? Why am I picking up this device? What is my mindfulness of why am I using this? How do I engage thoughtfully with my kids around their screen time? So just like you read a book and you engage in stories with them and you engage in questions, how do you apply that to screen time so that you're fostering critical thinking? And then how do you use technology as a tool and help your kids support learning that? So writing online reviews together, creating a dance challenge together that gives you an opportunity to teach privacy and safety. So you're engaged with them and supporting them. I love looking even at spam. I do this with my daughter. We look at the spam messages she and I both get and talk about how do we know this is real or not? Something quite frankly we need to do with our aging parents too.
Yeah. I mean, all very smart advice and things that we need to be doing. But let's get back to the idea of regulating and whether a blanket ban should work, or maybe if it's not a blanket ban, some responsibility on the social media companies for regulating what's taking place in their marketplace. Going back to the real world examples, if this was a Chuck E. Cheese and there were, let's say, 1,000 people in the Chuck E. Cheese, if there were 3 sexual predators, that Chuck E. Cheese would probably be shut down in the real world. There's zero tolerance in the real world for allowing sexual predators to be preying on people in your business place. What's the tolerance level that we have online for these companies?
Yeah, we're allowing far more dangerous situations to occur than we would in real world. You know, even to your point, when you go to Chuck E. Cheese, you and your child need to have matching either bracelets or blacklight stamps that allow you to leave with that child. So there's a lot of things that we have not put into place, which is, you know, good friction to help keep our kids safe. And part of the challenge with these bans is that they don't have teeth to actually enforce them. And instead we should be thinking about, is it that we need to prove that you are of age and use systems that we use elsewhere of providing your license or some sort of form of ID that you are old enough to access certain kinds of features and content?
Sure.
Is it that, do we need to think about these different platforms? And if you have DMs, then you need to have X, Y, and Z features and safety requirements in place. Because right now these bans are applying to say it's, Instagram and it's TikTok, but it's not YouTube and it's not LinkedIn. And that's a very inconsistent, challenging place to be.
Sure. Meta has come out with these new tools for parents. Are they useful? Do they work?
They put the responsibility on the parents. There are definitely tools there that are helpful. The problem is without age verification, a child can still go in and now say they're 18 instead of 13 to get access to the full features. So that is really where the biggest challenge lies, is how do you confirm the age of the person who is using it? And navigating that. So right now it's on the parents to know that the kid is accessing these things, to have the relationship with their child and to have set up the conversations that they put these tools in place. And then to the point you were saying, making sure that the kids are not sidestepping these safety features and just turning them off and going on and hiding their behavior, or going to even scarier platforms that have even less sort of good interests at heart.
Carla Engelbrecht from Between. Carla, thank you.
Thank you.
It is now 7:02. Officially on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan and Becky Quick. I've got a couple of big stories this morning to tell you about. Shares of NVIDIA, they are moving lower again today. Take a look because just yesterday they dropped about 2.5%. This after China opening a probe into whether the AI chipmaker has violated the country's anti-monopoly law. NVIDIA gets about 15% of its revenue from China. Meantime, a Nevada commissioner has now rejected Rupert Murdoch's attempt to change his family's trust of his media and business operations. According to a sealed document that was obtained by the New York Times, the trust had divided control between the Murdochs' 4 oldest children, but Murdoch was seeking to give control to his eldest son, Lachlan, when he dies. And the Financial Times reporting that European regulators have now asked Google for more information about a scrapped secret advertising partnership with Meta. The FT says the agreement would have involved targeting 13 to 17-year-olds who use Alphabet's YouTube to promote Meta's Instagram. If that's not a little confusing and strange, bedfellows.
Let's do some bottoms up with Dom, but first we'll look at the futures. You can see not a whole lot happening there, but what about specific names, Dom? What's moving?
Yeah, so we'll start at the bottom of the funnel and work our way up, Joe. So starting with shares of Oracle on the tech side of things, to your point here, we're down, and we're down markedly, down by about 8% or so in the pre-market trade so far, after it posted mixed second quarter results and current quarter guidance that actually missed some estimates. Now, CEO Safra Catz did tout Oracle's cloud infrastructure revenue, which is up a whopping 52% year over year. She then said that total cloud revenue should top $25 billion for this fiscal year coming up. Today's loss is curbing some of those big gains that we've seen already in 2024, but we're still up around 66% on a year-to-date basis, a massive move higher for a mega cap tech giant. Meanwhile, on the chip side of things, Taiwan Semi is down right now just about 1% after reporting November sales of $8.5 billion, up 34% year over year. That's pretty decent. It's around, though, 12% lower than it was from its October sales figure. Now, the U.S. has recently limited Taiwan Semi from selling chips to China, citing security concerns. That stock is still up around 90% on a year-to-date basis, so a big move. And then Apple and Dell in focus as well, moving at least in marginally different directions. Apple up, and then Dell Technologies down just about 0.5%. Both of those stocks were named top picks for 2025 over at Citigroup. Citi is bullish on Apple's iPhone refresh cycles as the tech giant continues to integrate AI services into its devices. They're also seeing opportunity in Dell's customer base and demand for commercial PCs continuing as companies replace some of their older tech devices, so keep an eye on both of those names. Now, for more on that and other top stories of the day and analyst calls, head over to cnbc.com/pro. Subscribers, of course, can get more access to the detail and analysis behind those big calls of the day, Joe. There's your funnel from the top or the bottom.
There you go.
I'll set things up.
Let's go the other way next time we see you. We'll see you in a couple of, in an hour or so.
Top down, you got it.
Good. All right. Thanks, Tom.
You got it.
New York prosecutors have charged Luigi Mangione with the murder of United Healthcare CEO Brian Thompson. He was arrested yesterday at a McDonald's in Altoona, Pennsylvania, after a worker there told police he was acting suspiciously. Mangione has been charged with second-degree murder, criminal possession of a loaded firearm, possession of a silencer, and possession of a forged instrument. Mangione is 26 years old. He graduated from the University of Pennsylvania in 2020. He was carrying a handwritten manifesto that referenced the healthcare industry, and we are learning more and more details on this as we go. When we come back, turning office space into residential space. The CEO of Dune Real Estate Partners is here to talk about their $1 billion venture to convert buildings nationwide. And later, how the rebels captured Damascus and what is next for Syria. Squawk Box will be right back.
Markets are gearing up for the November CPI, due out tomorrow morning at 8:30 a.m. Eastern. Let's bring in Shannon Sakosha, Chief Investment Officer of Neuberger Berman Private Wealth, as well as a CNBC contributor. Shannon, I think you're starting to echo what we've heard from some other guests recently, that maybe the leadership is going to change, or at least that the big tech Mag 7 are extended, and maybe that we shouldn't expect that to be the market mover next year.
Yeah, Joe, this has been our call for much of this year. Obviously, we were a little bit early in the first half in making this call. However, if you think about just the compression that we anticipate in earnings for the Mag 7, that is going to create some vulnerability for those valuations. It's not that they don't have strong balance sheets, it's not that they're going to continue to grow, and it's not that the spending that they're doing won't necessarily equate to growth in the future. However, if you look at the rest of the large cap universe and then dip down into small and mid caps here in the US as well, those earnings are expected to accelerate. Double digits for small caps next year. And so we just think that there's going to continue to be this rotation from a broadening out perspective. We also think that there's going to continue to be a thrust of cyclicality in the market, and those sort of lend to looking outside of large cap technology for exposure to that particular theme.
You like some of the policies, I think. Usually deregulation and business-friendly policies, there's some positive things I like, but we are talking about overall PEs at historically the high end of what we usually see. Maybe rates come down, I don't know, maybe the Fed continues, but a multiple expansion doesn't seem like it's likely.
Yeah, and you've really seen, obviously, we've seen on the large cap side, Joe, you've seen the S&P 500 driven by both earnings growth and multiple expansion over the last 12 months or so. I do expect that, from our research that we're doing at Neuberger Berman, we are looking at the possibility of, lower rates, lower costs, kind of this disinflationary trend, certainly creating some lift on the bottom line. But really, it's on the top line. We anticipate that 2025 will be a year of above trend growth for the U.S. economy. And so if you think about the best driver, it's, sort of nominal sales growth. And we saw that during the inflationary period. And we think that we're setting ourselves up for, some continued earnings growth and improved earnings growth as a result of that nominal growth at the top line. That's where we see potentially some of these stocks growing into their valuations versus anticipating this seismic shift of multiple expansion that's going to drive the markets higher.
But you think non-U.S. markets are even more attractive at this point? Why is that if we continue to outperform as an economy?
Well, actually, how we think about it is really in terms of two halves in 2025. We do think that just obviously from a valuation perspective, valuations outside of the U.S. are much more attractive than U.S. stocks. However, they don't have the clear catalyst that we have in terms of concerted industrial policy, a stronger foundation upon which to jump off of. So what we see is actually a little bit of bifurcation. If you look in the second half of the year, for instance, for Europe, you could see lower energy prices based on, in part, some of what the Trump administration is focused on. You could also see potentially resolution in Ukraine, and then lower rates. The European economy, for instance, much more interest rate sensitive in this last cycle than what we saw here in the U.S. And so there are some catalysts potentially to justify investing in these more attractive valuations. We do see them in the second half of the year. The last thing I would add, Joe, look at China. Think about some of the comments coming out of the Politburo this weekend. If we see, focus on what they're calling kind of vigorous support of consumption, that could also be a catalyst for China in the second half of the year.
The industrial policy, you've mentioned that a couple times and in the notes as well. I guess it depends on what you're talking about. A lot of things can qualify as industrial policy. In the Trump administration, which aspects are you talking about? I mean, I understand industrial policy, when there's, for the last 4 years, but what about for the next 4 years? Where?
Well, technically, Joe, unless you anticipate, which we don't, a full repeal of the highway bill, the Inflation Reduction Act, and the CHIPS Act, we don't actually expect full repeal. And even for the IRA, we don't expect there to be, we expect there to be large parts of that legislation that remain intact. Much of that money is unspent, and it's really targeted towards areas and constituencies that can meaningfully benefit. The other part of industrial policy is if you think about this continued emphasis on the protection from either from a national security perspective or just from a business perspective of U.S. industry, this idea that we're going to see continued reshoring that's going to be supported or perhaps catalyzed by the Trump administration trade policy, that also lends itself into our view that, the first part, the post-pandemic stimulus was really focused on the consumer. We think some of the legislation that's been put into place over the last couple of years that has longer tails is more focused on industrial revolution of, kind of policy spend. And so our view is that that's going to help support the manufacturing economy in the U.S., but also some of this more cyclical move on the equity side.
Great. Okay, Shannon. Thank you. See, I like that tree. Is that real? The tree, is it real?
It's this one is not real, but I do have a real one in the back room.
Okay. One of each. The key thing there is.
Hold on, that one's
two trees.
You're saying that one's not real? That looks great.
This one is not real.
Does look great. How about the plants on the right? On our right.
Those are definitely real. They take up a lot of time.
Hold on, is the background real or not?
Yeah, that's real, right?
That's a real background. It's not like
Yeah.
Reach back. Let's
This is
no, we're talking about by the way, you
She'd be
used this
totally
earlier.
lying about everything.
Well, no, because we were talking about AI during the last commercial break.
Yeah.
And sometimes these backgrounds now that people have are amazing.
Well, that one's real.
That's
Anyway,
real.
okay, great. Thank you.
Up next, empty office buildings are getting a second act. We're going to take a look at the business of apartment conversions across the country. Squawk Box will be right back.
NBC.
Welcome back to Squawk Box. Empty office space getting a makeover in an emerging housing trend. Two real estate partners and developer, TF Cornerstone, announcing $1 billion venture to convert offices into residential properties in cities across the country. Joining us right now is Dan Nanick. He's Dune Real Estate Partners CEO. Good morning to you.
Hi.
This has been something people have been talking about doing for a long time, but there has been a question about how easy or hard it is to actually execute.
Right. You know, first of all, I don't think people understand how much has already happened. You know, I think CBRE did an article where they said 50,000 units have been converted since 2000 or something like that. So, you know, I think that when I talk to people, the thing that I'm most surprised at is how little they understand what's happening right now. So just in New York City alone, and I think, you know, New York is probably the poster child for this opportunity and, and a great place to have it done. And, you know, there's been a lot of that done over the years, but right now in New York City alone, there's 18 million square feet of offices that are in some stage of conversion. So I think that the question of, is this an opportunity that is going to happen, we're kind of past that.
So the question is, but has the opportunity already gone past us? And the separate question is these sort of B and C buildings, right? B and C office buildings that people are thinking about converting. There's been a question as to whether they really can be converted insofar as given where the elevator locations are, given where the water is, given how much light or lack of light there is in the internals of the building and sort of how it was structured, how easy or hard it is to actually make this even happen.
Sure.
There are a lot of people who say all the buildings that can be done are being done, and all the others, you can't really do it.
Yeah. We just don't see that. I mean, both in New York and throughout the country, we see almost kind of like a fire hose of opportunities. And so, you know, in New York, I mean, part of this obviously is when do the banks decide that they want to exit a loan? Because understand, this whole opportunity is really about the banks because the equity's gone. If there's a mezz loan, that's gone. And so you're really, your counterparty in all these deals are the banks.
So
and the
all
banks,
of these are distressed deals for you?
Every deal, every office, every B and C, I mean, to say that every B and C office is distressed, you know, it's a little bit of an overstatement, but there's a lot, in our world, or as we look at the opportunity, there's somewhat of an unlimited opportunity of distressed B and C office. People, whether it's work from home or it's companies having to create A or A+ space in order to attract employees to come back to the office, the B and C model just doesn't work, or at least from our standpoint, we would not invest in a B or C office building today with the bet that there'd be an office recovery. So you're really kind of dealing with kind of a massive market.
But you mentioned that it takes the banks deciding that they still want to be in this.
Right.
It probably also takes, I know here in New York, they've had a lot of talks trying to get the government to step in and offer incentives to make this more palatable. What is the cost of doing this, and what does it take from a public-private partnership?
First of all, understand that 467M was passed by the New York State Legislature. So any conversion, so conversions basically of a certain age get 30-year or 35-year tax abatement. So that's already happened. And the government in Albany passed that, which shows the way governments are thinking about these opportunities. And it's not just, and it's just not tax abatement, though tax abatement makes a big difference, but it's also how they think about entitlements. You know, there are cities that have historically been very difficult on development, and yet they're dying to have you convert their office buildings.
Right, because there's a huge need for additional housing.
Huge
It's just
need.
the way to get at that. What are the economics of it from your perspective?
Basically, we think we're at a significant discount to new construction.
Yeah.
And, you know, and different people have different arithmetic. Understand, this is all about the basis that you buy the building.
Yeah,
And
not just the idea of getting you in. This is faster way to get in housing, I think, too, than to tear down.
It's probably a year. It's probably, don't forget, what you're getting is your infrastructure and your foundations. And sometimes infrastructure and foundation can be problematic and can add time to your development process. So one, you've saved that part of the construction process. Also, you've probably saved significantly on the entitlement process. So time, which is a huge cost in development, of any kind of development, is a tremendous advantage for a conversion.
So what are the economics for you?
So, I think basically we think we're getting effectively new residential at about an 80% of replacement cost, which
It's a pretty great deal.
is pretty compelling. But also, don't forget, you're getting, in many cases, if you think about and we've done a number of these even before this strategy, and you have to understand that because you're getting this space so cheaply, you can actually create better spaces than maybe you'd have created at new construction. So for instance, you're getting, a normal office building has a 12 or 13 foot slab to slab ceiling.
Right.
Residential is kind of 8.5. I mean, certainly multifamily. So you're getting higher ceilings, you're getting better windows. You may be getting buildings that have, tremendous character to them.
What percent of these buildings, and this is going back to maybe the beginning.
Basis.
No. What percent can't be done? Meaning, what are the ones where? How often you walk into a building and you say, you know what, this is just too much.
Life's too short.
Life's too short. The expense is too high to actually move all this stuff around. It's just not going to work.
Right. I think the simple answer to your question is, at a certain basis,
Everything's possible.
if you want to do the work, because a lot of this is sort of the difficulty of execution, the amount of resources you're going to have to spend, the amount of risk you're going to take. So when I talk about like the 18 million square feet that we're looking at right now, none of those require you to, let's say, cut a hole in the building, which is probably, at the extreme of level of difficulty.
That's the most expensive thing, to cut a hole.
That's the most expensive. And again, they're being done because if you get the basis cheap enough, understand there is no other choice for these buildings. I mean,
otherwise you're going to get knocked down.
And they're not going to get knocked down for lots of different reasons, not the least of which is there's a huge difference in the degree of knocking down a building and then building new and then going through the entitlement process. Nothing's easy. So everything's relative, and the conversion process is the most effective way of doing it.
Dan, thank you for coming in this morning. It's fascinating. Wish you a lot of luck. We'll look to follow your progress.
Thanks for having us.
Thank you.
All right, coming up, new data on the state of the consumer, plus the balance of power in the Middle East shifting after the toppling of the Assad regime in Syria. Squawk Box coming right back.
All right, get ready to get hungry and get a little grossed out about why you're hungry. America runs on Dunkin' deodorant. The coffee chain is teaming up with Native on a limited edition of deodorants, shampoos, conditioners, and other body care products. There are 4 scents that are going to be available: strawberry frosted, vanilla sprinkle, blueberry cobbler, and Boston cream. They range from $10 to $14 and can be bought at some retail stores like Walmart, as well as through Native's website. You smell so good, I want to eat your armpit.
That's the combination of like oniony like BO with one of those things you just described.
Strawberry frosted.
Is so disgusting. I mean, I thought this would be good for you, a donut smelling deodorant, although you like just glazed.
Just glazed donuts.
But you know what I mean? It's important you consider your deodorant scent with the mixture of what's...
How about you just take a shower before you put it on?
That's a good idea. But there are people, and especially a lot of young people, who think that showering is bad.
So it's also young people are more pungent.
Well, but they're constantly using deodorant as a shower substitute.
Isn't that
what are you talking about?
Lots of young people. Lots of young people think
Are you talking about, where are you hanging out besides the gym?
Oh, lots of young people think that it's bad to use soap or
We will continue this
deodorant.
conversation during the commercial break. I don't know. When we come back,
Are you going to buy deodorant that smells like a blueberry scone?
No.
It's not on my bingo card. Coming up, a read on the consumer as we head into the final weeks of the holiday shopping season. And then later, you don't want to miss this, DOJ Assistant Attorney General for the Antitrust Division, Jonathan Cantor, is going to join us for an exclusive exit interview. We're coming right back.
DC.
All right, right, some new data on the state of the consumer during the holiday shopping season. Steve Leisman joins us right now. He's got the latest CNBC NRF retail monitor. Hey, Steve.
Good morning, Becky. I need you to work with me on this because the CNBC NRF retail monitor shows weak gains month to month in November that could still mean solid consumer spending because of the quirk in the calendar, and I'll try to walk you through this. We use real credit card data from Affinity Solutions. The monitor shows sales rose just 0.2% month on month ex auto and gas. That's down from a 0.7 rise or a strong one in October. The big October number suggested an early and strong start to the holiday shopping season. But year-over-year gains were a healthier 2.4% in November compared to 4.1 in October. We see the same pattern when we look at core retail. It removes restaurants, down 0.2 month on month, but up 1.4% year over year. Why does that suggest strength? Well, because Thanksgiving this year fell on the latest possible day of the year, the 28th, pushing half of the Black Friday weekend into December. Last year, all 4 days from Black Friday through Cyber Monday were in November. So November this year, hey, pretty good, even when missing 2 major holiday shopping days. Take a look here at some of the details. Non-store retail or digital sales up 21.5% year over year. Restaurants and bars up 7.3%. Clothing and accessories up 4%. General merchandise not doing too badly, up 2%. Where the weakness was year over year was electronic and appliances, and sporting goods, hobby, and bookstores both down north of 7%. Overall, 7 of our 12 categories were up year over year. This holiday season comes with lower gas prices, down 6% in our data for gas station sales, and deflation in goods prices overall. So consumers had more discretionary dollars in their pockets and paid somewhat less compared to a year ago, which, by the way, could depress the results because of inflation or deflation in this case. You can see the early shopping season here. Look at the 4.1% gain in October, that big pop right there, suggesting they brought forward that the shopping season into October. And again, there's November holding its own with a 2.4% gain year over year. So now we'll have to wait for December data, as we do every year, to know just how strong the season was. But the early read is that it was an early start, but November held its own with a late Black Friday, Becky. That seems to be the case. And I was wondering, Becky, how far back do we go talking about this idea of pulling forward into October? It's always been the wish of retailers. It looks like this year they at least achieved it.
They did, and I thought you were going to ask how long you and I have been discussing this. We used to talk about this back in the 1990s when I was covering retail and you were covering the economy. Yeah. Look, I will posit this. I think you're right that the consumer's feeling strong and Black Friday showed that, but I will also say from the retailers' bottom lines, I bet they never make up for the lost 5 days, because when you have 5 extra days in the calendar, you are going to get consumers who spend more because there's just more opportunity to spend. And those last minute gifts, that they're just going to buy fewer gifts this year than they would, because we all go in with our list of what we think we're buying. The longer that you have, the more gifts you end up adding onto that. I think that's just human nature. I think the retailers know that. I think that's part of the reason that they didn't hire as much. I think that's part of the reason they didn't come in with as much inventory. But 5 days of lost sales, you're just not going to make up for that in the holiday season.
Yeah, and especially the contrast with last year. So the 23rd is the second earliest possible day. Maybe Joe understands the algorithm on this. I don't get it, because Thursday got pushed in too. It's crazy. Anyway,
Thursday, it's always that's what I was trying to figure out when you started talking about this. The fourth, it's always the fourth Thursday. So if the latest you can go is the 28th, because that's 4 full weeks to go all the way around the calendar on this. And look, I think the thing that we always try and take out of this is how strong is the economy, because that's what we really want to know. How strong is the consumer? How strong is the economy? I think you are going to have less in total sales, but I don't think it's a reflection of a weaker consumer. I think it's just a shorter calendar, and you're going to have to live with that this time around. So I think we're going to be able to take less out of this holiday season than we would.
It's shorter. I think you're absolutely right about all that. But shorter, but it can also be longer. You remember, was it a year or two ago that we saw a lot of the sales in January, that people really waited?
It's true.
And all of a sudden there was this big surge in January sales. So it's like this October to January season. We used to know, if we look at November and December, oh, we got the holiday season. I don't know if that's true anymore. They're trying to pull forward to October. Then you get the gift cards come through in January. So it's a more confusing season. If economists had their way, they'd put the Thanksgiving holiday on the same day every year so that we wouldn't have to mess around with all these seasonal adjustments. But of course, they don't get a vote. It's the Senate that apparently passed a law putting it on the fourth Thursday of November.
Well, pox on the Senate for giving us less days to prepare for the holidays.
No, it's got to be on a Thursday, Steve.
Because you need the Friday.
Well, no, because Thanksgiving's on a Thursday. You got Detroit play, a couple of.
No, it's because the Lions are playing. That's
yeah,
why.
you got to have it on a Thursday.
It's got to
Can you
coincide
imagine
with when the
Thanksgiving
Lions
on
game
like a
is.
Monday or something?
That would be hard. Yeah, Thursday
This
means
is-
an automatic
I would
4-day
adjust,
holiday for
Joe.
most people.
Don't mess with this. If you're gonna change some other thing, don't mess with that. I don't think.
Steve, thank you.
No, but it's got to be
given
the
us a
same
lot to think
calendar
about.
day.
Yeah, the 23rd.
The
but
same
then if it was
calendar
Monday, Joe's
day.
right. What if it's a Wednesday?
Christmas we get by, I guess. It's on a different. Up next, what Salt Lake City brings to the table when it comes to the nation's economy. We'll have a preview of tonight's Cities of Success, airing right here on CNBC. We're coming right back.
Welcome back to Squawk Box. Tonight, CNBC airs its third installment of Cities of Success. It's a primetime special that focuses on Salt Lake City's extraordinary economic growth in sports, in tech, finance, and real estate. Nearly 25 years ago, Goldman Sachs opened its first Salt Lake City office, and What began as a small operation has now grown into the firm's third largest location in the United States. But what is driving this Wall Street titan to invest in Salt Lake? Well, tonight, Carl Quintanilla is going to reveal the answer. Here's a sneak peek of Carl's conversation with Goldman Sachs' president and COO, John Waldron.
Would you argue it's been a surprise, the way it's worked out?
I would argue it's gotten much bigger, much more successful than anybody would have envisioned in the year 2000.
Challenges?
I would say challenges are, we got there early, we did very well, other people have followed. So it's competitive. So we're seeing more companies that are building bigger presence in the state of Utah, largely in Salt Lake. So the talent market is more competitive. Wages are definitely going up. That's a good thing for the state of Utah and for the residents of Utah. For employers, that's a more challenging marketplace.
You do raise an interesting point in that if you find a sweet spot in the country in which to do some of your business, do you keep it to yourself?
Unfortunately, nothing Goldman Sachs does gets kept to itself.
Right.
I don't want to overstate it, but our success clearly has given other companies confidence that this is a marketplace that they ought to be spending more time in. I think you're seeing more companies broadly, which is good for the state of Utah, and ultimately it's good for the ecosystem.
Be sure to catch Cities of Success Salt Lake City tonight, 10 p.m. Eastern Time, right here on CNBC. And no mention, unfortunately, of those beautiful mountains behind you, which is why so many folks go out there. Because skiing on the weekend,
it's a half
just being
hour
able
from the airport.
to drive to Park City or
Right.
Deer Valley or Alta, the greatest mountain in the country.
Like a half hour.
It's a remarkable thing.
Instead of going over Loveland Pass, where your life passes before your eyes if the tunnel's closed, the eyes are not. Coming up, how the rebels captured Damascus and what's next for Syria. Here are the futures this morning. You can see that they've improved a little bit. Here are the futures. There they are, at least on the NASDAQ. We'll be right back.
Inside Wealth.
following the collapse of the Assad regime in Syria, the power balance in the Middle East has shifted. Joining us right now with what President-elect Trump's strategy will be navigating these new dynamics is Carnegie Endowment Middle East Program Senior Fellow Kareem Sajapour. Kareem, this is completely uncharted territory, and there's a lot of things that are happening and spinning. You know this area so well. Tell us what you think is happening and where we're going to be headed over the next 6 months to a year.
Well, Becky, this is a hugely significant moment that after 50 some years of being in power, the Assad regime in Syria melted away before our eyes. And it does potentially enormously change the balance of power in the Middle East, and that for many years, Iran has been the region's most powerful actor in that it dominates 5 failing states: Syria, Lebanon, Iraq, Yemen, and Gaza in the Palestinian territories. Now Iran has been dealt some pretty significant blows. They've lost Syria. Lebanese Hezbollah, the crown jewel of the Iranian Revolution, has been decimated by Israel. And now Turkey is emerging as a real regional power. So this is a potentially very significant moment in the modern history of the Middle East.
And what are the potential, leadership things that come into this vacuum at this point? What are the potential outcomes? Are they good?
So the emerging leader of Syria, one of the important emerging leaders, is this gentleman, Mr. Jolani. And he doesn't have a background which inspires much confidence in that he has a background associated with Al-Qaeda, with ISIS. But up until now, he's been pretty pragmatic. He doesn't talk about radicalism. He talks about reconciliation. He talks about reconstruction. And so I asked my reporter friends who are on the ground in Syria, if they get a chance to interview him, to ask him a simple question, which is, what country does he most hope to emulate? What is his ideal vision for Syria? Because just in terms of ideology, his background is similar to someone who has a background like the Taliban. But when he talks about his vision, it's something more akin to the United Arab Emirates in Dubai. And the reality is that if his goal is really to rebuild Syria, a country has been decimated, the only way he's going to get foreign investment from Europe and the very wealthy Gulf Arab countries is if he charts a path which is focused on tolerance and pragmatism, not Islamist ideology.
Jolani is somebody, though, who has a U.S. bounty on his head. I've heard him described as being very sophisticated, though. How would you advise the incoming Trump administration to deal with him?
He's not the only player in Syria. And as we've seen over the last couple of days, millions of displaced Syrians in neighboring countries are now pouring back into the country. Mm-hmm. I think for the United States, whether it's the Biden administration or the Trump administration, there's no longer a will in America to try to transform the Middle East into liberal democracy. But there are some important U.S. national security interests. One is keeping ISIS at bay, and there are 900 U.S. troops still in Syria to help keep ISIS at bay. And you also want to obviously contain any chemical weapons the Assad regime has. And you want to prevent Syria from devolving into another failed state, which explodes into more global refugees. So I would say best case outcome in Syria could be something along the lines of Turkey, but the worst case could be very bad, whether it's a Taliban-style government or even a failed state and the resurgence of ISIS.
Kareem, having outside investment and sort of coming into the 21st century, maybe we don't have, maybe we don't get a kind of democracy that we're a Western style democracy, but just bringing in investment and doing things for the Syrian people to raise the quality of life. Is there an individual that would step forward and really want that to happen, or do we get another person that wants palaces and Ferraris and Maseratis and doesn't, that absolute power corrupts absolutely. It seems like. But every once in a while, historically, someone steps up and looks around and says, I love my people and I want what's best for them. Is there any possibility that happens?
It's a great question. I'm always reminded of an observation that Henry Kissinger made. He said that before he went into government, when he was a professor at Harvard, he thought that the individual didn't really matter that much in history because nation states follow their own natural interests regardless of who's in power. And he said that after he served in government, he reached the exact opposite conclusion, which is that actually individuals shape history and individuals have a most profound impact on history. And so sometimes we see people emerge who are able to become great leaders, putting the national interests and countries' economic interests before any kinds of ideology. So far, it's very early days in Syria. We haven't seen that, but God knows this is a country which has experienced one of the most brutal dictatorships and one of the most brutal civil wars of the last half century. And the Syrian people are certainly yearning for someone who wants to rebuild the country and be tolerant, not another brutal dictator or another Islamist commander.
Kareem, when you say someone who would, when you are looking for investments to come into this, you're talking about investments from other countries, not from businesses. I mean, the things are too unstable on the ground right now, I think, to have any businesses that are going to come in and invest at this point.
Yeah, absolutely. I'm talking about countries like Saudi Arabia, Qatar, United Arab Emirates, who have obviously enormous resources when it comes to their petrodollars. And Syria has historically been one of the most important Arab countries. And so at the moment, I think that they're watching with great caution at what's happening. But they don't want to see Syria devolve into another terrible dictatorship or failed state. And frankly, U.S. leadership is going to be important here because President Trump, I remember in his first term, he said there's nothing but death and sand in Syria. And he publicly tweeted that we should stay out of it. But as I said earlier, we don't really have the luxury of staying out of it or pulling U.S. troops out of Syria. There's a real danger. Even though there's only 900 troops, there's a danger. You pull those troops out of Syria, you could see in Syria what we saw in Afghanistan after the withdrawal of U.S. troops quickly facilitated a Taliban return. So the reason I say this is that, yeah, please.
I think we're heading to the same point here, but what we have seen from this president, this incoming president, is that he does not want to be tangled up in foreign affairs with U.S. troops or with U.S. dollars. Elon Musk tweeted something yesterday talking about how the United States spends far more than the next 10 or 12 countries on investments in foreign aid. If you were talking about an incoming presidency and administration here that is looking to pare back, what does that mean for the outcome there in Syria? If there's not U.S. leadership doing these things, will the region, the countries in the region, step in and take over?
That's where I was going with this, Becky, which is that I think obviously the United States doesn't want to expend any blood or more treasure in Syria, but those Gulf Arab countries that have the resources to try to rebuild Syria, I think they're going to be taking their cues from the United States in some ways, and whether the United States encourages them or reassures them. Other country which is very key here is Turkey, one of Syria's important neighbors. It's a NATO ally, but a country which the United States has had real tension with. And I think that Turkey is going to be an important partner for the United States in any efforts in Syria. And I think that, frankly, our expectations are very low. As I said, there's no illusions anymore about America transforming any Middle Eastern Arab country into a secular democracy.
Kareem Sajapur. Kareem, thanks a lot. We appreciate it.
Thank you.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among our top stories this morning, Boeing has restarted production of its top-selling 737 MAX jet. That's according to a Reuters report. It comes about a month after the end of the 7-week strike by tens of thousands of Boeing factory workers. Boeing has more than 4,000 orders for the 737 MAX that it is working to fulfill. The Department of Commerce finalizing a more than $6 billion subsidy for memory chip maker Micron to support the construction of several U.S. computer chip plants. It's one of the biggest awards under President Biden's CHIPS and Science Act. The administration has been working to try and get that money out the door before President-elect Trump takes office. And shares of Oracle falling in the pre-market after the database giant reported fiscal second quarter results that fell below analyst estimates, and the company also issued a weaker than expected forecast. That stock had run up ahead of the earnings report. For the current quarter, Oracle is expecting about $14.3 billion in revenue. Analysts were forecasting sales of $14.65 billion. Oracle's adjusted earnings guidance also fell below expectations, and that stock is down by about 5.6%.
The Thompson man accused of shooting and killing United Healthcare CEO Brian Thompson on a New York City street last week. He's now officially been charged with murder. The 26-year-old Luigi Maggione was arrested at a McDonald's in Altoona, Pennsylvania yesterday. This after an employee called the police reporting a suspicious person. Police said they discovered that he had a gun with him, similar to the one used in Thompson's shooting, as well as a silencer and a fake ID that matched the name the suspected gunman used at a New York City hostel. Now, police didn't provide specifics about a possible motive, but an NYPD official said that he appeared to hold, quote, ill will towards corporate America. As to his background, officials at the University of Pennsylvania said that he graduated with multiple degrees from the school in 2020, where he specialized in engineering. And just as a look at his social media, there does seem to be both the sort of anti-corporate view, but then a sort of violent view about how to create a protest of sorts at some point. You can see that sort of happening even in the past couple of months in terms of the shift. And so we're going to watch this play out.
It's tragic. On so many different levels. Obviously, the first person you think about is the executive and his family. But this guy, and you see a lot on Twitter, high IQ, given gift of that, provided with best education you can get, great family, money, got all that, and that's why it makes me think there's something not quite right. You know what I mean? And I'm telling you, the walls of that cell or wherever he is going to get really old over the next 60 years, 70 years. Shares of Alaska Air taking flight. This morning, the airline just announced it's raising its fourth quarter profit forecast thanks to robust travel demand and improved pricing. Alaska now expects earnings of 40 to 50 cents a share versus 20 to 40 cents that it said previously. It's also guiding 2025 full year profit above estimates. In a statement, Alaska's CFO said the company's combination with Hawaiian Airlines will give it the scale to be stronger than either company could have been on its own. Alaska is also hosting an investor day. This morning it announced a new nonstop service to Tokyo and Seoul, South Korea, using Hawaiian Airlines wide-body aircraft.
The futures this morning, not a huge amount of activity, but the Dow futures are off by more than 50 points now. NASDAQ is up by a similar amount. The S&P futures up by about 7.5. And then if you take a look at treasuries, we're seeing slightly higher yields this morning than we were yesterday at this time. The 10-year is back above 420. It's sitting at 424. The 2-year is at 414. Let's get over to Dom Chu. He's got a look at the morning's pre-market movers. And Dom, I believe you promised us tops down this time around?
I did, but in this news magazine show of an hour that we have in the 8 o'clock, the stories that are complementary to the top stories you already gave and some of the corporate stories, and of course the United Healthcare shooting suspect and the charging there. The complementary stories that we're going to provide for you here are not necessarily top-down. So let's take a look maybe from a top-down industry standpoint at the automotive sector. Shares of Tesla and General Motors in particular moving down the funnel, as Morgan Stanley analysts named Tesla a top pick for 2025. They also upgrade General Motors to an equal weight rating from a prior underweight. Those analysts are increasing the target price of both. Tesla goes up to 400 from 310. And General Motors goes to 54 from 46. They see Tesla and GM as strong bets despite EV and China market volatility moving into 2025. So keep an eye on GM and Tesla, both those shares up fractionally in the pre-market trade. Toll Brothers is falling roughly 4% as analysts at KBW downgrade that stock to a market perform from a prior outperform following the home builder's fourth quarter earnings. KBW taking a more cautious stance on the sector even after Toll Brothers posted better than expected earnings, as higher mortgage rates continue to weigh on the sector overall. So there's your kind of top-down approach there. Toll Brothers down 3.5%. And we'll end with Norwegian shares, which are higher 3%, with Goldman Sachs upgrading the cruise line operator to a buy from a neutral. They also raised the target price to $35 from $29. They're citing stronger momentum and pricing power for cruises than analysts expect continuing into the new year. So Norwegian Cruise Line's up 2.5%. Now for more on that, other top calls of the day, head over to cnbc.com/pro. Subscribers get full access to the detail and analysis guys behind those big calls and stories. So kind of bottom up, kind of top down. Becky, I'll send things back over to you guys.
Okay, Don, thank you very much. By the way, we should point out shares of Hershey, they jumped more than 10% yesterday after reports said that Mondelez made a preliminary takeover approach. Mondelez had made a previous takeover bid for Hershey back in 2016, which the company rejected at that point. I think that bid was for about $23 billion. Hershey is a very unique company. It's been independently controlled since its founding back in 1894 by Milton Hershey. It's got a dual-class structure that gives the Hershey Trust substantial control over the company's future. Mondelez and the Hershey Trust did not immediately respond to requests for comment, but from the reports that we've been hearing, this offer started at a much higher level, I think closer to $50 billion. But again, it's the Hershey Trust, which was set up to allow that company to operate very independently, to make sure it was keeping the town in a very prosperous sort of place. Hershey, Pennsylvania is a pretty interesting place. I don't know if you guys have been out there, but the whole town is...
They've been there a long, long time.
Candy company, they've got the
amusement park.
resort, the amusement park, all the
Going
things
to
that are
where
built
the
into it.
kisses are made. And
Yeah, the whole place smells like chocolate, and the trust can do what it wants
nice
to
out
do.
there.
Willy Wonka.
People vacation there.
They do.
Yeah.
Which is like a nightmare for me.
When we come back.
Because it's all candy.
Chocolate.
How do you stop eating it, right?
That's true, too.
Vacation? Where can you go into, is there a donut land?
I don't know.
You can put deodorant on, too.
When we come back, top Apple analyst Tony Sacconaghi is going to join us to talk about the integration of ChatGPT into iPhone users' daily experience. And later this hour, Department of Justice antitrust chief Jonathan Cantor is going to join us for an exclusive exit interview as the Biden administration winds down in Washington. Stay tuned. You're watching Squawk Box, and this is CNBC.
WashboardJimAthletics.com.
Apple stock hitting new highs. The company released another beta version of ChatGPT on the iPhone. Apple says a wide release is coming by the end of the year. Joining us now, Tony Sacconaghi, Bernstein, senior research analyst. He named Apple a best idea. 3.7 trillion. 3.7 trillion. I think it's the most valuable company in the world now. Again, Tony.
Good morning, Joe. Apple's a phenomenal company. I think it's evolved from being a hardware player to a company that has an installed base of 1 billion unique users, 2.3 billion devices, and it's leveraging that installed base. And the next step in its evolution is bringing artificial intelligence to the masses through Apple Intelligence and through integration with large language models like ChatGPT. So it's a formidable company, and impressively, it's evolved to be something more than really just a purveyor of hardware products.
So this is the most recent move higher is due to what you're just talking about, ChatGPT, and rolling out another version?
I think it's difficult to know exactly why the stock has done so well over the last month. You know, we do have a release candidate for iOS 18.2. Still not the final version. We should get it this week or next week. It's not game-changing yet, but I think investors see a path where will get better over time, Apple Intelligence will get better over time, and that will be how people use AI in their everyday lives, is through the access point of the iPhone or through the access point of their Macs or iPads. You know, I think there are a lot of different factors that work near term. There's some mixed sentiment about the market. There's concerns about, you know, some questions about broader AI and sustainability of growth and infrastructure. I think there are questions around tariffs. There are questions around Google and antitrust. And many investors believe that Apple's sort of this safe haven, and they can look out over the next year or two and see a pathway for Apple. So it may be more the latter than simply this version 18.2.
And Apple, again, or at least now, topping the list of the best managed companies, according to Wall Street Journal, of 2024. And where I'm going with this is, it's been reported that quietly but very successfully, Tim Cook has developed a close relationship with President-elect Donald Trump. You mentioned two things. You mentioned tariffs and antitrust as being in the future for a lot of tech companies, and you would have to think that having a relationship with the president-elect on both those areas probably is a positive for Apple. So that's good management there.
Yes, and you know, again, kudos to Tim Cook. I think he's managed to maintain a generally friendly relationship with China, and obviously China is super important to Apple. 90% of its production is there, 20% of its sales are to the Chinese consumer. And then I think likewise, you know, Apple has successfully navigated political challenges. You know, 8 years ago when there were talks of tariffs, smartphones were supposed to be tariffed 10%, and Apple was able to effectively work with the administration to not have that tariff put in place. And so I think that's a testament to Tim Cook's diplomacy capabilities. And I do think that potentially serves Apple well. Now, there are lots of questions about tariffs. Clearly, Apple's exposed, but I think, you know, Apple is an iconic American company, and the current administration, you know, does want to promote American businesses. And so I think Apple does have some legs to stand on that hey, if you tariff us as an American company, you actually may create advantages for, Samsung, a Korean company. And so I do think that Apple has and likely will continue to underscore the importance of the company, and the fact that it is an American company, with a lot of jobs in the United States.
The new phones, so they had some AI, but we were told, don't expect much. The stock has still continued to hit new highs, even though it was kind of a bridge to where it really becomes an important feature for the phones. Are we almost there now?
I don't know if we're almost there. I think, but I think investors see a path, and so I think the bull case for year going forward is, Apple's expected to do about $7.50 this year, fiscal 25, which they're now in. Fiscal 26, which starts in the fall of next year. I think Apple could have a very strong iPhone cycle. You will have better AI capabilities. You will have a thinner iPhone that will be available, and typically form factor changes help iPhone sales. And you'll have an older installed base. And so I think you could have a very strong cycle in fiscal 26.
$9?
Well, I think, yes. I think $9 is not an unrealistic number. And Apple, typically peaks out at around 32 times earnings. It's actually a little more than that. That'd be a $290 stock. So do you run out and buy it today at 247? I'm not so sure. Maybe you'll get a pullback. This iPhone cycle won't be great. Maybe there'll be some uncertainty about either the product rollout or about some of the other issues we talked about. But I think if you look forward over the next year, it's one can make that case, and the numbers could support a materially higher stock price.
Well, we're going to have a $4 trillion company, a $5 trillion company, and I would wager we're going to have a $1 trillion individual in a decade, probably, maybe less. Don't you think? It's not going to be me. Probably not going to be you, Tony. Well, we might know them.
We might be certainly observe them. Hopefully we'll be around to see that.
Yeah, hopefully we will. All right. Thanks, Tony.
Nice to see you, Joe. Happy holidays.
Okay.
When we come back, we're going to take a look at what is likely to be a lasting impact on the entertainment industry from Taylor Swift's globe-hopping Eras tour.
Unbelievable. Unbelievable.
Plus, stay tuned later this hour for a can't-miss interview with the Biden administration's antitrust chief, Assistant Attorney General Jonathan Cantor. Squawk Box will be right back. All right, welcome back, everybody. Taylor Swift may have wrapped up her record-breaking Eras tour, but the impact on the concert and the entertainment industry is just beginning. That's according to our very own Julia Borston. She joins us right now with the first installment of Fast Forward. Good morning, Julia.
Good morning, Becky. Well, the legacy of the $2 billion Eras Tour is shaping the concert and the entertainment industry. Taylor Swift's approach of doing mini residences, shows only over the weekend in fewer cities, made more fans travel, which insiders say transformed what it meant to have the idea of a fan community. It normalized concert travel, which created a more robust fan experience, fostering dressing up in sequins and the friendship bracelet barter system. Now, following the model set by Swifties, Sabrina Carpenter concert goers are dressing up in outfits from her videos, and Billie Eilish fans are right now camping out a week ahead of her concert here in LA. This is fandom that has a massive marketing payoff. Now, concert giant Live Nation will have more larger venue concerts next year, with their total ticket sales for next year pacing up by double digits as of early November. Former Ticketmaster CEO Nathan Hubbard, who is co-host of The Ringer's Every Single Album about Swift, says her 3.5-hour-long concert dramatically raises expectations of a show, pushing artists to perform longer and to create elaborate and expensive sets like Taylor Swift's giant screens. He also forecasts that fans will flock to high-tech experiences like the Sphere in Las Vegas. And it's not just concerts. Theater chains are looking to recreate the success of Swift's concert film that was released by AMC Entertainment and grossed $261 million worldwide. And sources tell me that studio marketing chiefs are striving for the blockbuster performance that comes when fans dress up en masse as they did for Barbie and Wicked. Now, the payoff for a water cooler moment is one reason that Disney is focusing on making fewer but having bigger releases. And also, Becky, the Eras Tour shows the undeniable value of female consumers.
Yes, that is the takeaway. I gotten into this, but I didn't even consider the idea of how this has changed concerts for every artist out there, rethinking the whole way of how you do things. You know, with the industry, the media industry being so fragmented right now, does it make it harder to have a global superstar like a Taylor Swift?
I mean, it does and it doesn't. On one hand, there's an incredibly fragmented media industry and you can have artists pop up from all over the world, but because of social media, you can have a global phenomenon. One thing I was hearing from sources I was talking to yesterday is that Taylor Swift is a much bigger global phenomenon than even Madonna. She's touring in more countries than Madonna did and just having a much bigger global appeal. And that really feeds on itself once people are watching clips from her concerts from all over the world. And then, of course, you have that phenomenon of the travel. So she was definitely the biggest global star that we've seen. And I think it will definitely be hard for anyone to recreate her success, but we are going to see these artists try to take a page from her book and figure out how to learn from what was so impactful and successful for her.
She's a unicorn in about 50 different ways, literally.
Absolutely.
In her songwriting ability. Have you've seen her concerts? They're like 3 hours, right? Julie, you've been to one?
I've been to one. I went to one here in Los Angeles.
Can you imagine? Can you imagine doing 140 of those and doing one every night?
And so that was the thing. It was obviously a huge sort of a physical, experience, so hard to perform for that. But what she did by having these mini residencies is she gave herself a couple of days to rest, which allowed her to perform for 3.5 hours for 3 or 4 nights in a row. And that also allowed them to build these giant sets. I mean, if she was doing a concert for 1 night or 2 nights in many more different cities, it would not have enabled her to have such elaborate sets or for her to physically rest after that 3.5 hour performance.
I mean, they're lip syncing on the Macy's Day Parade and on on New Year's Eve. Yeah. You know, Mariah Carey can't get through one song. Without lips, she's never lip syncing, and 140 of those. And how many outfit changes in 140 performances? Thousands.
I don't have the tally, but a lot.
Thousands. I mean, she's like, it's almost like superhuman. Just doing. I don't even know why would someone would want to do it. You get to the first billion. Oh, I need another. Let's go for the second billion. That's crazy. Yeah, you got to really like what you're doing.
She loves it.
Yeah, she does.
Loves what she does.
Yeah.
Julia, thank you.
Thanks.
Okay, when we come back, breaking productivity data we've got from the Labor Department. We'll bring it to you. Do not go anywhere. Squawk Box returning right.
Rick Santelli standing by us and breaking economic data. Rick, give it to us.
Yes, these are productivity numbers, Joe, that, secret sauce of the economy. These are non-farm productivity levels for the third quarter, final read. So we take 2.2% our last look, and it remains. It is now the final permanent read. 2.2% on productivity. It's the best quarter going back to the last quarter of 2023 when it was 3.1. And I know there's been a lot of talk about the improvement in productivity, and there is some truth to that. But to put a face on it, if you look at the year before COVID, here's the 4 quarters of productivity: 3.4, 2.4, 4.6, and 3.8. Those are all the 2019 numbers. So it's not as though these are lofty, but they are making a comeback from some bouncing around they did post and during COVID. Now, unit labor costs, they're coming in at 0.8. And this is really interesting because on our last look, it's almost half. It's actually more than half of the 1.9 that we had on our last look. We're looking for it to rise a bit. 1.9 was the highest level going back to the last quarter of last year. Now, when we revise that to only 0.8, 0.8 would be the lightest, going all the way back to the last quarter of 22. So that is pretty good news, and you are seeing a little bit of buying pushing yields down on that. We also had that small business optimism index, and I'm sure you all pointed it out this morning. That was the best in 3.5 years. Now, currently we're at 413 and a 2-year. That's unchanged on the session. And if you look at a 10-year, it was 423 in front of the number. It's now at 422. That's up 2 basis points. And at 1 Eastern, we start the first of 3 legs of supply from the U.S. Treasury. coupon supply. Today's going to be a 3-year to the tune of $58 billion. The total package, which will include 10s and 30s on Wednesday and Thursday respectively, will add up to $119 billion. These are reopenings for 10s and 30s. Joe, back to you.
Wow. Okay, let's, who could explain all this? Rick, you could, or we can get to Steve Leisman, who joins us now with more. Hey, Steve.
Rick did a wonderful job of explaining it, Joe, I would say. But look, this is a huge debate out there right now, which is how hot can we run this economy? When you have stronger productivity and lower unit labor costs, it suggests you can run an economy that is somewhat hotter. And I say this in context of the debate of all the emails I've got from all the market participants that say the Fed is absolutely crazy to be cutting interest rates here because the economy has been strong, because unemployment is low. But look, there's two things here. Look at the unit labor costs, big downward revision that Rick pointed out. What does that tell you? It underscores many of the Federal Reserve commentary from the presidents and the governors that the job market is not a potential source of inflation because unit labor costs are low. And then you look at the idea that, hey, the Fed may cut again in a week. This is something that helps the Federal Reserve cut if the inflation numbers come in, if they behave in the data tomorrow. And the story is going to be this, that if the inflation numbers behave, then you can have a relatively hotter economy because the productivity numbers plus the job growth give you the potential growth. I will say this, Joe, every single Fed official has talked about productivity in the last several weeks, last even several months, but they do not rely upon it because in general, these things tend to revert back to the mean. Where are we at right now? 2.2% is the average of the last several quarters, and that's up from 1.7% if you end up go back to 2009, for example, which was the quarterly average. Doesn't sound like much, Joe, but if you put an extra half point on potential growth, well, then you have an economy that can run somewhat hotter than it could before, and it suggests the Fed can come down at least a bit without creating inflation. That's the theory. We'll see if it works in practice.
Yeah, we will. January 20th is coming. We may be running hot, you would think, and it's already been hot, has it not?
Joe, that's a fascinating question here. Rick pointed out the NFIB survey and the optimism there. If that optimism translates into investment, then you could have an even hotter economy. We've had pretty good results over the past several years, and then it could get better, I think, if you balance out some of these positives and negatives coming from the Trump administration. Then you could have an investment boom because of things like the lower tax rate and perhaps the pulling forward of depreciation, which is a big thing for a lot of companies right now.
Okay. All right. Thanks, Steve. See you later, Andrew.
Okay, coming up, Department of Justice Antitrust Chief Jonathan Kanter is going to join us for a wide-ranging and exclusive interview. With just weeks left in President Biden's administration, we're going to ask Kanter about some of the accomplishments, his regrets, and what could be ahead once President-elect Trump takes office. All that and more. The Squawk Box rolls on after this.
Welcome back to Squawk Box. Futures right now, the Dow's worsened. NASDAQ is probably where it was a little bit better levels earlier, but still maintaining about 33 points of upward momentum pre-market. The Treasury's about 420. Last we saw it, 422 now. We were below 420 earlier this week. And if you look at Bitcoin, it has pulled back from 100,000. It's below 98,000 now, but up a little bit this morning, 97,600.
Our next guest leads the Department of Justice's Antitrust Division under President Biden. He's overseen landmark cases against big tech and helped reinforce competition laws. But the future of antitrust law at this point in the U.S. is now uncertain as the next Trump administration takes shape. Joining us right now is Jonathan Kanter, Assistant Attorney General for the Antitrust Division at the Department of Justice. Good morning to you, sir. Lots to discuss. I'd love to talk about your tenure, but what I'd really love to talk about, at least to start with, is just how you see what you've done over the last 4 years and how that may shift over the next 4 years, given both the change in administration, but really, I think, an even broader, potentially, shift in mindset around what antitrust policy is supposed to look like in this country.
Great to be with you. First of all, when I started my position, I said that my goal was to make sure that we had the maximum impact while we had the opportunity. And so I think the way to build a lasting legacy and lasting impact is to demonstrate that we can be effective and we can meet the needs of the public while we have the opportunity to do so. I'm really proud of that. We brought the biggest cases, and we won the biggest cases and probably had the most effective and widespread antitrust enforcement era since FDR. And I think that will be a lasting legacy. All of that comes against the backdrop of, I think, a very different conversation about the role of competition policy and antitrust enforcement in our country. If you think where we are today relative to 30 years ago, it's night and day. I think there's a deep desire among the public to see a more competitive economy that provides opportunity for more people, whether it's the farmer looking to operate their small business in rural America, the startup trying to compete against a large tech company, or someone looking to disrupt a healthcare system that desperately needs disruption. Creating those kinds of opportunities are what we are have been focused on doing, and I think we've been very successful.
Jonathan, all that may be true, but at the same time, there's a question mark about whether you think that this election was a rebuke of the more aggressive approach to antitrust and regulation that this last administration took, no?
No, I don't believe that's to be the case. I mean, I'll leave politics to others, but I think if you ask Americans whether they think enforcing the antitrust laws and reducing the power of large companies is helpful to our democratic society, I think the answer to that is unequivocally yes. And I'm also pleased that antitrust is one of the very few areas that transcends partisanship and politics. I've been honored to have the support of people across the entire political continuum, and I think that has been very important to the public's acceptance of our agenda and our work.
Jonathan, you've brought a whole number of cases that obviously are going to be ongoing, meaning that they are not completed, they are not finished. Many of them will be appealed under this next administration that to the extent that they have already been adjudicated once, others that where there are investigations taking place or cases that are ongoing. How many of those cases are you concerned are going to ultimately end in this next administration?
Yeah, listen, those decisions will be made by others, but I think we've been very selective in curating our cases. We've brought very strong cases that are deeply rooted in facts and law. They're deeply popular because they resonate with the public. And I'm a firm believer that strong cases that have support will likely continue because they're important. But ultimately, those decisions have to be made by someone else. I will point out, though, some of these questions came when I arrived. In fact, some of our biggest cases and our biggest victories were matters that were either initially investigated or brought in the prior administration. And so I think there's a strong, rich tradition of antitrust cases carrying on from one administration to the other.
Jonathan, let me actually ask you about one of those cases, which is the case against Google, and I want to show you some video from an interview that I did with Sundar Pichai, the CEO of Alphabet, just last week at the DealBook Summit, where we talked about that case, which, as you just referenced, was actually originally brought by the Trump administration. Let's show it to you.
we are at the cutting edge of innovation. We provide these services. We open source and publish most of this innovation. The entire AI reason, the transform architecture, etc. A lot of our products are open source. So, we'll vigorously defend. I can't comment on ongoing litigation, but I have deep faith in our judicial system.
Is that a case, sir, that you see continuing? And I ask because apparently President-elect Trump has made comments, not only that he cares about competition, he alluded to that, but at the same time, he is now talking quite openly about wanting to have strong technology companies like Google in this country, and has talked about even the national security issues or just the strength of projecting strength against a China, for example.
Yeah, the beauty of law enforcement is that, and I agree with Mr. Perchai on this, that these are active matters and we have deep faith in our judicial system. We bring our cases before the courts adjudicate them and reach conclusions. And in this particular case, we succeeded and we received a favorable decision from the court. That will remain ongoing. In terms of our competitiveness abroad, I think this is a really important question. First, let me start by saying that we don't need to, our competitiveness abroad does not depend on allowing dominant companies domestically to harm smaller U.S. companies domestically. We are our best when we are an open, competitive economy, not a planned economy. And this is a tradition that goes back in the Reagan administration. AT&T, facing a breakup, made the argument that the government shouldn't break up AT&T because a national telecommunications champion was necessary to compete against the Soviet Union. The Reagan administration rejected that argument, and I think in today's world, a competitive, open U.S. economy that allows companies of all sizes and shapes, U.S. companies, to thrive and be successful is how we maximize our competitiveness abroad.
When you look back on the last 4 years, I'm sure that there's lots of things that you point to that you're proud of. Any regrets? Anything you wish you could do over?
I think I've stuck with the old Kenny Rogers adage, which there'll be time enough for counting when the dealing's done. And so still a little more dealing left to do, and we'll figure that out. Always there are regrets, there are things you learn along the way, but I'm proud of the fact that we've made decisions with a compass in mind, meaning a true north of doing the right thing for the right reasons at every turn, bringing our cases to win.
You put out some very, I'd say, aggressive or just more aggressive guidelines at the beginning of your tenure, actually maybe a year and a half in to it. How do you think you're going to feel a year and a half into whoever's doing it the next time when they come out with guidelines and if they look like they are reversed?
Yeah, I think, listen, part of the job is making the best decisions you can in the time you have, and having your own impact. And the next crew will have every right to make the decisions in their vision of what they believe is right, and I respect that. And I will be rooting them on because their success is the success of the economy in the country.
Do you have any sense, we sometimes talk about J.D. Vance, who has talked about admiring Lina Khan in some ways. Do you have any sense whether this next administration, I think the knee-jerk conventional view, conventional sort of perspective is going to be that Trump is going to try to unleash, and get rid of a lot of the regulation and not be nearly as aggressive as you were. But then at the same time, there are these sort of interesting cross currents. Do you have any sense of it? I know you don't want to talk about politics, but you're about to go back and be a civilian with the rest of us. Maybe you can sort of bring us into that world, because I think you've talked to a lot of these players.
Yeah, listen, I think all of this really starts with the public sentiment. And I think, again, as I was mentioning a little bit ago, if you look at where antitrust is today versus 30 years ago, it's night and day. We've seen a shift in our policy. And that's because I think we've seen a shift in how the country views corporate concentration. I don't think that's going to change. How it's implemented and will shift, and it'll evolve just as it has from the last administration to the current administration. But I think we've seen a great deal of continuity, including from the Trump administration to the Biden administration, and I expect we'll see an evolution to continue, and I think that's healthy.
Right. Well, what do you make of so many of the folks that are either part of this Trump cabinet or going to be appointed to other positions in this administration that come from business. I would imagine, even, and I'm not contending that they're going to do anything untoward, but their perspective, right? Their life experience is going to be coming from oftentimes the top of business institutions. Do you think that they're going to think about it differently?
I think that the goal of public service is to make sure that you're putting the public first. And my hope is that whoever takes over throughout the government will do just as we have, which is put the public first. But you know, I think people's life experiences help inform their outlook. I mean, I came from private practice. I spent many years working on all sides of issues, and I think that's helped me become a better, more successful enforcer.
Jonathan, one big question I have for you is about AI and technology and how that may change all of this. You know, a lot of the cases that have been brought in the past, to some degree, I now look at it and I think of Google in this example. You know, that whole world may get blown up in the next 5 or 10 years just because there are going to be competitors that didn't exist even, 18 months ago. And so I wonder whether we're going through such a technological revolution, how you think that should be considered in the context of antitrust. By the way, for a very long time in the media world, there hasn't been, big mergers because there was a view that there was too much concentration. At the same time, you've seen sort of a complete revolution in terms of how we all consume and get media, which may portend a good reason for there to be more consolidation, for example.
This is really important. So I think antitrust is often most important at times of great disruption and inflection points. And so if you think about a history of antitrust cases, whether it goes to telecommunications and the development of the microchip and then PCs, and then ultimately the Microsoft case, for example, was brought right around the time where we're seeing the broadband revolution and the rise of the internet, preserving the ability and the opportunity for those inflection points to have maximum success and disruption, and so that we can see a new range of companies compete is what we should be after. And I think AI presents a lot of really exciting opportunities. It creates new vectors of competition and innovation. I think what we want to make sure is that those new competitors have the opportunity to succeed in a durable way. And I think one thing I will point out is I think our goal should be to have more public companies. I think we want not just the same incumbents to recycle and compete in the next wave of technology. I think we want to usher in a new generation of great U.S. companies that maximize terminal value, not just by selling to larger business, but by becoming strong public companies that can have a durable impact.
Do you know Gail Slater, who effectively will be taking your role in this?
I do, yeah. Yes, I know Gail for a very long time.
And have you talked to her about this new gig?
I have not yet. I'm excited that the president-elect has announced permanent leadership. Gail is somebody who's well known in the antitrust community for being smart and experienced. Our goal right now is to make sure that we hand off the antitrust division in strong working order to the next crew.
Real quick, how do you think about international antitrust enforcement efforts? I'm thinking, by the way, even in the past 2 days, we've been following this NVIDIA story in China, and how often you think antitrust is being used because there actually are competitive issues in these other countries, and how often you think it's being used as a negotiating cudgel. And I say that because also there are going to be questions about how this next administration uses all sorts of things, whether it be tariffs or decisions around the future of TikTok on national security grounds or other things, but could also turn into a negotiating tool for these countries.
Yeah, I don't believe antitrust enforcement should be used as a negotiating tool. It's a matter of law enforcement that should be used to help open markets and make them competitive. And so, ultimately we enforce the antitrust laws in the United States in order to make sure that our economy is working for people in the United States. And that has always been our North Star. I think we have to do that against the backdrop of a global economy. And so it's important to be mindful of the fact that a lot of the issues that we confront are the same kinds of issues that people abroad are confronting. But ultimately, we make sure that we enforce our laws for our country and our people.
You worked at Cadwalader, you worked at Paul Weiss. What do you think happens after this? Is it easy for you to go back into private practice? Because you were so aggressive. I wonder whether the business community says, great, I love him, or if you've done your job properly, are you not beloved in that way?
So my job was not to make friends, it was to represent the people and be effective. My only plans right now after DOJ are threefold. First, to spend time with my family. Second, to pursue my lifelong ambition to be a professional intermediate skier. And three, to count the days until spring training when I can see Juan Soto step up to the plate wearing a New York Mets jersey.
The blues. Skiing on the blues are good, Jonathan. We'll get you to the
That's
blacks
right.
one day.
I'm 51. I could do the blacks, but I know my limits, and I don't want to be too ambitious here in my post-DOJ career.
Jonathan, want to thank you for joining us. It's been a pleasure to talk to you over these past 4 years, and we hope we have an opportunity to do it again after you step down. Thank you. When we come back on the other side, there's some top stocks to watch as we make our way towards the opening bell on Wall Street. You're watching Squawk Box, and this is CNBC.
Laura Trump wants to be the next U.S. Senator from Florida, according to a Wall Street Journal report. We heard this already, I think, though. It says President-elect Trump recently spoke to Governor Ron DeSantis about his daughter-in-law. DeSantis will fill the seat being vacated by Senator Marco Rubio, who's expected to be confirmed as a Secretary of State next year. Laura Trump is the 42-year-old wife of Donald Trump's son Eric. On Sunday, she announced she was stepping down as the co-chair of the Republican National Committee and told the Associated Press that the Senate seat is something that she would seriously consider.
A little more than half an hour till the opening bell on Wall Street. Dom Chu is back. He joins us with a look at some of the morning's top pre-market movers. Dom, what's on your radar this time?
All right, so Becky, we'll start off with shares of Eli Lilly, which are moving just about 1% higher as analysts at Bank of America reinstate coverage of the pharma giant with a buy rating and a target price of $997, saying that despite volatility in the obesity drug market, Eli Lilly's position as a leader in that space can position it for outsized growth. So Eli Lilly getting some help there. Shares of eBay down over 3% after analysts at Jefferies downgraded that stock to an underperform from a hold and cut their target price to $52 from $60. They're citing a slowdown in advertising revenue and trouble in key markets like China, pushing more marketing spending as well. That stock is also moving on headlines out of the UK as officials say they plan to make online marketplaces like eBay and Amazon pay the fee to recycle certain electrical waste. And then ending on a look at Pinterest and Google, Alphabet, moving in opposite directions as Piper Sandler downgrades Pinterest to a neutral from overweight, but names Google a top pick. Analysts there citing 2 straight quarters of mixed results for a weaker outlook on revenue growth for Pinterest, but they see Alphabet as an AI winner when it comes to advertising and cloud, especially with the lighter regulatory environment moving into the Trump administration hypothetically. Also potentially helping Alphabet this morning is Google's announcement yesterday of its latest quantum computing chip called Willow. It's been getting a lot of media attention lately, so keep an eye on those. And by the way, check out CNBC Pro for all the analyst calls and the top ones of the day, guys. I will send things back over to you, Joe.
Very good, Dom. Thanks. And we'll take a quick check, final check, for today, hopefully, on the markets. Down about 80 points, as you can see now, on the Dow. NASDAQ down about 26. We've got gains in the S&P, so mixed markets this morning. It was tough yesterday in the Dow. We'll see by the end of the day. Make sure you join us tomorrow. Squawk on the Street is next.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures are a bit mixed following Monday's momentum unwind, and as we await CPI tomorrow, tons of corporate news from Oracle to Disney to Boeing. A positive mention of Google has that stock up 4% pre-market. Our roadmap begins with Oracle, though, sliding on its earnings and its revenue miss. Biggest laggard on the S&P ahead of the bell.
Plus, Tesla's named a top pick at Morgan Stanley. It's getting a big price target increase. The stock, of course, is nearing a new all-time high. And how about Boeing? Well, it's restarting production of its 737 MAX. That's about a month after, of course, the 7-week strike by more than 30,000 factory workers finally was brought to an end.
We'll begin with Oracle this morning, down sharply in the pre-market. Quarterly results coming in just shy of expectations, despite cloud growth fueled by what the company calls record-level AI demand. Current quarter guidance a bit below consensus. Jim, we were just talking yesterday about where the sellers were. They came out.
They came out. It's very interesting. Let me get to Oracle first. Look, when you're on an Oracle call, it's very rah-rah. Software Cott's always about my forecast. We beat my forecast. Then Larry Ellison jumps in and says, we're going to win, but no one even is near us. Our buildings are best. I actually like it now. There was a time when I said, are you guys kidding me? But when you put on those points and you make that kind of money, I think you're serious. And I'm buying, don't have my travel trust, but I like the call. And I like what they said. And so did the analysts who congratulated them. I think you have to be careful selling this stock, if only just because it ran up a lot. This might be the level to buy. But yesterday was a day, I was looking at bespoke data.
That's a great stat. I love that one.
Yeah, crazy stat. All 26 of the Russell 1000 stocks that were up 100% on the year through last Friday were down today. And they're down an average of more than 5%. David, this may have been a basket someone put together to go after the companies that are up the most. And it did impact stocks.
Oh, without a doubt. I think yesterday was one of those, in the hedge fund business, they call it factor risk. I'm not going to go into it. But it was one of the worst days since 22 in terms of the names are long and short and everything's sort of going the wrong way on them. It was one of those days, Jim. Not quite sure why, but I'm sure you have some theories.
Well, one of my theories is that it's absurd that these stocks are all up like this. And it might
you joked yesterday at Palantir. We talked about any number of these. AppLovin yesterday.
AppLovin's up 900%. I mean, come on. Gaming software.
And Palantir.
Maybe does he come?
And over 50 years worth of sales, trading at a value worth 50 years.
I like the Minnesota Vikings more than Vikings Therapeutics. The Minnesota Vikings, they have 11-2. They can get in. They could go far. The Viking Therapeutics not going anywhere. Lilly announces a $15 million buyback and a 15% dividend. I'll take that over the Viking. I'll take Viking Cruise Lines over Viking Therapeutics.
All right, but
Goldman talked about the cruise lines.
How about back to Oracle? Why don't we get back to Oracle?
Oracle's multiple's not that high.
Right. but the quarter itself is not being responded to.
You're going against Larry
So you're
Ellison.
not worried about bookings growth turning negative?
No, I'm more.
Income statement Q2 and Q3 guide falling short of investor expectations.
Everyone wants their data
Free
center.
cash flow increasingly pressured by rising capex.
They have to spend that money. The demand is that great. They have to spend that money. Look, I like Texas Pacific Land Trust. That happens to have a big position. These are in the Permian. I like how my mother, especially now that Boeing is shipping. That's how I met.
Yes, I'm aware.
How I met my mother. Well, you have to remember these
You're just
things.
going through a list of names here, aren't you?
MicroStrategy. You want to go by MicroStrategy? Fine. That's a
Stop
super.
reading a list. Keep focused. Get to the list later.
I'm not Karnak, for heaven's sake. But I'm just saying that a lot of these companies, Carl, are companies that you would want to hedge. You want to hedge out something. Or if you're an insider, and I have a piece tonight that I'm doing for No Huddle. If I were advising some of these insiders, are you just really letting it ride? Yeah. Don't you have any sense of self-preservation?
There was a desk note that tried to put yesterday into some context. One, they point out a lot of idiosyncratic stories like AppLovin.
Yes.
The other was China and what happened to the K-Web, and then M&A happening, in J.P. Morgan's words, in sleepy sectors like Hershey and advertising.
M&A is happening where 3 can go into 2 or 4 can go into 3. I mean, David, the 2 chocolate companies merged. We already had that.
The 2 what? Sorry, the
chocolate
2
companies. Well,
yes.
Mondelez, we merged with Hershey, and those are snacks.
Yes, Mondelez making an approach to Hershey.
Right.
Well, and we're following it closely. Hershey stock was up dramatically yesterday on that news. Right. The question will become the Hershey Trust, as we've made the point many times. Back in 2016, of course, Mondelez made a similar move. The Attorney General of Pennsylvania also got involved. So a lot of moving parts here. I wish I had more clarity myself. I'm not getting the calls return from some people on that Hershey Trust to sort of get a sense as to their posture, because that's the key here, Jim. I have believed since they were unable to buy Kellanova that Hershey may have made a strategic decision, at least in some way, and Michelle Bucket, CEO, that maybe if we can't get bigger, it's time to consider a sale. But the Hershey Trust will be key here. A former banker named Jim Katzman is on that trust. He will be key here in terms of where he comes out, I think, is what I've heard. He's not returning calls. So we'll see, I guess, is where we are right now on this. Obviously, the market digesting that significant move up yesterday in Hershey shares.
Well, look, Mondelez is it's low. Mondelez actually had a good quarter and had no GOP, even though they're just filled with snacks. You can get that. I don't know. David probably never bought like the yard-long Toblerone.
No, but I'm a big buyer, as our viewers know, Malamars, and so that is a Mondelez.
That season does not last, and you know that.
It's a delicious.
They're out there for a couple of weeks, and David doesn't
First of all, it's most of the winter, and it's in season right now.
I see you, Malamars, and I raise you MongoDB, which was up 30 points and is now down 25 because of the strange departure of the CFO. Boom, CFO here today, go tomorrow, right?
Wow. No? Do we know why? You moved past Oracle very quickly, didn't you?
Okay, I'm going to go back to
You really did. You didn't want to talk about it.
No,
you really didn't. You wanted to hit your list here.
Her numbers. Safra hit her numbers. That's enough. Safra hit her numbers. I'm not going against Safra Cats. I've done that periodically, and I've been run over. I've been run over like David. I was going to say Mack truck, but it's really much more of a Cummins engine. And then you want to tackle Larry? I'm going to call Larry Ellison today, since he hasn't taken my call in over 35 years, and just say, I heard, I was sticking up for you, but David Faber said you're not doing a good job. How rich is Larry Ellison?
First of all,
how rich is he?
He's incredibly wealthy.
And his son, how's his son doing?
David's doing very well. There's Larry. What are you trying to do here? I had nothing bad to say about Larry.
Because I was just saying that I listened to the Oracle call. Safra goes on.
Yes.
And then Larry goes on. They tell, an amazing story. Then the sycophant analysts, who are as equally afraid of Safra and Larry as I am, then come on and say, congrats, 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 congrats. Thank them, thank them, thank them. And then come out this morning and have the guts to say, hey, you know what, there's worries. Because they're afraid. They're cowards. As am I.
I mean, cloud infrastructure was up 52.
Thank you.
To Jim's point about Safra Catz on the call, take a listen to a piece of that sound.
We expect cloud revenue to reach $25 billion this fiscal year. This is happening for several reasons. First, our cloud is faster and thus less expensive than other clouds. We remain the preferred cloud for AI workloads as well as for non-GPU cloud infrastructure services. In addition, our ability to deploy our cloud in many sizes gives our customers flexibility, and our multi-cloud agreements with Microsoft, Google, and AWS provide customers more choice in how they can migrate their Oracle databases to the cloud.
What's interesting is there are some AI infrastructure playlists being built today. City is a good example, and it's Apple, Sienna, and Dell, and Coherent. Not a lot of Oracles on them.
No, look, they are doing something. They're building knowledge factories, and you can tap into them. They make them cheaper. They know how to do foundry work better than anyone, and the stock is down only because it has run far too much. And remember, NVIDIA had a good quarter, and its stock is down appreciably.
I'm reading here now about Google and quantum computing. I'm sure you guys saw this, but it's worth repeating.
Why? That it takes 14 years to do something and now takes 5 hours?
Well, it's not quite 14 years to 5 hours. Its quantum computer, based on a computer chip called Willow, needed less than 5 minutes to perform a mathematical calculation that one of the world's most powerful supercomputers could not complete in 10 septillion years.
Good. Now, what's the use case of that? Have you figured out the use case?
How about
drug discovery?
Figuring out the Bitcoin's encryption or something like that.
Yeah. Or how about how to get a good chamois shine?
How about secrets to the universe? How about figuring out how to move at the speed of light? What do you think? You with me? I mean, I can come up with a lot of things.
This is what I say to you.
Go in peace. Yes.
Remember the triple episode? Do you think you could stop the triples? Look at this kind of thing, and here's what I said. I say, as my charitable trust did, I'm selling some that I have since 2014. Because when I see this hype over quantum computer, which, by the way, I saw with Honeywell, too, I say to myself, you know what? Even Jensen's not been able to really figure out, Jensen Huang, who happens to be a CEO of NVIDIA, exactly how to handle quantum. So what, we're going to just decide that all the problems with Google and Gemini and not knowing where they are in the real world should be trumped by this quantum computing?
Taking nothing away from NVIDIA and their incredible computer scientists, I would say that Google's got some pretty good scientists, too. That would be my guess. Given that they did come up with AI, now they may not have commercialized it, but they were there ahead of everybody else.
This Piper survey today, saying a survey of ad buyers, and they argue that Google is one of the most AI-centric platforms.
No, they do have good ad buy, but I listened to Jonathan Cantor earlier today, and if the Justice Department under President-elect Trump is at all like Cantor, I got to tell you, you find the monopolist, you'll be able to break them up, make them into a Greyhound bus.
You may be able to break them up, doesn't mean that they're going to necessarily suffer. We talk about that all the time.
The goal under Jonathan Cantor was to hobble them. I have used that in misery example, and you won't listen to me.
I do listen to you. I know what hobbling is.
Did you know I looked like James Caan at one point when I still had hair?
You look like many people. You did look like James Caan. You had his hair.
We have to go.
You had that hair.
Thank you. Let's leave it at that. After denigrating me the whole way. By the way, Safra Katz knows I'm going to be right. Let me tell you something.
When he got killed at the Toll
Safra
booth.
knows. Let's get the Toll Brothers after the commercial, okay?
We're going to get to Toll. We do have some news, though, this morning. The suspect in the killing of United Healthcare CEO Brian Thompson, as you may know, has been arrested and charged with murder. Bertha Coombs has the latest. Morning, Bertha.
Good morning, Carl. The man accused of shooting and killing United Healthcare CEO Brian Thompson has now been charged with murder in New York. 26-year-old Luigi Mangione is being held in maximum custody level in a Pennsylvania prison where he was arrested at a McDonald's in Altoona, Pennsylvania yesterday after he was spotted by an employee who called police. Police say they discovered Mangione had a gun with him similar to the one used in Thompson's shooting, as well as a suppressor and a fake ID with the same name the suspected gunman used at a New York City hostel. Investigators have not specified a possible motive. Senior law enforcement official briefed on the investigation tells NBC News that Mangione left behind 3 pages of writing, which read in part, frankly, these parasites had it coming, referenced the healthcare industry, and stated that he acted alone. Those writings also include a line that says, "I do apologize for any strife or traumas, but it had to be done." Mangione graduated with multiple degrees from the University of Pennsylvania in 2020, where he specialized in engineering. He also reportedly suffered from chronic back pain for years and recently underwent back surgery. Mangione's family issued a statement following his arrest in Pennsylvania saying, quote, "Our family is shocked and devastated by Luigi's arrest. We offer our prayers to the family of Brian Thompson, and we ask people to pray for all involved. We are devastated by this news." Mangione is due back in court in Pennsylvania later this month. The Manhattan District Attorney's Office is expected to seek extradition. Back to you.
Bertha, thank you for that, Bertha Coombs. When we come back this morning, the Tesla rally rolls on today. Morgan Stanley's Adam Jonas raises his target to 400, names it a top pick. We'll talk about why. A bunch of other calls to get to as well, including some news in airlines and travel, Norwegian and American, some upgrades of UPS, news on eBay as well. Stay with us. Musk Math.
Zip.com.
Tesla shares up in the pre-market as they continue to march toward a record high, which would be about 414. Today at Morgan Stanley's Adam Jonas reiterates the stock is a top pick, takes his target to 400. He was at 310, maintains an overweight, says Elon Musk's entry into the political sphere has expanded investor thinking around Tesla's fundamental outlook. Jimmy thinks the aperture is going to expand way beyond cars.
Yeah, look, that's the whole, you can't make it on cars. This, particularly with this most recent rally, which is really predicated upon the company being much more than anything involving vehicles. And certainly has to own self-drive. Yeah, David, I don't like, I'm a big fan of Jonas.
Yes.
But I don't like when you come in after this big run and you start talking about the rally and why the stock should go from 310 up to 400. I'm questioning a lot of things this morning, and I don't want the people who I regard as leaders.
You feel as though analysts are just coming up with price targets, not based on fundamentals, but
Yes.
because they feel like, well, the stock's going to go up on momentum.
I saw a ServiceNow one today.
Yeah.
And I'm beleaguered by these because people are going to come in today and say, hey, listen, we're really fine. I mean, look, he just took his price target from 310 to 400. David, I mean, the stock was at 200. Where was the price target boost there?
Well, to be fair to Adam, he was at 310 way before it got to the
That's true.
streets.
Well, I do feel bad. Adam is probably the most rigorous. I'm just saying that there are people who will come in today and say I'm early on Tesla, and I just don't. I fear that they'll get hurt. That there'll be a better level to buy Tesla than this one.
Your typical reminder from me about Elon Musk's the value of his stake in Tesla at 392. What he currently owns would be worth 161 billion. But then there's the compensation package from 2018, which I've mentioned many times. 303.96 million shares. That's worth 112 billion at 392. So let's assume he wins an appeal, which I think many people will assume he will when that appeal gets heard of Chancellor McCormick. 161 billion plus 112 billion, that's just Tesla. That's not SpaceX. That's not XAI, by the way, where he's now got a 50+ billion valuation going up from there.
Now your focus is just on his wealth.
That's it, just his
not
wealth.
on
Not on his power in Washington.
You need self-driving. You need China.
No, we talk about the fundamentals of Tesla so many times, and Optimus. Obviously, the robots are so important. Only going to become
And the
more
new
so.
videos of the Optimus, the robot. Again, remember anything.
Show me a new video. There
Jensen
it is.
Long, anything we can do, they can do better. And Jensen's most recent talk on the big interview with Wire, actually, very interesting. You know, they used to be able to perceive, and now they can't perceive, and now they can reason. And when they can reason, we really have to call into question us.
Well, when Sam Altman's talking about AGI in the next couple of years, which is the focus of a lot of debate, but I do think it's interesting because we had the Optimus video here. We had Sora yesterday out of OpenAI.
Right.
We have this Google Quantum News. I mean, the flow of innovation is getting insane.
Right, and this is why these stocks are hard to sell. Why are we selling some Alphabet for the Charitable Trust? I mean, you're up so much. I'm not going to just sit here and let it ride. It's just up too much.
I'm not sure
It's
what
okay.
I'm not sure what
It's
we're
okay.
looking
Remember
at
that,
there.
David, talking about the idea that something's up too much and I have to do some selling? Or is that just ridiculous? Am I just like old school,
You are
pre-Knowledge
That's
Factory?
OpenAI. That's Sora, where you basically say, make this image for me.
Yeah, but you mean,
We're gonna
address my
We're going to
issue.
show some of that to you later. Yes, you are old and out of touch. There you go.
That wasn't how I thought you'd address
Market's
it.
just trying to keep up with the things we're watching with our own eyes.
I think that there were so many great things.
Quantum computing is real.
I remember you telling me the Copper Mountain. That was the way to go.
Copper Mountain.
That was one of these 1999 things.
Oh, one of the gold was it like a
No, I'm just saying I won some proofs. And our Google I've had enough. I gotta take some more things. Have to.
Interesting, Jim. Very interesting. We'll get Kramer's Mad Dash countdown to the opening bell with one more look here at the pre-market. Don't go anywhere.
Oh, I still got my earpieces in. $71, standard down to 70.
See.
Some opening bell gainers pre-market.
Norwegian has an upgrade. NCLH.
Cruise Line's going to get some attention today after Disney's presentation yesterday. Goldman ups Norwegian today to buy 35. Micron, by the way, also on that list is Commerce now, finalizing that $6 million in.
Google's up $7. Good morning, retail traders.
And don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk
Lily.
Opening Bell podcast.
Morning, Randy. Morning, Mike. Morning, Jesse. Josh. Magnificent. Rob and Ricky. Woo! It is 30 degrees in Missouri. Temperature's dropping. It was 35. I'm gonna go make some mud. That one guy says, what are you drinking? I'm drinking mud. What the fuck is mud, man? I don't drink no mud. I drink chocolate. Mushroom coffee. Well, you just don't know what you're talking about. We drink mud. We're getting ready to get into the pivot point channel of 605.35 and 606.05 here on the SPY. CPI tomorrow. Totally probably a lot of chop. Make your money early. Coming from a wise man. We bounced off the 200 yesterday on the SPY on the hour. So what we got here? 2 minutes. I have enough time to make my mud. I'll be right back. I think the IRS is more fucked up than it's ever been. It took them 4 months to get a form, a 941 form. I guess I didn't send in the mail for last year. And I mailed it. I mailed them twice. I certified the third time. I faxed them once. And then I turned around and faxed it again yesterday. I mean, it's like, where in the heck are these people? What are they doing? So I got pissed off at the IRS. I called them up. I said, man, I'm sick of this.
I think one of the most important calls there was not a tech call, and that was Toll Brothers.
Toll Brothers. Anybody else have any issues with IRS? Let me know. It just seems like they're definitely militant now. Hope Trump fixes it. And fire half their units. Get to a single payer system or whatever. So we got SPX at the 200 on the 1 minute. We had a little pop right here. We do have a 1, 2, 3. So we could Let me draw that trend line on here. Kind of like a bull flag. I don't know. Yeah. It's probably come back and hit the 63. I'd hate, well, we could drop more. I mean, let me look at the bigger. Oracle boasting about their AI and their cloud. So I got 167.53 for the final support if we don't hold this 172.60. And then we got, I think, Mike's sizzling index. Tesla upgraded to 400. Kramer thinks you can buy it cheaper if you're long. If you're scalping, different story. Apple, Mister's on here. It's up $8. We just had a 60-cent pop right there. A $1 pop right there on Mister. Watch Mister. And Coin had a pretty good sell-off. And Mara. Lily. And we got cost on here. That pulled back on cost yesterday after earnings. I got shares of Tesla. We just got to. We got a double top right now on Tesla. Pre-market double top. 394.44. So if that holds, we'll move up higher to the next resistance level, and that's right around under 400. Nobody's doing blue. I don't want these to be blue. We'll leave that blue, but I didn't push default. So right at 399.11. That's going to be my resistance. Now SPX just pulled back to support right here. If we hold here, what we got here? Yeah, I'll get my. Oh, I don't have my platform up. That's not good. Could be good. It could be a good thing. Who knows? SPX. Got an inverted. Got a long leg doji. The 65 I mean, or 60-60. Let's do a 60-60. Okay, I'm watching 60-60. I just think that's a neat number to watch today. That's the only reason. At $5. We'll scalp this first thing in the morning. So the 60-60 at $5, and with a tight stop, I'm not going to hold this if it decides to drop. There's 490. We got 1, 2, 3, triple bottom. Clock 2. There we go. Now why ain't this thing popping? 540. What the? I got delay here on shit. I'm gonna sell these here at 550. I don't like the way that reacted too well. So this could drop more. I'm not liking how this reacted too much. Okay, we're retesting the breakout. Hurry up. I could have sold him. I tried, but I didn't get it. Head and shoulders with a two-headed snake. I'm drinking mud. Yuck. Gotta have that creamer in this shit. Well, it held up pretty good, the price did. I try to listen to a lot of these people coming on CNBC in the morning. How they get contradicted sometimes. They had the DOJ's antitrust guy on this morning. He seemed like a nice guy, but I think he was full of crap. I mean, he really does seem like a pretty good, level-headed guy. But what goes on behind the scenes is a little different. So we got, you see the resistance, Mike? We got a megaphone here. Right around 60.57 if we break the 60.63. And if it doesn't hold, we could have a pretty good little knife. There's a couple support levels. This one here, I mean, that's a huge megaphone. Then you got the double bottom, triple bottom. Right now you got a symmetrical flag, so this could take a couple minutes, unless it wants to go ahead and do it. The numbers that came out today equals we shouldn't lower interest rates. There was one time where I remember we had the interest rates at these for years and it was okay, but then we went with zero for many years and it kind of screwed things up. So we got each one of these we got a gap right here in between these bodies, right around 60.55. If we break to 63, we need a body candle above it. Let's see what else is running. Watch this. We got Tesla almost at 400 now. So we broke my resistance level. Apple's down 50 cents. Meta's up 8. Coin's up 430. We're just now hitting resistance on Meta. App, this is the one that took the big hit yesterday and is up 900%. So this one will probably drop. $5.20 on my calls. I got two calls now. Hawk 2. $5 and 470. There we go. There we go. 560. I'm going to go ahead and take profit here. Did you hear me? 560. Thank you. Off to the beach. $5.90 beach. Oh, that was too much. Out at 570. Hawk 2. Ah, damn. $6 now. There's my resistance line. So we're at the top of the megaphone. Ooh, what are you doing there? Did I put that there? Let's see here. Oh, damn it. Ah, damn. 670. I just left $200 on the table. Oh. You can laugh all you want, just don't do it around here. $7. Give me a hell yeah, Mike. So for 610, well, at least you did good. Do you agree with the entry? Inverse head and shoulders with a two-headed snake? Boeing started 737 production of the 737s. Damn it. I have caught. Wonder if that chick's gonna get the collection fee for turning that punk in. Loogie, whatever his name is. McDonald's employee. That'd be a nice present. Hope. It's $50,000. Jim Cramer talks companies that joined the 100 billion club this year. NAP's probably one of them. I don't even want to look at my calls now. You blame me? Shit. Randy. I'm getting all the blame again. Well, on the 5-minute, we had a Harmony spinning top. Oh. Well, you get back to 610, you can get back in. Magnificent. You could have been hawk 2 too. Now we're pulling back to support. So, get ready. Are we going to have one more Black Crow? That's the question. Hey, Brandon. we've got a quad top break here, a triple top break. Well, I don't know what you want to call it. We're trying to respect the megaphone. Should I go ahead and jump in and give you your 10% cut? Or are we going to get another candle down? I can see it. I can see it coming down. One more candle here to the 63. Better we jump in right now and grab one. I'm using the same one, the 60-60 strike. Hawk 2. Okay, here we get ready. Now, at 510. What the heck? Jimmy's in. Oh. I'm going to get blamed for that one too, probably. 3 black crows. And I had another one here at 470. Got another one at 470. 510 and 470. Hawk 2 at 490. Three black holes. Oh damn! I get blamed for puts now. What the? You better watch out, or I'm going to be playing some Donny Osmond today. How would you like that, Mike? Come on, baby. Time to break. Go away. What the heck? Boost your server and unlock what? Mm-mm. Do-do-do-do-do. Okay. Tesla broke 400. What's the SPY up to here? I got the SPY at the pivot point, above the pivot point of 604.23. As long as we stay above it, we're still bullish. Sizzling index, we got Mike's sizzling index. We got Tesla, Apple, Amazon, and Mr. on the top volume leaders. MDB is took a beating here. What is this? Mondelisa. What about Mondelisa that I've got old, these are old trend lines on here. These go back years. They go back years. Probably more than this, probably a lot longer than this. Let me see here. These go back way back. 10, let's go 10. So we're at the pivot point. We're on the 63 on the weekly. The bear flag. Yeah, these go back into here. Probably right back in here. Well, it has to be here. So that's a solid support. If I go back 4 years, 3 years, almost, yeah. 550. Okay, here we go, boys. What do you think, Magnificent? Are we going to sell it? Yes or no? I don't want to get blamed for this head and shoulders resistance. I'm out of here at $6. Say goodbye. Winning. Winning. God damn it. Now I see 7. Oh. Hook 2. I'm going to get blamed again. Damn it. I'm going to take some heat. Oh. Oh. God. Well, well. It's not funny, Jim. Hawk 2. Oh, well. Your trading skills are so great, Jim. Just if you knew how to stay in the trades longer, you could be filthy rich. My hands are sweating. The heat is on. I can't wait to read the remarks. VIX spiking hard. No one should be, in longs yet. Thank you, Mike. Out at 690. I don't appreciate that. I double dipped at 660 calls and got out at 710. Oh my God. No, I'm going to give you an A for double dipping. I don't think you understand what that means. That means you had confidence in your trade, so you added, right? Did you add? Yeah, I did. I left more than $400 on the table. I think you deserve a better grade than that. For that, I give you an A+. You see it's visible. I'm going to take it down. Just want to make sure you see it. I took it down. I blame you for me taking it down. Jim, I made a gross mistake. So let's talk about something. YouTubers, you see these 3 candles right here? These are 3 black crows. So you don't want to initially jump in the trade like I did. You want to exercise and notice what kind of candles precede those crows. And that'll give you an indication if you want to take the trade. Now you notice on the wicks here, we got higher lows. You see that? What's that telling you? We got a hammer, we got a spinning top, we got a long, we got a inverted, we got a hammer here. And then we got kind of a red flag here, but still yet, you still have the higher lows off the wicks, holding that steady support all the way across. So this is called a symmetrical flag off the wicks. I'm going to draw that in for you. Take the wick, and you can see the lower highs and the higher lows. And that's called a symmetrical flag out of the snake, out of the three black soldiers. So that's bullish. There's no ifs, ands, or buts. And then it came back and touched that right shoulder the second time. The same thing happened here. You have three black crows with a symmetrical flag, lower highs and higher lows. And it squeezes and does the same exact thing as you did right here. This one's being a little bit stronger. It's more disciplined. And then you exit the double top. Well, that line comes from somewhere. We'll figure out where that line comes from. Damn. So I think that come from the 1 hour time frame. No, it come from yesterday. Let me see here. 5 minute maybe? Yeah, 5 minute. That's an overhead resistance. So if this breaks, we're going to shoot up higher. Prepare you in the name of the Lord. You might hear me start reading Bible verses soon. I've decided I'm going to read the Bible. I've got my books out. Here's the NW Study Bible, along with the Student Bible Dictionary. So they're sitting on my desk right now. And I might read one verse a day. Do you like that? Okay. Alex, were you able to get in that trade? Profit? Yeah, you don't want to trade and drive, that's for sure. Yeah. At least you're learning. So we're coming back down now. Are we in a 3 black crow day today? We've had 2 of them already. I still would like to see us hit this 200, but I'm going to take off my shoes. I went out and bought some keto bread this morning. I can't wait to taste that.
Fascinating.
Yep. $6 a loaf.
Fascinating.
I haven't had bread in the house for months.
Fascinating.
$6 to $7.80. Almost 6. So Nancy, would you go ahead and get that water warmed up for me, baby? All right. YouTubers, anybody take that trade? All right. Tesla new highs. Hashtag winning. Subscribe and ring that bell, you boys out there and girls in YouTube land. We're going to see if we can touch this 200 here and bounce back in this trade. Now it can drop down to 123 right around this 55 area. And I'm going to put that in a different color so I can recognize that 1, 2, 3. We'll use my translucent blue. Now, like I said, you got to watch where. Okay, here we come. Two successful trades. Should I go for it? Or are we going to come down and hit the 3? I think we wait. Been here almost 45 minutes now. Anthony. Uber is down 73 cents. XOM is down 62. CCL's up 30. Boeing's up $5. Now Boeing started reproduction, so that, and we just now hit resistance. Still a little touchy here, this website. I don't have this problem on anything else but this. We're at the pivot point inside of the flag, so if we break this pivot point, 162.91, we could see a higher high. Now, like I said, they resumed production on the 737, which gives it a catalyst for the fat cats to take the trade. Kind of like what they did with that United Healthcare. They found the suspect, so it popped. $163 is resistance to break. Boeing. I'm up $100 on the SPX. I'll get out of it right now here, unless we break. Yeah, I'll get out of them here. There's a couple. Tesla broke resistance. Does anybody remember in my video what resistance was on Tesla? I talked about it yesterday. World leaders attend reopening. You got all my favorite stocks on here. Mannequin, what's your resistance on Tesla? Good morning, retail traders. I'm Washboardjim with a sneaky snake trading strategy. 414, 406, 60. I got 406.60 on my video. Go back and watch that. $406.60 with an all-time high of $414.50. We hit 407.82, so this should pull back. Tesla on track for the highest close since November of 2021. They got a neutral, raises price target at 365. Somebody came out with 400 today. Oh man, 850 on these calls. Oh yeah. In the money, baby. Damn. $60.69's next. A one-day flush. What? Square. Square's got a flag. So we got a rising wedge. On SPX. If I see anybody defending this idiot, you'll be blocked and out of this here room. It shot that guy. I don't want that kind of garbage around me. If you want to be mad at somebody, be mad at Obama. No exceptions. Toss messing around with you too, Mike? I give them a compliment and they mess it up. Yep. I agree. I warned people about Obamacare back then. You got the big insurance companies putting this bill together. Come on, people, wake up. Baba had a nice little bounce this morning off the 63 on the 1 hour. What do I think about CPI tomorrow? I think it's going to be okay. Not much of a change. But I have more concern about the way the fat cats are talking. They feel a little frothy. Like they want to have a small correction in when Trump gets elected, just to buy the dip. So I'm more concerned about the rhetoric than I am over the CPI. Does that make sense, Ivan? 414, I'll take it. Mannequin says he'll take 414. Jimmy called a pullback on Tesla, though, didn't he? Did you see the 1, 2, 3? right at the 63. Oh, I'm going to put an alert on that. Where was that? Yeah, we left about $500 or $600 on the table today. I did. That's not cool. I gotta stop this. I think I left more money on the table than I did making money this year. At least by 50%. I'm gonna go have my soup here soon. Go to lunch with the fat cats. After my conversation with the IRS yesterday, I made some soup. Stew. So I called my accountant and I said, man, I know this is the 5th time I've asked you, but we got to send this form in again. I got this chick online with me. So he sends the 9/41/2024, and I asked him to send the 9/2023. And we waited around about 15 minutes, and then she finally realized these are the 9/24s you need. I said, oh my God. So I had to call him back up and send a 2023's third quarter, 9/41s. Hopefully this is the year that I get all that crap out of the way. And breaking things and... Okay, we're waiting for this support level right here at the 63. For the market to stay bullish, you're at a support right now. See this here line right here? That's called a, right there. Resistance, support, support, and support. Now we're at the 63. Is this going to be a rug pull here? We're at 620, 610. I'm going to grab one. $590, $580, $570. Okay, I'm going to grab one right here. 3 black crows off the 63 at 580. And if it don't work, I'll get out. Hot 2. What do you think about that, Mark Cuban? Yeah, reboot it. Because it really can screw you up if you're trying to trade. You just call it a day if it don't. Five, 7, 10, baby. Tell me who's the best. Look at that. I mean, that is just, we're at a head and shoulders. If I had any sense at all, I'd take profit here. This is my third scalp. I'm up almost $1,000 now. $8.10. I'm gonna get out $8. Whew, 850, you give me a break. I just left $100 on the table. 120. Oh, damn it. Oh, God. Oh, 890. Oh. Oh, my life story. I had a 1-2 Phoebus, or an inverse head and shoulders. A 1-2 3. Oh. 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 Okay. I drink beer. It makes me a jolly good feller. Right there at the head and shoulders. I'd say I did pretty good on that trade. I stayed in longer than I was going to. So I'm going to give myself a A. Did you hear that, Magnificent? What'd you give me? Balls of steel. Yes. I got a good grade. That's better than an A+. Where'd Mike go? Mike? Where's Mike? Oh, did I do it again? I didn't even play a song. My big brother's not in here. Oh, very good. Yes. Right off the 63. Now I'm going to go into the kitchen and try my keto bread with some grass-fed butter. I mean, my eating habits, I'm doing the John F. Kennedy, or the, whatever his name is, the Kennedy deal. I really didn't pay much attention to all these chemicals and stuff in our food. So every time I go in the store now, I'm just looking for, I mean, I'm not even hard, I'm just looking at it and going disgusting. And I've noticed my muscles in my arms are bigger since I've quit my diet. I mean, I started my diet, my blood pressure's down. My chest is flat. It's not got them saggy tits on there anymore. When I go to bed, I feel like I've been in jail because my gut sinks down to my belt, you know, my belly sinks. Oh, what a day. Somebody sent me a message and I'm trying to figure out. He's probably at work. So we got a 1, 2, 3 bottom here on Tesla. It needs to hold this, or we'll probably drop more. But you're at support. This thing stays above 430. That's the market knows that Elon is going to be with Trump, so they're fools right now if they try to downgrade Tesla. They know it's a great opportunity. There's a lot less bashing on CNBC, and I'm gonna send them a message here in a little bit and say, what happened? You have a change of heart on Tesla? You're saying it was overbought at 150, you idiots. Now we're at 400. I'm telling you, we're going to 750, like it or not. Man, look at all them lines. I'm gonna ask my friend Zach Morris if he can read this chart. Man, I nailed that. I was going to mention this alert right here. 1, 2, 3 on the IWM. 1, 2, 3 at the 63. Boom. 1, 2, 3, 4. Make a little bit more. So I got 60605 for the resistance channel on the SPY. That could be your target. 60605. I'm exhausted. Got a Head and Shoulders right there. I can't see what happens to Syria. History in the making right now, if you're into history. I don't think it's going to be a good thing. You seen what happened when we tumbled Saddam? It got worse for a bit. Created ISIS. I'm going to turn my heater up and go cook my stew, get it warmed up, and I'll be right back. So I'll put on the TV show here. Today was a good day to call it quits. If one wanted to. Now look at all the red here. SMCI down $3. Let me know if my microphone is too loud and I got this too close to my face.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go, at 12 p.m. Eastern on the Schwab Network.
Okay, we're at the 1, 2, 3.
Welcome back to Morning Trade Live. Let's check in on the
Boeing.
session here as stocks are still supported by big tech. Alex Coffey rejoins us alongside
We're back to
Dan
my
Grant.
resistance,
Grant's
Rob.
here with me in studio. Alex joined on the line, host of Next Gen, and Mr. Grant, senior specialist retail trading. Hey Dan, let's get started.
Boeing. I've got 166.36. Yeah, we're definitely at resistance on Boeing right now. We hit resistance. We got a knife on SPX. Right to support. Boeing hit resistance here. Yeah, watch it right here. This is definitely a solid support. We hit the 200. I called that out earlier, right? We hit the 200 EMA right there. Now, Fat Cats and I are going to go to lunch, so I don't know if they want to bring it down here to the 123 on this blue line. I would still think it could pull back a little bit more. But right now you're at a head and shoulders. There's your head, your left shoulder, and your right. So this thing could come down one more time and retest it. If that doesn't hold, I'd look for 60, 57, 92 to hold. Right? Be patient right now. I mean, like Mike said earlier, count your money now while you're early, and you might get a little bit of volatility later in the day. But we had such a good sell-off yesterday. People are just taking advantage of the situation. I don't think it has anything to do with anything. So I'm going to go. I got to get this. I've got goosebumps, so I got to turn on the heat and warm up my soup. And then I'm going to take this trade. But I'm going to set an alert right here off this here trend line. I don't know what it's for, but that's where we're going to put it. Yeah, see, right? Patience pays, man, I'm telling you. Timing of the day. I think we still hit this bottom down here, but you might get a scalp out of it. But right now we're bearish as long as we're under the 63. That's the 63, so if we break that, we'll go ahead and bounce on up. If not, we'll come down and hit here. That's the 63, that's a pivot point. See where it acted right here as a pivot point? Once you break it, boom. We got a hammer right here. Alex.
Trading 360 with Nicole Pedalides is coming up next. I will see you this afternoon.
Nicole is next.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
I just heard an alert go off. So
It's time to look
it's
forward.
SPX hit my alert.
From every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free.
Okay, get ready. Randy,
The Schwab Network.
we hit the blue line, so I'm going to jump in right here. Shut up,
1
honey.
p.m. Eastern, only on the Schwab Network.
We got the 60-60 strike at 540. The 60-60 strike at 540. The 60-60 strike at 540. We got one. And if we hit the 200, I'll add another one. I probably shouldn't have traded it because I got to pee. Going to the well too many times, you have a cost. I don't understand. There it is right there. Fuck. Buy two of them at 440. Okay, now I'm in. We got 3 contracts. You made money on 66 calls several times. Going too many times can cost a person. Correct. Correctamundo. Can't argue with that. Well, 2. God darn it. Oh, I know what Mike was doing. He's getting his... Did that help when you rebooted it? Dadgum. Beautiful. I'd get out right now if I wanted to. Fuck. Oh, that's probably why it ain't working. Mouse pad. I could go ahead and sell them right here. Fix dropping, stay in the trade. Sure, man, I'm at 590. I think we're going to get a pullback here, so I'm going to get out. Right now, 610. Now this has got 3 white soldiers. 620. Okay, come on. 630. Hot 2. I'm going to get out. Mike says stay in. 650. I'm on fire and I got a belly load of pee. And I got to pee. So I'm getting out at 610. Jimmy's out. Jimmy's out. Now we got 3 white soldiers, so this could be an extension to another breakout. But I gotta go pee and get my soup and then enjoy this keto sandwich. Today's info commercial, I'll bring it to you shortly.
Cap to US, so our majority of our book is in the US. So I would say what will drive the markets is basically the economy. Obviously, with the new administration coming in, they have an America First policy. They'll try to boost up the economy even more. So I would say that's what makes me bullish. As you know, U.S. economy has been the best of the Western world for many years now, and it should
Snake breakout pullback. Higher low, inverse head and shoulders.
But other than that,
so this is where it should reverse at 510.
Some of the actions on the tariff front and all may be inflationary, but we'll have to see how it all plays out.
Yeah, and as far as the Fed, I was just looking at the 10-year at 424 today. There are some people who think the Fed should pause now. There are others who are in the cut camp. Do you have a feeling what the Fed should be doing now? We're waiting on CPI and PPI this week, obviously tomorrow. Tell me a little bit about what you think the Fed maybe should do.
Yeah, I continue to believe the Fed should lower rates because the rates are still a lot higher than they were a few years back. Obviously, inflation is not down to those levels yet. So if things progress the way they are, the Fed should continue to lower rates at a measured pace. I think that's what Fed chair has done historically, both in raising and lowering rates. So I'm on the camp that they should continue to do so unless something else happens.
Yeah, and I do want to get to your picks because I know NVIDIA is in there. You have some great names that to talk about. But when I think about the Fed, the next meeting here, December 17, 18, there's an 88% likelihood we're going to see the 25 basis points. And then there's another meeting in January, which feels, for some, a little bit close. Do you maybe see back-to-back cuts? Do you see a 50? Some say cut in December and then pause in January. Do you have a feeling one way or another, or you'd like to wait and see?
So I like to take it one step at a time. So I'm also on the camp that they should cut by 25 basis points in December, and let's see how things progress beyond that. So for us, I'm a stock picker at heart. That's what I've done all my 32 years in the business, though obviously macro plays a critical role. So to me, the way I build stuff, Nicole, is it's an all-weather core approach where we're looking at value, growth, quality, all in the process at the same time. The reason I'm going there is when Fed starts cutting rates, historically value has outperformed. But that hasn't happened yet. Fed started cutting rates in September. Today we're in December.
Yeah.
Growth continues to lead the way even after the new election results. So
3 white soldier, 3 black crows.
Those are good to predict, but I've always believed in a more have all of it in your process: value, growth, quality.
Very good.
So whichever style.
Very good. No soup for you. Today's infomercial is keto bread. We have 8 grams of fiber, 0 grams of sugar, and 35 calories. This is the healthy style. Net carbs per slice is 0. Friendly Life Keto Bread with Washboardjim.
Emphasize different metrics. For NVIDIA, it's all about growth.
Oh man, we're going to get a bargain here.
Which category killer in the
As I go to lunch, I'm going to be buying this at 3:30. Oh, I missed it. Well, let me see. Okay, we have, this is an inverted hammer. I'm going to buy 3 contracts. Prepare ye in the name of the Lord. Next week, you'll be getting Bible verses. 360 for my first entry. $360. About 2. HAWKTUAH. Uh-oh, I think it just dropped more. Three black crows. Remember what I was talking about earlier? The formation of the flags. And it tastes a little like rubber. I don't know if I like this bread too much. I dip it in my soup, it'll taste better. It tastes good. We're at 4:30. Now let's respect the 200. Protein Palace, baby. Bring it. Yeah, it's kind of rubbery tasting. It ain't bad. Hmm. 440. Come on, let's break. I can get out here if I want. I ate the bread though. And I want another piece. Mind you, I ain't had a piece of bread in over 8 months, 7 months. 6. Yep. I think I had 2 buns. Tell me what this sounds like. That was good soup. Uh-oh, now what have I done? Oh, shit. What have I done here? What is this? I pushed something, done something here. I got to figure out what I did. I hit my key. F4 maybe? I don't know what I did, but I did it. Something on the keyboard that caused it to do that. That was strange. Huh.
order to take advantage of the next wave of AI innovation. So yes, I'm here for that. You know, their Windows is great, their phones are great, everything else, Xbox is great, but for me, it's all about the Azure and their cloud.
Sure. Yeah, I would say a lot of folks would probably agree with you on that. Rick, what do you think of the chart?
God, you look hot today.
Big breakdown that we saw after these 52-week
Cool.
highs near about 468 or so. You know, big collapse to the downside here, culminating with these lows on August 5th. A very important day for so many stocks. You know, broader weakness in the Japanese market.
You got AMD at a double bottom.
Low. Our purple 250
Symmetrical flag.
Something we hadn't seen.
Double bottom on Nvidia.
But we did manage to recover.
New low on Apple.
And then the shape was once again kind of the
Meta ad
symmetrical
support.
triangle type shape here, connecting the highs and the lows, gave us this increasingly narrowing range in which price was traveling. Sideways moving averages, sideways to modestly down here, showed that there wasn't really a great clear trend direction here, but now things are pushing to the upside. I believe it's 11 of the past 12 candles are green here. And something kind of curious here, you know, we had our triangular pattern. You also could...
Mannequin, I want to...
Looks like it was broken, but then you can see how...
I'm going to put a kudos out to Mannequin for making comments on my Tesla videos and complimenting my videos. I appreciate that. I want her to see Nicole. She looked hot there.
405 to 425. Not super great as a trading range for specific price targets here, but kind of this is a big important area to keep an eye on here. To the upside, +1 standard deviation channel lines up with a high here that we saw during our downswing. So around like 455, 457, that could be a resistance point to watch. Green line right here, gap level, subsequent highs around that point.
See that gap level?
440, 435 would be another downside point to watch.
Man, this guy's good.
Thank you for
He's
that.
almost as good as I am.
Joe, I'll tell you, a lot of folks, we just had
Woo,
Donna,
baby.
who, you know, has tens of billions
Damn.
under management. He was feeling pretty
I
optimistic
love this chick.
for the new year. Is that your takeaway from most of the folks you're talking to?
Yeah, and that's my takeaway too. You know, tomorrow's inflation data is going to be really big, and broadly speaking, if the Fed is able to be aggressive in lowering their rates back down to normalization, as they call it, we have an economy that's still chugging along, interest rates that are a little bit lower, and we maybe have the dollar be falling too if that happens. So I think it would be really good news for U.S. stocks, and there's reasons to be optimistic. Now, that's not to say the new year will bring some turbulence, some volatility.
Turbulence.
Around the world, there are challenging times, to say the least. So, yes, I'm excited about the new world, but I'm also just cautiously optimistic with protection with my equities.
All right, thank you. Joe Decay, great to see you. Rick Ducat as well. Good to see you both. Coming up, the disruptors will focus on Tesla. Positive comments from Morgan Stanley and Cantor Fitzgerald. The stock's up over 3%. We'll hear more about it. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. All so you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab Investing Themes. 40 customizable themes, up to 25 stocks in just a few clicks.
$3.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
So I got 3. No, I had 6. So that's your support right there, what I got. We could go lower. Oh, yeah, I got the right one here. Okay, I'm going to add right here.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
285.
Actually, I'm seeing something from Schwab. Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they
Okay, I've added 6 to Hawk 2.
For taxes, insurance, and estate planning, all with low fees.
We're experiencing technical...
We're experiencing technical difficulties.
Schwab, a modern approach to wealth management.
We're experiencing technical difficulties.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
We're experiencing technical difficulties. I'm in SPX run, dude. I could have sold him. I should have sold him at 440, but I didn't.
Trading 360. I'm Nicole Penelides, live
I've
on
been
the floor of the New York Stock Exchange.
240 bucks, but now I've tripled down, so.
C3AI, and joining me right now, Tom Siebel is with us, Chairman and CEO, C3AI. Welcome back to the show, Tom. Great to see you. You have your quarterly numbers. The stock right now down just fractionally. It's been an incredible performer, up 45% this year, 47% in 1 year, and actually in 1 month up 50%. So what's been going on lately for C3AI?
Well, I think it's a story about an exceptionally large market. This AI market is large and expanding at a very rapid rate. And exceptionally rapid growth for C3AI. Last quarter, we grew 29% year over year, which is at or near the top of all public software companies. And I think importantly, we established a very, very important strategic partnership with Microsoft, okay, the largest enterprise application software company on earth. And Microsoft will now be selling all 100+ C3AI products through all of their distribution channels to all of their enterprises in all geographies, in all verticals worldwide. So this is huge. This is one of the largest partnerships of its kind, really, in the information technology industry, most certainly in the enterprise AI sector. And so this bodes very, very well for C3AI's future.
Yeah, it's pretty unbelievable, the rise that we've seen in the stock. And as you said, the expansion, the potential growth. You had your earnings, you had the beat, you increased the revenue forecast. Some great news also with modernizing the U.S. Army intelligence. And that's a big deal as well. That's something that we've talked about in the past. What What were you happy with in the last quarter in particular? And I know you're pushing off, I think, some of the profitability. What were you happy with in the last quarter that you'll continue in the new quarter?
Happy with the market expansion, happy with the interest in AI, happy with the way the government, defense, intelligence, and civilian agencies are prioritizing AI and putting this at the top of their agendas, both in the United States and in Europe. Happy with our relationships that we have with the hyperscalers, Google Cloud, AWS, with whom we go to market in a big way, and simply ecstatic about the partnership that we formed with Microsoft, which is, I think, the most significant partnership in the enterprise AI sector.
Yeah, I want to hear more about that. Can you just tell us about that a little bit, Tom?
So let's think about, in September we had order of 100 salespeople, Nicole. In November we have order of tens of thousands of salespeople around the world selling our 100 or more enterprise AI solutions in every geography, in every vertical, in every industry. Their salespeople get quota compensation. They get compensation. They get quota relief. This is huge. The largest software company in the world is now, elected C3 AI as its primary enterprise AI solutions. For C3 AI shareholders, this is huge.
And I also think, I love how you acknowledge, too, what's been going on in government and that they're using more and more AI. I mean, they'd be missing out if they weren't, right? When you think about the U.S. government and how on point they are, could you tell us that? I mean, are they leading? Are they making very smart moves when it comes to AI?
Well, I think what we see in the new administration with Elon Musk and others, I mean, this is all about leading information technology. It's all about cyber. It's all about AI. AI for modernizing the military, AI for modernizing the intelligence community, AI for modernizing, driving costs out of, and delivering higher quality government services into the hands of more
Come on now.
Constituents. So AI is very much at the top of the government agenda. It is absolutely at the top of the private sector agenda. And
we can drop down another drop, but I really don't want to do that. I want to hold this
to address this.
Well, that's a shoulder line there too.
Very rapidly growing market opportunity.
When you have 7 quarters, consecutive quarters of accelerating,
I'm gonna clean this chart up in a second.
Can you quantify the demand for AI? I mean, you talked about how AI is just such a priority and the expansion that you're seeing for AI. Great to see consecutive quarters of growth like this. Tell me a little bit more about the demand.
Well, enterprise AI is predicted to be this is a $1 trillion addressable market.
$1 trillion.
Generative AI is predicted to be another $1 trillion addressable market. I mean, this is huge, and so this is the largest market we have seen in the history of the information technology industry. C3 AI is a leader in that space. We were a pioneer in this space.
Okay, we're at a double bottom.
The original enterprise AI company beginning 15 years ago.
On the daily, so this has to reverse here or I get out, take a little loss.
It is happening, and we're well positioned to take advantage of it.
Yeah, and I love how you acknowledge what an inflection point it really is in enterprise AI, this partnership with Microsoft, and that's certainly something that differentiates your company from all the rest as you go from hundreds to tens of thousands, sort of getting your products and getting your name out there around the world. How else would you differentiate C3 AI from some of the competition? Because I know you work together, but at the same time, you have to differentiate your company, right?
C3 AI is highly unique. So rather than offering silicon like NVIDIA or offering like infrastructure like Azure does and others excellently, or offering piece parts like, things that you can build applications with like Palantir, or componentry, important componentry that I think companies like Databricks and Snowflake and others provide. We take all of that stuff and build turnkey solutions that solve real business problems. Optimizing the supply chain, optimizing the demand chain, predicting demand, identifying fraud, operating, hypersonic swarms for the military, predictive maintenance. So we take all of those solutions that these other people in the AI ecosystem are providing and deliver them to our customers, be it Dow, Cargill, or the United States Air Force, as a turnkey enterprise solution that they can install and very rapidly accrue, very substantial economic and social and environmental benefit. So that's what distinguishes D3AI from everyone else in the marketplace.
It's great to see you again. I always love that you're able to come on the show. I know yesterday the stock moved to the new high of 42.94. It's just pulling back a bit. Still a winner for the week, for the month, for the year, for the 1 year, and so on and so forth. Great to see you. Congratulations, and we'll see you again soon. Tom Siegel, CEO of C3AI. Thanks. Coming up, George Silas with our disruptor. We'll be right back.
Who? Well, we got a fallen wedge out of a snake. I'm gonna go get my coffee going. This is not looking good. I gotta hold this or I just get out because I ain't gonna sit here and watch this go to 25 cents or $1.25.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick.
I just won't do it. I refuse to sit on this one. It has to hold here.
Monday through Friday, 3 p.m. Eastern.
Anthony.
Available anytime, anywhere,
Blanket.
on any device for free. Only on the Schwab Network.
Blanket.
Welcome back to Trading 360. We bring in George Silas for our disruptor. George.
You look hot today.
Yeah, Nicole, Tesla.
George.
Obviously, the stock is...
Get your hands out of your pants.
Since the election, and we're starting to see some of the analysts come on board and reaffirm their bullish stance on the name. And today, another one, Morgan Stanley, increased their price target on Tesla to 400 from 310.
Morgan Stanley.
Getting on board with what's really going on with Tesla. They maintain an overweight rating, and some of the catalysts. I mean, there's a tremendous number of catalysts we could point to. For
What's
Tesla,
the big one, though?
But one of the things they denoted is that even tariffs might benefit Tesla.
Tariffs might benefit Tesla considerably.
Autos that are sold in the United States.
I've never thought about that.
Landscape. So if there is
He doesn't need them
tariffs on an incoming basis,
tax cuts. The other companies do.
Year, that actually might help Tesla tremendously. The other thing is, with Tesla, the aspects of autonomous driving technologies is not necessarily.
Oh, Rob, that's a good entry.
Introducing the technology in their own vehicles, it comes down to them developing the software and licensing it to other automakers as well. And I think the Trump administration is going to place a lot of emphasis coming into next year on making sure that the United States is the leader in autonomous vehicle technologies, and the forerunner in this particular space is Tesla.
I'm going to put my keto bread
Yeah, I also
in the
thought
kitchen.
It was interesting because I actually was looking at the call from the Future Fund, Gary Black, this week.
Rob's got a good entry.
On board as well, and it's nice to see Adam Jonas, for example, from Morgan Stanley, and you noted the $400 target. Granted, we're at 401, but it just shows that Morgan Stanley's paying attention and that they believe that it's fairly valued, around these levels. So that
Yeah,
does
tell
show
my boss,
optimism.
thank you for the bonus.
Probably one of the reasons we're seeing the 3% move today. Gary Black also came on board. I mean, he raised his price target by 27% to 380.
Thank you for the bonus.
On Monday, and part of that was the
Next
increased
year,
conviction
trip
that Tesla will in
to Mexico.
fact launch a $25,000 to $30,000 hatchback model. and that there is a big car market out there that they could tap into if they made
I appreciate
that
it.
happen. Final quick thoughts?
Yeah, I think it's important. I think if you consider the price points too, the autos, obviously Tesla created or instigated a price war. Prices have come down for EVs. I think the auto sector itself, prices have been relatively easy, at least in the last year, with some discounts now. But the other thing is that Chinese automakers would have competed.
One of my customers gave me a $250 bonus, and I said, next year, trip to Mexico.
Elon Musk companies, even Starlink has become.
It's a lot of stress being a project manager.
Be surprised if we start seeing other technologies like a Tesla phone. And that's
Tesla phone?
That's maybe why we're seeing this particular name really trade at lofty valuations.
I heard
if you
Tesla
were to
phone.
just value it based on auto sales, which again, I don't think the market is looking at it just from an auto sales standpoint.
All right. George Still, it's great to see you. Thanks for the conversation here at this disruptor, and that is Tesla today. Thank you. Coming up next, let's have our 360 round and dive into those Oracle numbers.
They have a Tesla phone.
Double miss, an outlook that leaves us looking at the stock with a down arrow after the earnings. Let's see what our panelists have to say. We'll be right back.
Huh. Probably has it to where the glass ain't up in front so it'll break like all the others. There's a crack right there.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab
I'll buy a
Trade
Tesla
Desk,
phone.
our team of passionate traders ready to tackle
It's
your
Android.
trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat.
That's interesting.
Brilliantly with Schwab.
You might not even have to buy a case for this.
Download the Schwab Network app and join us to follow all the market.
Yeah,
trends.
high-density
Schwab
rubber
Network is
to
available
absorb
anytime,
falling
anywhere,
shock.
on any device for free. Schwab Network.
Uh-oh.
Believe me, when it comes to investing, you'll love
275.
Carl's Way. Take a
Break
look.
out. Falling wedge.
Carl's Way is the best.
Randy.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes.
I didn't
and
miss
also
it.
manage some investments.
Let's move on, shall we? No can do.
I'll get out here.
It's not done yet.
Where are you going?
It's not over yet.
Schwab.
It really becomes bullish if we
A
break
modern
the
approach to wealth
resistance
management.
of the 1, 2, 3.
Forward,
Find the next trend.
from every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. It's time for our 360 round. We're talking Oracle after the earnings that came out after the bell yesterday. And so our panel is ready. Derek Wood, Senior Analyst covering enterprise software at TD Cowen, and Angelo Zeno, Senior Equity Analyst at CFRA Research. Thank you both for being with us. Derek, I mean, there's no doubt Oracle was a darling, then it was out of favor, then it was back in a big way, hit new highs this week, in fact, and has been a great performer, 1 year up 55%. But the double miss and leaving some uncertainty with the outlook, as Bank of America says. How did you feel about the quarter and the outlook, Derek?
Yeah, I mean, I think Oracle still is back. There were big expectations going into the quarter. The stock was up 35% since the last print.
Let's go,
And really, it was
Rob.
teed up to have a perfect quarter. And there was one thing that we had seen that would maybe cause some noise in the numbers, and that was foreign currency. Foreign currency definitely became.
We're at resistance now, so
that likely had an impact on report.
this is a good idea to get out here if you want at the 63. And we got the 200 and we got the 200 EMA. So I grabbed some more of these. I hope I did the right thing. $3.10. That Nicole, she's one hot chick. I would have a hard time working with her without being flirtatious. So come on, baby. Come on to my house.
Date is a company that kind of provided some ambitious forward targets back, a couple of months ago through 2029, fiscal 29, and
so Angelo has been positive on this name. You talked about CapEx spending doubling what it was in fiscal year 24. So, Derek, what kind of targets do you have on this name? Right now it's at 176. It hit a high of 198 this week. It certainly has been very volatile this week.
Yeah, we have a $210 price target, which is
well, the technical difficulty is
26 EPS forecast. It currently trades at 23 times. If you look at where Microsoft trades, Microsoft has been trading around a 30x PE multiple for some time, and that's an organically growing business of around low double digits, 12, 13%. And if you think that, Oracle is going to be moving into mid-teens growth over the next...
Go grab my water and I'll be right back. We're retesting the resistance of the 1, 2, 3.
On the PE multiple.
Okay. What's interesting about Oracle, what do you think the strength is here for Oracle in comparison to the competitors, Derek, as you think about the opportunities for getting to this $210 price target? What's going to drive the growth quickly, Derek?
Number one growth driver, OCI, which cleared 50% growth last quarter, beat our estimate by 4 points. It is accelerating. The main workload that OCI is doing right now is training AI models, large language models for company. They want to deal with Meta. Recently, they're helping OpenAI and all the major foundation models because they have the best architecture, the most scalable and the most cost performant for training large language models and rolling out superclusters. They announced a 65,000 NVIDIA supercluster data center, which is a huge breakthrough, and we just think they've got differentiated technology versus the other cloud vendors when it comes to AI training.
All right. Thank you for that. Angela, what's your target and what do you see for Oracle in 2025? They sort of got back to their leadership position. Tell me a little bit about your guidance for 2025, the drivers and the price target.
Yep, so 12-month target price, we actually did increase it to $189 and basically shifted to 2026 estimates where we apply a 25 multiple on that estimate, and essentially we look ahead here and we do see taking place here. What we don't like as far as and why we have a hold recommendation for Oracle, the biggest reason there is this is going to require an immense amount of capital on their side of things. They actually had negative free cash flow about $2.7 billion on $4 billion in capex this quarter. But the capex is going to, the free cash flow is going to come back significantly here in the current fiscal year versus the prior fiscal year, given the need to double capex. But we think the capital intensity is going to be extremely intensive here over the next couple of years to fund that growth strategy out there. And then when you look at the balance sheet out there with a net debt position north of $75 billion out there, we think that's going to limit any type of multiple expansion north of 25 times. So we like the growth story for this company. We like the fact that they've moved
3 with black codes on the SPX.
Oriented type of company to one that actually now
I'll be right back.
Growth driver attached to it with their infrastructure as a service business. We see opportunities also on the application software side of things. But kind of all said, for us, it's more the valuation side of things where we see limited upside, given kind of the CapEx needs in the future to fund that business.
All right, thank you both. Thank you for making Oracle so exciting today, and seeing opportunity in a sell-off here as well. Angelo Zeno, CFRA Research, Derek Wood, TD Cowen. Derek, Angelo, thank you. That's going to do it for us here on Trading 360. Thanks for being with me. Download the free Schwab Network app. It's available in the Apple App Store. Tune in 24/7, schwabnetwork.com. I'll see you at 2 o'clock for the watch list. Fast Market is next.
Join me, Oliver Rennick, alongside Schwab Network options experts as we explore the second derivative. Game on, the brand new limited series to take your trading skills.
I want 100% on this trade, and I want it now.
Network's YouTube channel now.
Boo-doo-doo.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Cut the cord on the way you get market news. It's Market on Call.
273 average.
Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ah. Do-do-do-do-do-do-do.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading.
Look at Tesla.
And sharpen your skills with immersive online education
No, we're here in a second.
crafted just for traders. Also, you can trade brilliantly.
Here on the Schwab Network, I'm Tom White. We've got a great lineup for you today. We'll have some discussions on the markets. They're flat. And then some option strategies. We're going to cover Tesla, which is up over 60% this year, near all-time highs. And PayPal, which is up over 45% in 2024. And then like Folio, they're going to break down consumer sentiment data in Block. The fintech stock has seen a resurgence over the last couple of months. That's probably linked to those gains in Bitcoin. But now let's take a look at the major indices, which I don't even know if you need to look at these. These are all basically around the flat line for actually higher than S&P 500, Dow, NASDAQ, and the Russell 2000, leading to the upside, only up about 0.1%. To help me break down the muted market action here today, let's bring in my co-host, Kevin Hinks. Kevin, It seems like everything's
Kevin
changing on
Hickey.
the CPI report tomorrow, but it's pretty spectacular after the move
Kevin
that we've seen
Hickey.
on a daily basis over the last month since probably the election.
Yeah.
We're getting really muted days here over the last few sessions.
I think the market surged after the election, and now it's trying to figure out what to do next.
Right.
It's kind of resting up here and making small failures along the way. I don't know if tomorrow's number means anything, Tom. And that's hard for me to say for a CPI data point. I'm not sure it changes the Fed. If it comes in, remember the expectations are for 0.3, 2.7 on headline, core 0.3 and 3.3, which is flat. I don't think if those come in anywhere near there, even near, I think they go in December. Now, December 18th, like I said yesterday on yesterday's show, that's when things get interesting.
Right.
Because if he does a hawkish cut and comes out and hints to a pause or does anything like that, then things get interesting for the end of the year or the beginning of next year. So I'm not sure tomorrow's data point means as much as we think. It may move the market, it's not going to move the Fed.
Yeah, and some of this consolidation, as you mentioned, the rally, the 27% rally we've seen in the S&P 500 this year, maybe we need some consolidation, but it just seems like even on pullbacks like we had yesterday, there's always dip buyers out there. But that's the big data point, the last one that we're really going to look at ahead of the Fed.
We're in the Fed quiet period too, so there's nothing there. You're not going to hear any comments from them.
Yeah.
So maybe the Wall Street Journal will give us a little heads up. The Whisperer.
Yeah. Nick Timrose. We'll have to continue to watch that. All right, let's expand this conversation, bring in our next guest. That's going to be Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. Nate, getting a little bit of consolidation here ahead of that CPI data. What's your take on this? Because it seems like, the gains might already be in for this year. A lot of the data points are done. We got the Fed next week. Those might be the only catalyst, right?
Well, I still think the potential for performance chasing exists until the end of the year. In terms of consolidation, if we just, and maybe it's not fair, but I'm going to take the S&P 500. It touched 6,000 basically on November 8th, post-election there. And we're not even 1% above that right now. So by that one measure, you could say, hey, we've been consolidating some. There's definitely signs that the momentum, animal spirit type money is very active in the market, though there may be some signs of exhaustion coming into this week basically on the NVIDIA news that China is launching that anti-monopolistic probe into the company. I was looking at, one of the poster child momentum stocks, AppLovin, was down $70 on no news on Monday. And it's that type of volatility. I think that if you're a trader in this market and if you're a momentum trader, you need to recognize that volatility is here for those types of areas of the market. Bitcoin as well is a little bit of a yellow to orange flag, meaning we got the push above 100,000 for about 18 hours before it went back under 100K, which tells you maybe it's a little bit exhausted there. I don't have time to go into MicroStrategy, but that chart went from an 85 RSI down to 53. MicroStrategy has cooled off. So I just think that maybe some of that consolidation has been happening. Having said that, I think that the bull thesis still remains intact. And regarding tomorrow's CPI data, I'd say yes, inflation is sticky or stubborn, but not re-accelerating, at least not yet.
Not re-accelerating, but just to expand on that CPI and inflation data, it's not going down anymore.
Nope.
Right?
Nope. It's plateauing or ticking slightly higher, but it just appears, and a couple Fed speakers that I pay a little more closer attention to, they're talking about the pressures for next year that could be lower on some of these inflation numbers, and they think they're on the right track. And remember, if you're really trying to negotiate a soft landing or no landing, this is what you got to do. You got to stay ahead of the curve, lowering rates, not be behind and trying to catch up and wait till things slow down. Because a market that starts to slow down, as you know, Tom, it's hard to stop it from slowing down because it starts to.
Well, what's your answer for it
I
then?
think that's what Jerome Powell's doing. Again, I'll say this for the 100th time on this show. He's the most effective Fed chair in my career.
Oh, God.
Yeah, and maybe
He is not.
more transparency from them now
Yep.
than we used to with previous members of the Fed.
He's behind the curve, you idiot.
That's probably part of it. We parse through every single line that he says and take it to heed. But it's the press conferences.
Yeah.
It's the set that we're going to get next week. Economic projections. Do those change next week? That might throw a little bit of volatility in.
They'll definitely change. I mean, how much they'll change, how drastic, and what'll be the reaction. I just think Jerome Powell's trying to bracket the Fed funds rate to be mildly restrictive as interest rates go, as the overall inflation rate goes lower.
Yep. And Nate, we had some other, probably optimistic, just like the markets are optimistic right now. NFIB was above expectations. This was the biggest move up in 44 years for that 101.7 in November.
Blake it.
And this is probably on the back of the Trump winning the election. The business community is pretty fired up.
So this is what I'm thinking. I'm in this trade at 573, 273. We have a fallen wedge out of the snake with a double bottom for the day low. So if we break the 63, that's all we got to do as things starts to move on up. And we got a 1, 2, 3 right here at the 200. So that could be a good exit idea. One, two, three, four, almost. Yeah, I'm going to count it as a 4. So if we break the 63 here, there we go. Now we're talking. Duplicate. Timing's perfect almost. Not always, but okay. Remove. My hands are sweating. I'm at $3. 310.
A higher dollar. Oracle said that kind of caught them a little bit off guard. If you look
We're
at the
closing in on
the
resistance.
impact, what was the word that they used to describe
it's a
it?
1, 2,
It was,
3, 4.
You may have it on you, Tom. I can't remember, but their RPO, the remaining performance obligation, their data center AI cloud infrastructure revenue growth of 50% or so. So the demand is obviously still there, which is good from a that pillar. It's not just AI, it's quantum computing. There was news on Alphabet coming out with their quantum Willow chip that basically they said can do a computation that takes 5 minutes versus not enough time in all the universe to handle it from the previous model. So there's all this innovation pillar within the bull story that's going on. I think Oracle basically reinforced that that's still intact. There's still evidence of that. I think it is moving a little bit out of the NVIDIA only type stage. If you look at the stocks, they're basically flat to down over the last 4 months. And so, I think that these earnings reports, and by the way, Oracle had been running into all-time highs heading into the results. Look at MongoDB, beat and raised, stock down big. Look at C3 AI, was at 48 yesterday in after hours, opened around 36 today.
Damn it.
I think that just tells you with this momentum trade, there is that potential kind of a mean reversion, sell on the news type reaction. So again, if you're in this momentum space, you need to be a little bit nimble and be mindful that at any point you could get one of these pullbacks just on mean reversion.
Yeah, and maybe Toll Brothers is a perfect example of that, because that was a pretty good report. MongoDB, Kevin, we talked about this yesterday with George on the show, and I see the headline numbers, I see the guide higher, and then I'm like, oh, the stock's going to be higher because it was
So on Toll Brothers,
report, a really good report.
well, I'm going to have to figure out what to do here.
Call and things turn.
There's a lot of stories going on. Nathan was just mentioning, Sundar Pichai taught us a new word today. Septillion. That's what 10 septillion years.
God.
Is what it took the leading supercomputer to do that the Willow quantum computing chip did.
There's a new one on watch, RGTI, for quantum computers.
And less errors.
Yeah.
That's why the stock's up
Incredible.
4%.
Yeah, exactly.
Leading communication services. But I think that goes back to your theme here, Nathan, is that there's individual stories out there that might move individual names more than what we're seeing with the consolidation in the overall indices, right?
Yes, and I mentioned this last week on the show.
This ain't gonna look good if I don't get.
Echoing Jeff Bezos's, basically euphoria around where we stand right now in this innovation cycle. It feels a little bit like the .com type of excitement that's out there, and there's multiple channels for this innovation and potential to increase productivity, bottom line, all that stuff. And then also on the, the post-election rally here, it feels a little bit like 2021 in the sense that all this stimulus was dropped on the economy, and, there was all of that, there was a lot of pockets of bubbles within SPACs and everything else, but it feels like we have a little bit, not to those extremes, but a little bit in the ingredient bowl of both. And so, that's where we stand. So you have to respect the price action, and that it feels like it's just going exponential in terms of this innovation and its potential to have an impact on the economy. So we just have to be humble a little bit and be open-minded to the potential for the
Yep, we'll continue to parse through this stuff. CPI data, it'll be important tomorrow. I
do think it's important. I just don't think it'll change the Fed, is what I'm saying.
Yeah. It's over 85% chance with CME, according to CME FedWatch tool, that they're going to cut a 25 basis point next week. Even though maybe it's not warranted with all the data and stuff that we have coming. I think that 4.2% tick up on unemployment rate, that kind of solidified it.
That's what I said on Monday.
Yep.
I thought that was the number.
All right, let's take a quick break. We come back, we're going to take a look at another name that's outperformed, and that's Tesla. EV maker stocks now up over 60% this year. It's getting close to those all-time highs we saw a few years ago at about $414 a share. Stick around, we're talking Tesla when we come back.
There it is, the last one. Dang, I don't know what to do now. Go ahead and add, I guess, and hope.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend.
Okay, let's see what happens here.
Anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Knock, knock.
224 average.
The number one hit maker.
Thanks for swinging by, Carl.
No problem. So
I got 224 average now, and I got a lot.
Maybe some drums.
wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
That was bottom line support.
Oh, I gotta take this, Carl. It's Schwab. Have a choice in how you invest with Schwab.
Welcome back to Fast Market here on the Schwab Network. One stock that's been in the news quite a bit over the last, I don't know, week, year,
Jesus.
5 years.
They're not going to
Is
give up
Tesla.
on this.
Stock's up about 62% so far.
I said this ain't go back to 125.
A Trump win. Elon Musk put a bunch of money behind the candidate. He won, and I think a lot of investors, Kevin, are pretty optimistic that this is only going to be a benefit for Tesla.
Well, it certainly feels like a couple good things are happening. Number one, I think that
Let's see if he says the right
Musk
shit.
have a say in things, or his opinion will be listened to. Number two, I
There
think
you go.
the regulations and potential hurdles for robotaxi or full self-driving in general could get eased. Could be an easier path going forward. I think, let's put it this way, I think all the things that he has interest in may get more attention than they were going to in a different administration. And like I said, it's just, I don't understand how any administration, I don't care what party you are, could not embrace Elon Musk
Yes.
going forward.
Well, if Trump didn't win and the Democrats...
He might have been jailed.
I don't know.
I'm joking.
Yeah.
But I mean, he would have been heavily scrutinized.
Right.
I mean, it's incredible how they. I mean, this is the Thomas Edison of our generation. Like him or
Exactly.
dislike him.
Yeah.
He's the Thomas Edison of our generation. Yet, I mean,
The Biden administration's all about science. Why in the hell didn't they embrace Elon? I still do not understand it. The guy was a liberal like me at one time, and I couldn't take it anymore either. Because I don't support human trafficking. And there's no way I'm going to be part of that party.
And this name, it hit those all-time highs of about $414 3 years ago, and it looks like, you know, I don't know, technically it's overbought, but that doesn't seem to matter to investors at this point.
Yeah, it certainly falls into that momentum category. You know, it's not, it didn't actually hit an all-time high today. The all-time high is 414.50. That's from November of 2021. That's when we kind of peaked out on that whole optimism, or you know, that was going on and went into our bear market in 2022. But yeah, you know, it's hard to be bearish on a name like this when essentially it's like the president of the United States is on the board of your company. It almost feels like that you know, it's just that type of relationship, that how do you want, or why would you want to bet against that? Even though the forward PE is 156, even though Adam Jonas may be bullish on it, but he raised his price target to below where it's trading right now. Speaking to that, it just speaks to that valuation, how much it's gone up. The stock was $250 prior to the election. we're sitting at 400 now, so let's take a step back and just appreciate how much it's appreciated. But having said that, yeah, it just feels like it's got kind of those green shoots behind him with this new administration coming in. Does that translate to the bottom line? We're not going to know, but for right now, that optimism is there.
And Kevin, you know, there's a lot of traders, investors out there that look at, you know, the forward-looking PE, the PE ratio on this company, and it's not priced as an electric vehicle maker. Maybe it shouldn't be at this point.
Yes.
And there's always a battle between bulls and bears in this name, but this has triggered something else here, where, as Nathan puts it, animal spirits are in the stock right now.
Yes. What is the valuation of a robo-taxi company? I mean,
we don't know yet.
Right.
Yeah.
What is the valuation of a full self-driving company?
Yeah.
Right? What I mean by that is, I think trying to link this just to an EV car company is the right, you're not looking at it through the right lens. And the fact that some of these far-reaching goals may be coming more into focus or getting closer might be what's driving this stock. Because Kathy Wood came out and said, Robotaxi could be more than half their revenue soon.
Right.
And the quicker that happens, the quicker this company turns into a much bigger entity. I don't know. I don't cover it like that, so I don't know.
Right.
But certainly it looks like all those things that were way on the horizon, much like his pay package, are closer to reality. Remember, there was a time when his pay package was way on the horizon and never attainable.
Right. And it still isn't yet, but we'll see on that. But I think it's been proven Waymo, Google's self-driving unit, it's already working.
It's going to Texas, its third state.
Yep, and then Miami after that.
Oh, I'm sorry, no, it's in Texas.
Yeah.
It's going to Miami, sorry.
Right, yeah, so it seems like that works. But Nate, when you look at this one from a trading perspective, how do you want to look at it? I mean, you know, the RSI is about 76 on it right now. It looks a little bit overbought, but hey, who's to say that it's not going to, you know, get back up to those fresh all-time highs?
Right, yeah. Look, I will mention this also from a technical perspective, and I am a CMT, is that, you know, when you go into a breakout mode like this, when you're a well-defined uptrend, it's more of a breakout uptrend, that RSI level really moves up to 80, that you can move up your oversold level up to 40 and 80, and, you know, like I mentioned with MicroStrategy, when it topped out, that was 86.
Break it.
I've seen 90s. That's pretty rare, but I've seen that happen.
All right, I'm
so
green.
76. Is it warm? Yes.
Is it warm?
Hot? You know, that's kind of, you know, up to the trader to kind of determine there. I would be looking on the charts for some type of a bearish near-term reversal pattern, dark cloud cover, spinning top, you know, some of those types of names, or bearish engulfing candle like we got in MicroStrategy. But
Dark cloud
I
cover.
don't see that on the charts yet. It just continues to kind of melt up higher here. So I have an example trade that if you want to go with the momentum, and we know that there's that saying out of technical analysis, don't fight the trend is your friend, then I was providing an example of doing a bullish strategy, slightly out of the money, a bull call spread, buying this Friday's 410 call and selling the 420 call against that. We've got a debit of 250 on the screen. This thing's been moving around a lot. It's closer to 340 right now, but that's roughly at if you can get it at 250, that'd be, you know, 3-to-1 versus a 2-to-1 in terms of your potential payout if
I'm not down about it all now. So he just mentioned something that's about trading stocks. So I'm listening to this guy talk, and all of a sudden I hear him say dark cloud cover. And I said, what the heck is that? So I want to look that up. I want to see what he means by dark cloud cover.
Getting a mean reversion pullback in the momentum.
I'm up on this trade now.
Any day, you can just come in, and for on no news, the market doesn't announce it. It doesn't send you an email and say, "Hey, we're gonna mean revert." Those things can just kick in at any time. Furthermore, next week we got the FOMC meeting, which has the potential to create volatility. So the way that I look at a momentum trade like this, a speculative momentum trade like this, which is risk defined, is that I feel like my ability to forecast 3 days out is better than 10 days out.
Let's break this one down. December 13th, a weekly cycle as this expires this Friday, so just 3 days to expiration. Buy the out-of-the-money 410 call, and then sell the 420 strike call against the bullish.
There we go, baby.
Vertical. As Nate mentioned, we got 250 debit on there.
I mean, I'm looking pretty now.
Earlier, now trading just above $3, but that debit you pay on it.
I got 18 contracts. I'm gonna sell them.
You break even for $12.50 to the upside, not out of the realm of possibility. The stock did hit a high of.
I've got a double top. I've got a head and shoulders. We've got a triple top. Triple top. Let's try the triple.
Call vertical, right? If you just bought the 410 call, that's going to cost you $8.10.
One more candle up.
So offsetting some of the costs.
I just think you can easily come back down and hit that
Thinking it's gonna
63.
go higher, but maybe I want to offset some of the risk on it. Instead of paying $8.10 for that 410 call, why not sell a 420 against it and collect $5? That'll reduce my risk by that amount also.
The most important part of this trade is whatever the debit paid is your risk on this trade. So you have a chance, where it's trading right now, it looks like about 3 1/4 level. You have a chance to triple your money if this momentum keeps going. And the momentum, like
Shut up, Hickey.
is
It's my money and I need it now!
It's my money and I need it now! It's my money and I need it now!
It's your money. Use it when you need it.
Dial 1-888-6565-7124 and ask for Washboard Jim and donate 10% of your proceeds to a good cause.
Out of it early, right?
Absolutely. This is we talked about those earnings reports and how there's been some sell on the news kind of indication there. There's been some yellow flags in terms of the momentum waning. And so therefore you have to stay nimble. It's not a profit till you book it. So certainly, we've been, this momentum trade, which Tesla is part of it, it's Palantir in the AI, it's some of those utilities plays, it's some of the quantum, some of the, all of that stuff coming together, Bitcoin and everything else, that you have to respect that there's going to be higher volatility, which means you could get some of those big pullbacks. And that's the reason I went also with the spread, is that if you buy the stock, if Tesla was at 380 on Friday, I don't think anybody would blink. Just because of mean reversion. So by having this strategy in place, then you know what your loss is, as Kevin defined.
Yeah, so good look at out of the money call vertical. That's the big thing. You do need the move on it. That if you pay $250, break even for $12.50. So
happy holiday.
All right, great discussion. Thanks to Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research, for joining us. We're coming up after the break. We're going to be joined by Megan Brantley from Likefolio for a look at sentiment data in Block. The fintech stock has rallied to 2.5-year highs this month and up about 24% so far in 2024. Stick around.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than
How did
Schwab
I get bar
Network.
chart?
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Cancer is a long journey. It's overwhelming, but
Let the good times roll. Let the party
good times roll. It give me a $3. Predict it. 1, 2, 3. $265. Let's break it. You can get out here. You can get out here. The good times roll. $285. Break it. You're at a hard resistance. Take what you want. $295. We just hit $3. Up in the air. But you take that resistance and break it. Break it. You're at the 200. Take that profit. Boom. I'm out at 3. And I got a little left. 3 white soldiers. Good time roll. Yeah. I'm out at 3. That's $75 times 19, 18. That's $1,350. And we're at 330, and I'm going to sell the other 9. Going to sell the other 9. Good times roll, yeah. Woo! Let the good times roll. Let the good times roll. Blake it. Woo! Let the good times roll. The good times roll. 370, baby. Woo, woo, woo. Okay, home. Yeah. Now that's trading.
The diseases are still there. They're not gone.
Oh. I'm sorry, honey. Right now I can't be depressed. Not when I just got out of the nest. I won the 2-bits, 3-bits, and she just kept on letting the good times roll to resistance of a double top yay. Magnificent. It's time for the grade. I can't help myself. Out at 3 and 330. Whew. Damn, that's good. I can't tell you how good that is. It's good enough to have a beer if I drunk, but now I'm reading the Bible. A B? God. You're so strict. You ought to see the sweat on my hands. Woo. Wow, that was cool. I figured the music would give me an A. Yes. Hawk 2. La 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 la. The hardest part is to stay in the trade. It really is, but I've learned over the years, man, every time I get out, 95% of the time I got out of a trade, I regretted it. I stuck with the trade. I kept adding on. I mean, it's a scary thing to do. People that understand that, especially if you're new, you just kind of go, shit, man, I can't take no more of the loss. I got a small account. I mean, I had some money in this one here, but I just didn't want to give it up that easy. So I made it clear that I don't want to see any negativity about that CEO getting shot and killed, because I don't like the rhetoric. Especially when it comes to someone dying. If you didn't, just the thought of rousing people up, copycats, people trying to dress up like him, I'd take every one of them and slap the piss out of them. Our youth would, but today's youth won't. We should take guys like that and put them in Fast Night Park and ask them, what'd you say? But if you try to do that anymore, people settle. They don't settle with fists, they settle with guns. Now see, any gun law out there would have not stopped this guy getting that gun. He did it on a 3D printer. There's no way, you know. Can you make it a gun on a 3D printer? I mean, give me no tracing, no nothing. So we're coming back to support. What was resistance, 1, 2, 3, now becomes support. So if I was to take this trade again, I'd get in right now. But I'm going to take a little break like well stated earlier by Magnificent. I mean, you had 3 or 4 successful trades. Later in the day, you know, you can get burned. Yep, I saw it. He's a good looking, I mean, he had a nice looking body on him, but he had a bad back. I mean, he could attract women. I don't even think I've ever been that tight. I mean, I looked good when I was younger, but I had muscles on the back of my back and big neck. I want a piece of him. Somebody will get to him. This is a bull flag. You draw it up like this. I'll show you what a bull flag is. No. Yeah, this platform is not like it used to be. Something's happened here since that last update. See, that's called a bull flag. So it could break out again real easy. This is a real strong, especially when you have extensions like this on the flag. You had 3 black crows. And then you had these 4 engulfing candles, soldiers. And then you come up and but that's called a bull flag. Bull flag, big extension, then a consolidation. No, there's something there. That don't look like a bull flag here to me. Bull flag chart pattern. Jimmy doesn't like that one. He likes this one here. Jimmy likes this one here. Now this is on a downtrend. There's a difference between a bull flag and a bear flag. Let me show you the difference here. If I got it on here. Yeah, here it is. You're coming from it. If you're coming from the top and you're coming down, that's a bear flag. If you're coming from the bottom and then you have that position, that's a bull flag. That's a descending triangle symmetrical flag. These are Darvas. These are kind of bull flags. But I would have definitely drew them a little bit different. Here's your fallen wedge. Here's a Darvas box of consolidation. And then there's the bull flag. And that's what we had. We had a fallen wedge. Fallen wedge. And then we had the double bottom. There's a little sell-off. So if this breaks the 200, we'll double top, and that's when you want to jump in the trade. It's a bull flag. It could break out pretty easy, but we got to think about the market conditions. But this is definitely a breakout. See, 1, 2, 3, boom, baby. 1, 2, 3, 1, 2, 3. Wubbits, 2 bits, and a freebie. Wubbits, 2 bits, and a freebie. Rob, did you get out of that trade? Green? I'm not in Tesla now. I sold it. I still have my shares. It's definitely bullish. Yeah, take a deep breath, Jim. George!
On the balance sheet. And so that's pretty respectable, considering the market capitalization around $90 billion, and they're profitable on a net income basis. They earned about, $4.3 billion.
200.
Or
the
on
363
their sales last year, which is around 12%. So they're profitable on about 31 billion in sales. They earn, like I said, 4.3%, and that's accumulating to the net worth of the business.
Buy now, pay later use up 15 to 20% increase, said the CEO last time. And then if you take a look at their active accounts increased to 432 million last quarter. That was up less than 1%, but that actually reversed a trend where they were losing customers. And I've seen so many of these things online now for these deals where this Alex Chris is out there. PayPal cards with cash back on them, so they're trying to compete in that space also. So
is there an advantage to them over Visa and MasterCard over your regular debit card? What's the advantage?
Well, they're co-branded with Visa.
Okay, get ready.
They've got debit cards now too, so they pay more cash back. It's kind of like Discover.
We got Snake here.
More money for people to use them. I think it's the same thing. All right, great stuff. Thanks to George Tillis, senior market correspondent here on the network, breaking down PayPal for us. So, Kev, I looked at a strategy. The stock, as I mentioned, up 45%. Is parabolic. It's above its 50-day. 200-day is out of sight. That 200-day is down to $69. So we're trading about nearly $90 on this one. So I looked at a strategy that takes advantage of a move, giving myself a little bit of duration, going out to the January 3rd weekly cycle.
One more candle.
So giving myself roughly
one more, just a little bit more
on this one. And I'm going to buy.
Shut up. You're a little too loud. So here's your left shoulder. Here's your right shoulder. This is the neckline. So you want to draw a trend line on the neckline, and that tells you if you're bullish, if you're going to drop more. That's your neckline right there. So we drop below the neckline. There we go, right now. So at 160, I grabbed some at 160. $165 for the rest. Damn it. Fuck. What's the deal here? Inverse head and shoulders. The fudge. My lucky number's 401. Blanket. So far, I've been green on every trade. You get GME earnings coming out this week. Rob's been all over Tesla this week and last week. You stick to a trade. You got a good one going on, you don't leave it alone until it goes dry. And Tesla's going to be outstanding this coming year. It's got people up. One reason. We already know all the other reasons. Now we're at 140. Because, like Hickey said, he's the new Benjamin Franklin. I mean, this guy is amazing, and he didn't understand why any administration wouldn't embrace this guy. One, I think it's because he has money, and the government wants to spend your money. They don't want to spend his, which makes. If I was president of the United States, I would do the exact same thing with Trump that Trump's doing. And I'd cut regulations, and I said, Elon, spend your money. We're going to get it to where you're going to get this bonus of $125 billion or how many it is. I want you to spend all of it on the... We're going to make it to where you're going to get this bonus. The last administration didn't want him to have that bonus. Because they're not innovators. They act like they are, but all they're doing is getting their buddies rich. Dead and gone. Write the bill and forget about it. Damn, I'm at 125 now. I got to get in here and add. Damn, triple bottom. 125, 160. I ain't add no more. We got a quad bottom. Quad bottom. Quad bottom. Loading quad bottom. Randy quad. Come on, inverted hammer. Ooh, 110. Come on, come on, come on, come on. Hold it, hold it, hold it. Oh boy. No. I'm about to stop out here if this thing. It's gonna be a fake out. Bank it. Who loves quad? What's that whole poem go? If you can count to 3, you can trade with me. If you can count to 4, you just might make a little bit more. A little bit more. I want to break a lot. Now, see, I doubled down. I want to make more. I might have to get lucky.
A lot to like at Meta. Teen engagement with Instagram and Facebook Blue has been improving, which is
burning. Say goodbye. It was burning. Tears would cry. Don't say I don't know this broken. Oh boy, come on now. They cry, weeping. And yesterday, we're gonna break the snake. 64, amazing thing, amazing thing, amazing thing.
Audiences have made Moana 2 a record-breaking global phenomenon, and now it's the #1 movie in the world.
I thought you'd be bigger.
Boom, 2 weeks.
Right now we're bearish because we're out of that snake. But I still have some hope here. It's a quad bottom, gonna break to the upside. We're gonna get back in the channel and run to the 63 MA. I've been in trouble before, and I cost average down some more. I need about 145 to break even. Let's break out of the snake, for heaven's sake. I wanna wish you a Merry, Merry Christmas. Upstairs, Michael Jackson is having dinner with Elvis Presley. And all of a sudden, Richard Nixon showed up. Elvis was his buddy, turned him into a cop. And the stock decided to drop, but I still held on. We're back in that channel, and we're gonna break it up to the 63. I'm almost even. No, my name ain't Steven. We're gonna break out of the snake, for heaven's sake. 150 I could get out, but I'm sticking with it, no doubt, no doubt. It's not over till the Batman sings. So Elvis is telling Michael, and Richard's listening. Let's break out of this channel right now. What time is it? We got 7 minutes before the fat cat's come back. Doing a waltz. Okay, I'm still in it. We're at 125. Looks bullish to me. We got an expansion pattern. A lot of megaphones. We break out of that pattern, then we're good. I could add a bunch more, but I'm not, so I'm just going to leave it alone. I don't want to get too heavy. Through the branches of my magnolia tree, I pass the window cemetery. I'm sitting here watching the stocks go by. Sun as the light starts to die. Oh, my friends up here, I'm so glad you're here. Branches of that old magnolia tree out past the window cemetery. As the sun starts to die. Oh, my friends up here. Okay. I'm so glad you're here.
I said.
Yeah, and thankfully now slipping firmly. I mean, we're solidly in positive territory on a year-to-date basis, which has not been the case for the majority of 2024. At least felt like we've been sort of teetering around unchanged. But now for levels we're watching moving forward, I mean, there are still, I'd say, concerns because travel has been so hot. I mean, any pullback in that, I think, is, I mean, obviously a headwind for this name. But gosh, given the trends over Thanksgiving, we're coming up on Christmas, which is also a major, of course, travel period for these airlines. It seems like things look pretty positive as we go into the new year.
Yeah, and you know, when we kind of look at our chart here, we're kind of zoomed in, a yearly chart to look at some key levels here. We can see really all the volume is around the levels that are pretty far below where we are now. Around 14 is our point of control, another big volume node down here near 11. Relatively scant, though, in the near term, so we have to kind of rely on something else. Standard deviation channels can maybe help right now. So we have we're at our +3 channel right now, which is +3 standard deviations from our blue linear regression line, our line of best fit there. So you can see we're kind of between 3 and 4. So those would be the near-term boundaries, 1723, 1906 respectively here. But around here, this looks like a very significant support zone, 16, 16, 15, where we opened up after our gap up, an old area of resistance here. It's also the site of our 9-period exponential moving average. That's our solid blue moving average line there. We're so far above our normal moving averages, not much use in them, so perhaps a very short-term one.
1, 2, 3, 4, 1, 2, 3.
Really interesting longer-term chart.
That don't count.
I only go back like 5 years. I went back to 2013 here because you can see how far we've fallen. But when you kind of look at the recent action here, you can see steep downward trend line, more modest downward trend line, and a breakout now, breaking out above this very, very noticeable volume profile point of control. Next stop is the relative highs here, 1908, and then another high point right here, 2142. That's where the volume really starts to drop off as well.
And more in these names, not to discredit the recent momentum, but I do tend to zoom out. I mean, like sometimes to max available because I think it's so incredible that we traded at $59 a share and now trading at $17.47. I mean, even with this momentous run up. So I think a great illustration there and great worth noting here with American. And that's sort of Alex and I's joke always is that these airlines don't tend to move. And I know they've been moving lately, but I felt like for a while we were like American is perpetually at $14. It's not anymore, but it's sure not back to 59.
It's not to 59, but I think that chart puts in perspective though that the near-term chart shows, hey, there's a lot of positive technical momentum building.
I just love how she dresses. I mean, the girl's just got class when it comes to her dressing up. I mean, every day she comes in looking different. I dig that.
You need some upside to have a chance. It's a 20 call, so undefined profitability.
I'd buy her $50,000 worth of clothing if I was married to her.
Level set, you know, American, perpetually 14.
I wouldn't feel.
Going to.
I wouldn't feel bad at all giving her 50 grand. Say go out shopping.
But most importantly, it's risk defined, Jenny. It's got $100 in risk. So for 100, you essentially buy, unlimited upside over 20. With a break-even of 21, so you need help from the market, but you got some technical.
Dang, this thing just having me a hard time.
Sales, if it continues, you can see continued upside, and with that continued upside,
I'm tempted to buy 10 more contracts.
It gets through.
That'll give me 20.
And of course, this would put us through earnings. Earnings are January 30th for American. Actually, Alaska also has earnings. I believe it is same January 23rd, so about a week prior. So end of January, we'll start getting the next round of earnings season, which is always, of course, top of my mind as far as catalysts for these names. So speaking of Alaska Air now, Rick, I'm curious how this chart differs from the American. Very different
160, 125, and 110.
Different issues, but both also been in a pretty nice uptrend since really we hit yearly lows.
Yeah, kind of a different situation for this one. A pretty different feel for the chart.
You get in at 110, you could have got out at 120.
Kind of downward slide after
we're back to 110 here.
All the way back there.
The 110 again. mean, I'm at a good average now. Hawk 2. 126, 127, 126. Tesla, Jimmy? Damn it. Don't tell me it's up more. Who? What'd I say, 114? Hike. There's 130. I'm green now. Bake it. Shit. Hawk 2. It's one of them days. Megaphone, blanket. I'd get out even if I wanted to, but I don't want to. I gotta pay my phone bill today. Break it. Now we're bullish as long as we stay up in this upper projectile up here. Ooh. I'll be right back. I think I'm gonna get me a sweet potato cooked. Not working. Okay. AMD's at 128. Break it. We're at the 63 now. We did kind of budge above it, but I didn't get a full body candle above it. I got to get a full bodied candle above that. 63. Get one body up here, then we're good. Got to have a full body candle. That don't count. It's got to be a whole body. Something like that. Above the 63, and then I know I'm bullish, especially above this trend line. That'll really be bullish, and that'll take us up here to the 200 for sure, or this 200 EMA. Now I'm at 125. Well, was. There's the body, see it? That counts. Now I'm feeling better. I'm feeling a lot better. And 50. I don't think I'm going to play around much with this one. Although we are above the mega, and that was a huge engulfing candle, this could easily drop back down here. I'm up $500. I'm gonna, God damn. I don't know. I get out here at 150.60. Okay, I think. We're at an exit idea, so make a business decision. See how you hit that 200 and stop? I'm so glad I put this 200 on here. I got a hair in my mouth. Or something. I'll be right back. Oh, I didn't see this. This is Head and Shoulders. There's a shoulder line. So definitely if we build upon that, that's a Head and Shoulders. So it comes back up and touches the shoulder for the second time. It could break out. You're squeezing right now. You're above the 9. My average is 126. Fuck. Come on. Now we touch down to the top of the megaphone. 1, 2, 3, 4, boom, make a little bit more. Should have sold it right there, but I did not. I'm going to see if we can hold the 9. But we came back and touched the top of that number 4. So that's support. We'll know something within a minute or two. Break it. Break it. We're at an exit idea again. If you're in this trade, you can get out. I'm back up $500. Another exit idea here. That was nice. I should stop trading now. Almost got one of my clients convinced of paying for my trip to Mexico next year. So you're not paying me for this damn work. You better pick it up, baby. Years ago, I thought about being a project manager. The only managing I do now is my projects. These stocks are moving the most today. NVIDIA, Oracle, Tesla, Walgreens. The CEO of Oracle, she sounded pretty. She had some good. She's a good talker. So we got the 3-day rule on Oracle. Need my water. I should grab some of this here at 75, but I ain't. I'm gonna eat and relax. I just ate. YouTubers, you love my screen? There's the 3-day rule on how to trade a stock. After, earnings come out, I like to wait about 3 days and then take the trade and run it up. Right now we're building a flag. They'll consolidate. Okay, let's see what we got here. This thing just... We got another one. We could do it again. Let's clean this up. Start fresh. So get a fresh look here. Okay. We're going to see this here trend line. So that's a 1, 2, 3. That's a fallen wedge. This can run back up and hit the top of that wedge on SPX. Then I just take this and extend it to the left. Yeah, so you come down and hit them other two too. Almost hit 6 of them. Oh boy, what time is it? Oh man, 8 minutes to 2 Eastern time. Mannequin, you still in Tesla? Tesla's really on fire, man. This thing's gonna be one heck of a stock this year. We got a rising, well, we got an ascending triangle is what we got. Well, I'm making mud. I was asked what I was drinking the other day, and well, it was mud. My commercial would have been a lot different than his, that's for sure. It'd been more like, I'm drinking mud, the man's drink. I'm wearing boots and I'm stomping through the mud, and I got my hot choco right here, or my mushroom coffee. I'm drinking mud. Made for a man. Heavy duty. But I wouldn't go out saying, well, my friends come over and we're going to drink mud. Hello? Yes, Jim, it's your psychiatrist. I hear you need some help. What is this about you drinking mud? We don't allow that in our hospital. We drink orange juice. But doctor, this mud has mushrooms in it and it gets you high. We especially don't drink them kind of mud. Want to get high? Well, you're on the voyage here, Rob, of pulling back to 405.21. You could drop a couple bucks. Yep. We could drop a couple dollars right here. $406 first. IBM. I was thinking about that this morning for the first time in a long time. And it's on the sizzling index. Yeah, it's back in game again. Buffett sold this a little too soon. I haven't looked at Disney. Disney hit the 200. So, dang, man, I tell you what, Disney's really on fire. Disney's at a resistance level. $13 billion deal to buy Interpublic, ad giant. Oh, Disney stock forms Golden Cross. I don't see it because I don't have the 50 SMA on here. So I'm going to show you what a Golden Cross is. For people that don't know what a Golden Cross is. I just took this off here yesterday. What the? Oh, on a daily. So that's on the weekly. That tells me we're at a resistance. Now on the daily, 1 minute, the 50 SMA crosses the 200 SMA, which gives it a golden cross. That means we're bullish. But all the time we were above the 200, in my opinion, we were bullish. So this thing can come back down and hit the 200, hit the 21 and bounce off that. So that's where I'll set my alert at 112.65. Okay, this is looking good again. I am tempting. Okay, we got a new low. Brand new low. Randy? Watch the 60-55s. Okay, I'm going to get ready to jump in on them here at buck 105. So far, I've been green in every trade today. I think 105, and we're at 125 now. Randy. November the 10th, strike, at 105, oh, strike, 60-55 at 1.05. Exchange traded fund equities. There we go again, my friend. $105, baby. My Sharoma. All I've done is scalp the SPX today and Tesla. There's 125, 130. Randy, you've got to listen. Dreams that you dream of once in a lullaby. Somewhere over the rainbow, bluebirds fly. Dreams you dream of, they do come true.
Someday wish upon a star, wake up where the clouds are far behind. Be where trouble melts like lemon drops, high above the chimney tops. That's where I need somewhere over the rainbow. Bluebirds fly.
I'm still in the snake. Why can't I? Oh, yeah.
Someday I wish upon a star, wake up where the clouds are far behind.
High or low? Keep the high or low.
Trouble melts like a lemon drops, high above the chimney
Top speed side.
You'll find me somewhere over the rainbow.
Oh no.
Dreams that you dare to, why, oh why
Can I? We now are breaching below the 21 on the hour and on the daily. I said we come back and hit the. Okay, we're still holding up the 9.
Vital Protein's new blue paperboard tub.
We're still on the 9.
Water resistant and seals tight.
I'm gonna stay in this trade. If we'd start to breach below, I'm going to give the exact number here. What I'm doing is I'm going to my moving average, which is the 9. As long as you stay above the 9, and this is on the daily time frame, we're still bullish, and I'm going to try to get as close as I can to the bottom of that 9, because that's the last resort right there. 60.45. Let's see if I got it right. Could be a little bit lower. Pretty close. Yeah, I'm going to stick with that. 60.45.10. So we'll take this to the 1 minute, and we should be right on that thing. Yeah, we're right on it. So see if we reverse. I'm going to add, well, I'm not going to add nothing. It's too late. We were at 90 cents. I could have added there. We'll just leave it like it is. As long as we stay, this is the 9 EMA, that resistance line. What is that price? 60.45.10. And then on the weekly, we could drop a little bit more the body of that candle. Now it's about the same. What is it? Let me go ahead and draw a trend line there and see what that is. 1 minute. God, we're getting real close. Let's go to the 5-day, 5 minute, 1 minute. 5-day, 1 minute. Oh, we just breached below it. Okay. I'm still add right here. I'm taking a lot of chances today. As long as body respects that trend line, as long as that body respects that trend line, .80 got 80 and 105. That's all I'm doing. As far as I see it, we're still holding on to that support. As long as we hold the 9. What is it? 9 on the daily. What was it price? 60. Somewhere. I got to see Don Ho when I was in Hawaii. For vacation. If I dip below this, I'm going to automatically get out of this trade. Tesla pulled back like Jimmy said. No, it's just bulls are definitely strong on Tesla today. Pulled back a little bit, not nothing to hurt. 405.52 now. The crowd's going wild at the sports. I heard that Khloe Kardashian hung out at Diddy's place. I never did like that chick. Out of all the Kardashians, she was the one I hated. If I ever was in line and she was walking up to me and I'd say, "How you doing, fat ass?" How dare you? Don't you know how to address a Kardashian? Yeah, I do. Okay, I got to make a business decision. This could be my first losing, unless I stick it out. Okay, give me a second here. Down $600. Yeah, I heard all the names of people that put out coins. All the celebrities. The only coin I trusted was Zach Moore's coin. And Doge, and Bitcoin, and Shiba. Okay, I gotta make a business decision here. Yeah, this has got to go. I'm gonna give you just a little bit more time. Tweeze or bottom. And what's that? Hike. Oh yeah, we were down here before. So this could easily go back down to 60, 37, 39 if we don't reverse soon. If I got enough, if I put another 1,200 now, I ain't gonna do it. Bum bum bum. Make sure you drink enough water. Wall Street struggles for direction. Tesla flirts with record highs. Bitcoin tumbles below 95 grand. Amazon Zoox hires Tesla director of engineers. Autopilot hardware, AV. Market chatter, Tesla, Indian property developer DLF discuss new Dubai showroom space. Selling cars in India. That'd be, they got a big population over there. I'm at 70. I'm staying with it. I stuck with it. Should grab more at 60. I'd really be even right now. That's why cost average down. If I'm stuck in a trade, I'd be up right now if I did it. But I had to debate. I said, no, I ain't done it. So we're out of the snake now. Snake breakout. with two leading indicators like this thing going to run up and break resistance. I'm almost even. There's 3 white soldiers. You know what that means. This is the old resistance that I had in this channel right here, and I just extended that out to the left. So we're definitely even here. I can get out of the trade and be even. 3 white soldiers. Now I got 20 contracts. So what do I do? Jimmy says hold it. I should get out of it, but that's 3 white soldiers out of a snake. You've heard me say that a lot. That's engulfing.
This is Zoom AI Companion, and this is Big Text AI. Zoom AI Companion delivers accurate summaries at
Should I answer it? Hello, this is Washboardjim, retail traders. May I help you? Jack, what the hell are you doing? I need 10% from you today, and you're in a losing trade. Now you're up on the stock. Now, I'm going to send my men over to collect that deposit. I'm stuck over here in China right now. But Jack, I want my 10%. Don't mention my name. Just call me the big guy. I see you're at the 63 EMA. You always yak about that, saying that's a resistance. But you also have a 1, 2, 3, 4, and you want to make a little bit more, right? So hold on to it, Jimmy. I have total faith in your capabilities of getting this trade done. Now I'm over here trying to stop these wars. You see what I did to Syria? Fucked that all up, didn't I? Okay, Jack. I'll be waiting for your knock, and I'll write you a check. Claim the A+, you deserve it. I'm going to break this resistance, and I'm going to show you guys. God dang, that was fast. Hey, Hunter, what's going on? I got some sugar up there on the counter for you. Yeah, what are you in, Ivan? Ivan, we're going to try to break the 63 here into close. I got 105 and 80 cents with the average of 93. I can get out now if I want to, but I want to see if I can get me at least 20 cents out of this trade. If we break the 63, you're going to run it up to this area right in here and get out at 60.50. See, you see the resistance, overhead resistance, but we got to break this 63 at 48.43, 48.50. In fact, I'll put the line in there right now, so I ain't messing around with this thing. Gotta be 50. We'll make it 48. You sold too early? Did you make profit? Now we're going to break this resistance. $60, 48, 48. It's time for an important date. No time to say hello, goodbye. I'm late, I'm late, I'm late. At the 60, 48, 48. Hickory dickory duck, just stuck, run up the clock. It broke to 63 and we went wee. The next resistance is right there at 50, 60, 50. This is a tough day. Not tough. I mean, I've had to do some trickery later in the day. Like Magnificent said, don't overtrade. Like Mike said, you see how easy it was for the first part of the day. Now it got more difficult. We pulled back. Mike gets an A+ too. Magnificent, give Mike an A+. I'll give you the reference. He's not in the room? Well, that son of a... He better be. Why is it going down? Yeah, he did. Years ago, I was called the singing day trader. I want to see if I got an old video of the singing day trader. Oh, the singing day trader. Well, hello, good morning. This is Washboardjim, the singing day trader. Well, there's one thing that I've always said, not always, but there's not a stock that I cannot play. I'll eventually find an entry and an exit. And everybody knows about HMNY. It's one of our hometown favorites. Well, with all the drama that it causes and came, I let that all proceed. I let it all kind of consolidate. And then after people started dropping it and forgetting about it, it still got great volume. It recovers real well. You just have to wait for the right time and the right entry. Yesterday I tried to get in again on the drama that it's had here recently. I got in right around 6. Let me see. I think around 7-1. is when I got in yesterday. And when I got in at 671, which was right around about here, I thought I had a pretty good little spot here because we kind of connected down here. So I let it go back up, and then next time it came back down, I got back in. And I think it was probably right around in this area right in here. Well, it went up a little bit, then boom, we had the sell-off. So we went on down, and I still had confidence in it. We had the 50-day SMA, which I have right up here, crossed down over the 200, and that was a trigger idea that we were going to have a sell-off, and we had a sell-off. Then it hit my bottom support line at $6, and then we had the golden cross right before close, or right at close, and then look what happened. We had the bounce right back up to resistance again. So I'm in the green right now at 724. I was telling everybody to get in at 681, something like that. I have to look at my records here. But I'll be getting out of this green again today, probably right around in here, right around 736. I'll see how the volume, but I'll put a sell order in it first thing this morning. And if it still respects this 50-day SMA, it can probably still keep going up. But this 6-7 cents is a critical support level for right now. And I flipped this for 20,000 shares yesterday. The day before, I flipped it from 6.8 all the way to 16 cents. And let me see if I can find that right in here. So I got in that, flipped that sucker, and I got in it from the previous day, which was right around down in here. It might have been right about in here, yeah, it was right in here is when I got in the other day. Maybe at the beginning of the day. So I'm taking them short spikes up first thing in the morning, and I'm selling them off, and the same thing happens every morning. See how pre-market here, and then Singing Day Trader, September was the month to remember. There's one of my challenges. This was back 6 years ago. Right, Mara. I was playing these Bitcoins 6-7 years ago. Riot Mara. Riot 441. There's Mara at 123. $134. Oh.
And it's Technical Tuesday. Kevin Horner is standing by. He's going to talk the key levels on the S&P 500 that you should be watching, as well as some of the other charts like General Motors and Transmedics Group. We'll be right back.
GM, why? GM at 50, where I'd look for it. Ah, darn. It could be my first one here. SPX. Do. This is a 5-minute double bottom out of a snake. Yeah.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical
I'm gonna start
insights
working out
on
and
every changing trend in markets.
and not sit in this chair all day.
Anywhere, on any device, for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Over. Let's break. Snake breakout pullback.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platform.
Inverse head and shoulders.
Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over
Let's have the big
400
boom.
studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Get some more water.
Trade brilliantly with Schwab.
Welcome back to the watch list. It is Technical Tuesday for some stocks and trends to watch, charts to keep an eye on. Kevin Horner is here, Senior Manager, Trading Services Education at Charles Schwab. Every Tuesday we do this, and Kevin is here and he takes a look at these S&P 500 levels. Very curious to hear, we've been hitting some new ones since we last spoke last Tuesday, so let's hear some ideas what you're watching.
Yeah, more of the same, Nicole, to be quite honest. The uptrend continues, had new highs created just last Friday, and what have we seen just for the last 2 days? A little bit of meander, a little bit of a pullback. I think a lot of traders in the very short term are still eyeballing that 20-day moving average. On the chart I've got here today, it's in orange. It's also kind of coincident with the breakout level that we've moved through, right around 6,000 on the SPX. You know, we pushed all the way up to just shy of 6,100 here, and we're about 45 above that 6,000 point ledge. I think that represents an appropriate area for new traders who are still feeling bullish as we go towards the end of the year here. If they want to expose money in a short-term scenario, of course, that means we need to test and maintain that 20-day moving average as opposed to just buying the first chance that it gets there. So patience might be needed in the short run here. If you're a bit more intermediate in nature in your approach to watching the S&P, keeping an eye on that 58.85 to 5,900, that's coincident with the 50-day moving average at the moment. And then we've got another ledge of some potential support around 5,700, which really does coincide just with my manually drawn trend line going back to middle of November 2023, when we gapped higher and started this new trend. So you got a few different layers as usual where traders can start to position themselves if they're worried and looking to take profits, as your last guest really highlighted very, very nicely.
Yeah, all right. Thank you for that. And just pushing it forward, I mean, Citi's looking at targets of like 6,500 next year for 2025. So really seeing some upside potential and lots of new highs. Let me see what you're talking about when it comes to General Motors. This one's on your list. What stood out to you?
Well, today we had the upgrade.
Don't be
for
pumping
GM.
General Motors.
We had a really solid year, up more than 45%. Stock peaked around 61 here in late November, but it was President-elect Trump's commentary about tariffs on the auto industry that really hurt automakers collectively. And since we've seen about a 15% drawdown here to the 50-day moving average, and that represents a proper zone of potential short-range support for new trader who has been waiting to get into GM.
No.
There's plenty of reason to suggest that this could hold. Now, obviously, that's not a guarantee, but it is an area where traders might.
No.
The support zone 2 that we've drawn in, that comes in around the $50 a share.
Yes, 50.
That would require breaking the 50-day moving average on a short-term basis, but a test of that $50 level would be pretty consistent with the way technicians look for breakouts to go. You get a breakout here back on right around October 22nd, a wonderful move on earnings, and that pushed us all the way to the highs at 61.24, and this would just be a revert right back to the breakout zone potentially for a test. So as usual, time frame matters on all of these positions, and whether you choose to position today utilizing maybe that 50-day for an exit strategy, or maybe some patience in the short run and consider support zone 2 for a more maybe conservative entry, either one of those can make sense if we get some confirmation of support at one of those two areas provided there.
All right. So we'll watch those.
Oh, man.
In the last 24 hours, we had a couple of
I could have doubled up right there at 40.
A couple of the brokers actually raising their targets. Mizuho, for example, has outperformed and raised the price target on General
I'd be even right now if I did.
$62, and Morgan Stanley
We're at
raised
70
the price target
cents.
to $54,
Oh,
up
yeah.
from 46. So
Break
it's
it.
an equal weight rating. So
Now I can get out here
So
and take
two
$400
positive
loss.
reports there on GM. Let's get to Transmedics. Maybe people don't follow this one as much. You want to walk us through the technicals. We want to hear more about it.
Yeah, I do, and I want to also kind
We've
of
hit
point
the
out what these,
63 so many
what
times
Transmedics
up here.
is up to. This is a group, as of course the
If we
name
break it,
suggests, in
boom.
healthcare, but more specifically an organ transplant
right
therapy
there.
for end-stage organ failure patients, both domestically and internationally.
Can't believe you
So they're in
pumped
the
GM.
business of transport, if you will. They
I'm going to mute you.
pretty.
You got me in a bad mood. As you can tell, I don't like General Motors. If it wasn't for Democrats, they'd be out of business. So I guess that's one good thing. Kept jobs, but it cost me money. And I don't even buy it. Never been to a dealership. I refuse. Well, I had a Chevy Equinox, and I liked it. Come on, break the 63. Been in this trade for quite a while now. I was tricked with my 3 white soldiers. But we got a higher low, which is good. Snake breakout, pullback, higher low. Boom. Bradders for your surrender. For surrender shooters. What's Tesla doing? Tesla pulled back some. 40902. Boeing, Rob, rub it up against resistance. This is the third time. But he's right about the GM. It's had 2 weeks of selling. I always thought they had fuzzy math. Back to 45 cents. Boeing broke resistance. $169.39. I don't know what I got Oracle on here for.
Schwab, a modern approach to wealth management.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex around-the-clock market.
Feel free to buy anymore.
Equities markets are closed, all on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Welcome back to the watch list. We're watching shares of AutoZone hitting all-time highs. The earnings did fall short of estimates. The company's CEO voiced optimism for the market position that AutoZone has. Let's get down to the big picture on this name in the automotive sector overall. Seth Basham is with us, Managing Director of Equity Research at Wedbush Securities, and Kevin Roberts, Director of Industry Insights and Analytics at Car Gurus. Thank you both for being with
Car
us.
Guru.
You described the results.
AutoZone earnings miss.
Right?
Yeah, that's right. AutoZone and the entire auto aftermarket are struggling from subdued demand trends recently, especially on the DIY side of the industry. And AutoZone has a big exposure to that portion of the industry. So seeing very modest growth in comparable store sales, I'd say, is ho-hum. But going forward, we would expect some improvement in both DIY and their commercial business. And that should help get this stock going into 2025.
Yeah, and when I think about this, aren't we at sort of enormous, like 12 years plus, Seth, for how long people keep their cars, right?
Close to my support level I had.
That's right. The average vehicle age is over 12 years. The car park in the U.S. is near 300 million units, and people are driving their cars longer, so they'll need to be repaired.
Not
So
close
that's
at
a big
all.
plus. The other thing that I would point out here is that AutoZone has a growing commercial business, continues to take market share. and that's going to be a key growth driver for them in the future, along with their international.
Looks like I'm going to lose this trade.
Kevin, you're following some of the behaviors of some of the folks. I mean, the long-term car holding is part of it, but are they actually doing the repairs? Some of your thoughts on the big picture.
Yeah, so one of the key trends we've noticed this year is affordability, and so that's consumers looking for more affordable vehicles, and it also means you might be holding on to that vehicle for longer. And so, the average age of the U.S. fleet approaching that of a teenager, I think we'll continue to see more auto parts repair taking place in the coming years as that age just continues to get older and older, and the price of new vehicles continues to get higher and higher.
Yeah, understood. I mean, when we think about the group, there's Advanced Auto Parts, there's AutoZone, there's Napa, right? I mean, there's O'Reilly Automotive. So, Seth, I mean, is this your favorite name in the group? I mean, which ones do you have buys on?
We're recommending AutoZone as well as Advanced Auto Parts. Advanced Auto Parts is more of a turnaround story, but we think it's poised to show momentum in 2025 with the turnaround, whereas AutoZone is one of the leaders along with O'Reilly, but at a much more reasonable valuation.
Okay, understood. And Kevin, where's the risk, do you think, for what people are buying, selling, maybe the tariffs coming on your mind here?
Yeah, tariffs are the big kind of unknown as we get into 2025. Particularly,
I don't know why they're so worried about that.
The individual part might cross borders multiple times.
I'm more concerned about wars, but oh well.
Stage or in a vehicle stage, and so it might just the same part might have multiple kind of tariff bites on it, which could lead to some pretty significant price increases there. So. How that impacts demand on the new used vehicle side and on the aftermarket parts side is definitely going to be an interesting trend in 2025.
Yeah. What are some of the management expenses that you're focusing on, Seth, that are important here?
In terms of management expenses, the company is very good at AutoZone in managing their overall SG&A, so we're not too concerned about that. They are investing for growth in IT and distribution, and there will be some higher depreciation and amortization costs associated with that capital investment. However, we think that that's not a big issue for this stock going forward, as they're really good at controlling labor costs, and we've seen a little bit of less pressure on wages recently, and that should extend into 2025. So the story here really is modest gross margin expansion, holding SG&A margins largely, and seeing a little bit of top line growth in 2025 to drive earnings growth after share repurchases of 10% plus.
Yeah, Seth, we could probably think of 20 automakers for new cars. For used cars, you can go to all these different places to buy used cars. Any themes that you see, Seth, for 2025?
In terms of used cars, we cover two companies in the space, CarMax and Carvana, and we're anticipating the market continuing to show low to mid-single digit growth in 2025, which is great. But as your other guest indicated, to the extent that we see continued price increases or high prices for new and used vehicles,
I'm getting tired.
Put more money into their existing vehicles, and that's going to lead to big demands in the auto aftermarket for companies like AutoZone.
Yeah. And Kevin, you actually were noting, I mean, some people used to like using those EV tax credits. Those may go away, right?
Yeah, it's uncertain at this point, so it could impact both the new and used market. There's new EV tax credits out there, and there's also used EV tax credits out there as well. And so as we, EV demand was a little bit underwhelming in 2024, and it's even more difficult to forecast what EV demand might look like in 2025. Particularly if those credits go away, and it might impact the demand from consumers out there.
Right, understood. When you think about what happens going forward and how much people might be willing to bite the bullet, there was a time where there was
got a double bottom on the SPY,
supply guts, then we had
double bottom on the IWM, triple bottom,
any final thoughts
new low on the QQQ,
and actually get cars in 2025? Is that going to be something that's a top priority, Seth?
We think there has been growing pent-up demand for automobiles, both new and especially used, and that could be unleashed a little bit more into 2025 if affordability improves. And that's going to be driven by interest rates. It's going to be driven by what happens with used car prices. So if those factors improve along with wages as well and jobs, those are good news factors for the auto aftermarket as well as for the used auto market. So we're anticipating low to mid-single digit growth for the used market in 2025.
Right, understood. I'll give you the final word here, Kevin. You know, when we think about this industry, your final words.
Yeah, I think the kind of uncertainty is what the market conditions are going to be and how those might shift in 2025. But overall, expectations are baseline expectations.
God, these guys, they're all nuts.
Growth in 2025 as prices start to moderate.
Uncertainty. So we had 4 years of Trump. Do they not have a memory? Trump was handed one of the worst economies, and he had one of the best in over 50 years. I don't know what, in 4 years, I don't know what changed these people's attitudes all of a sudden. It's free money. It's, you know, they're scared of that free money. It's the only thing I can think of. Tariffs, I mean, gosh. Biden kept the tariffs. He didn't throw them away that Trump had. Don't they know anything about negotiation? Mexico, if you don't stop these drugs coming over killing our kids, we're going to stick 100% tariff on you, so you better get the job done. Instead of just gaslighting it and talking about fentanyl and all that stuff. I think life's more important than, well, you know, let it be said. She jumped right off her butt and started working on it. I tell everybody, I said, don't be popping any kind of pills anymore. You don't know what you're going to be taking, unless it's from a doctor. At least when we were kids, we had blotter and purple microdot and stuff like that, but I never did do the chemicals. Let me see how much time we got. We got 2 minutes to power hour, and I'm still in this trade trying to determine if we're going to break out or not. I sold a little bit of it, but I'm still down. Right now I'm down about 600. No, I'm actually down 300. I need 60. No, I need 80 cents. I don't think I'm going to get it, so we'll see. Right now it's pretty negative out there. Pivotal inflation report. The dollar advanced.
Good afternoon, welcome to Market on Close. I'm Oliver Rennick. We got an hour left into the session, and stocks are doing okay. Had a little bit of rock and tumble kind of start to the week, and some chop around the tech stuff, but we're hanging in there all right. S&P's right now down just a tad. We're at 60.44. We did slip through the 60.50, so tiny, just the smallest bit of pressure on markets. Some notable action in the tech stuff, though, and it's kind of a weird day. Not easy to paint with a broad brush when there are kind of several different versions of tech and momentum to look at that are doing different things. So I'll take it from, I think, the most important group, which is mags first. You've got 4 out of the 7 higher right now, but Tesla's up almost 4%. Alphabet's up more than 5%. So you do have a little bit of a mixed bag with a couple big outperformers there. That's basically your green that is helping keep the market stable. It's coming from a few companies. Tesla and Alphabet in particular looking pretty solid here, especially on a session that's been a bit ho-hum. The mags there, ETF up 80 basis points. But then next to some of the other stuff, it's very mixed. So you've got high beta trades that are down. You've got momentum trades that are generally lower. Stocks have done well over the last 6 months or a little bit weak. And the semiconductors are getting hit. And NVIDIA is down too.
That's
so,
incredible.
Different kind of shades of growth investing or tech investing or momentum investing. You can see how they do have differences on a session like today. We've got the mags up, we've got semis down. Cloud stocks are actually doing all right despite Oracle being lower. Not a lot of big move in the cloud stuff. MongoDB is getting thrashed around.
Jesus
but overall,
Christ.
The net moves for the market are small. The stock moves, though, are pretty big. And that's kind of where we're at right now. There's a lot of single stock action happening. There's a lot of speculative behavior happening in a few pockets. The rest of the market has lost a little bit of its breadth, that rotation. If you think about
They
what
charged me for an
small stocks
Equinox.
and the other sectors outside of tech being a little soft since we started the month of December. The equal weight is underperforming. There are several ways to kind of look at the concentration coming back into the market towards the Mag 7, but today it's really only a couple. Look at the chart of Tesla and Alphabet. Big moves here. Tesla fighting for a fresh new all-time high.
I'm wondering why my taxes are so high.
Just the 3-month chart. This is a big move for Alphabet. Tesla's been rocking for a while, but Alphabet has been
This is nuts.
kind of a sleepy dud, and now it's very.
I just got a tax assessment and they got my Equinox on here. And I went up there and I said all I had was the Passat. I'm going to call him up right now and set this straight. I ain't going to wait around.
Welcome to the Greene County Collector of Revenue Interactive Payment Service. To continue in English, press 1. For service in Spanish, press 2. Welcome to the Greene County Collector of Revenue Interactive Payment Service. You may also pay online at countycollector.com. You may press star at any time to return to the previous step. To end your session, simply hang up. Please note, to use the credit card payment option, a convenience fee will be added in addition to your payment amount. The fee will be 2% of the payment amount for credit card. There is no additional charge for electronic check. Please have your property tax statement available to use this service. To begin your payment session, press 1. To end this call, press 2 or hang up. Please enter your 10-digit phone number, including the area code now. The phone number you entered is 41781824556. If this is correct, press 1. To enter a different number, press 2. Please enter your account number, followed by the pound or hash key now. We did not capture your account number. Please try again. Please enter your account number, followed by the pound or hash key now. The number you entered is 122194113. If this is correct, press 1. To enter a different number, the balance showing on your account is $559.63. To proceed with your payment using this balance as the payment amount, press 1. To hear your balance again, press 2. To proceed with your payment using this balance as the payment amount, press 1. To hear your balance again, press 2. To proceed with your payment using this balance as the payment amount, press 1. To hear your balance again, press 2.
Let's see what happens.
To make your payment by credit card, press 1. If you wish to pay by electronic check, press 2. To make your payment by credit card, press 1.
I ain't
If
pressing
you wish to
1.
pay by electronic check, press 2. We don't understand your selection. Please try again. We don't understand your selection. Please try again.
I bite my ass. I ain't paying no 300 extra bucks, that's for sure.
Surprise.
I was went up there a couple weeks ago and
it's
said,
difficult for me to say that CPI is not going to change the Fed's mind tomorrow.
Yeah, it seems like you'd have to have a real outsized event for that to really make a difference tomorrow, right?
Yeah.
Yeah.
I mean, I hate to say this. Here's another thing. Jenny, I'm saying things I hate to say. It feels like we're in holiday markets already.
It does.
The year seems to be like this market
the red and green?
It took this. Well, there's one. This market took the last 3 weeks of this year and piled them all into the last 3 weeks. And now we just lack any motivation to take the market higher based on the valuation where it's at.
Yeah.
So now it gets a little low energy, it feels.
Tesla now back to 400. Kind of a rip and a fade there. A bit of a frustrating trade, I think, for those who keep gunning for the all-time high in that stock.
Yeah, it's got to have a big story to get it through this.
I don't know what I got to do today. Go run up
It's
there.
got a four handle now. That kind of changes the way people look at Tesla. You know, you may have some people. Remember, the stock was in the mid-2s not very long ago. It's now $400. I'm sure there's some powder taking up at these levels. And so even though people are very hesitantly raising their price targets, I just don't see a lot of conviction until we get something else.
Yep,
Okay.
I took a loss on it.
Here's what it doesn't look like it's going to be. It doesn't look like it's going to be Oracle earnings. It doesn't look like it's going to be MongoDB. They are kind of,
I'm still up real good today, but
great, but the stuff that's down, which is the direction the Nasdaq's going right now.
that's that.
Simi's down and cloud stuff too, Jenny. So the earnings from overnight did not help us today.
No, and I think you look at Oracle, and actually, even the skeptics that had a lot of doubt, especially because we were at all-time highs yesterday into this print, I will say that the analyst coverage today is not as negative as this move would tell you. The 38 analysts cover this name, 14 raised their price targets. I haven't seen a single that was drastically reduced. And I know there's several that are sticking with their conviction. Like I was reading this note out of JP Morgan, who did keep a neutral stance street low price target of 140, but also did say that if you took out the effect of the dollar strength and the unfavorable tax
Greene
rate
County
factors, the results
Collector.
actually look pretty healthy and relatively on track. So, I mean, is this a U.S. dollar story? I don't know how you could make that case specific to Oracle because, sure, I mean, the U.S. dollar has been on a run, and the fact that we did see it surge 4% during the latest quarter, but that
Seems like a little bit of a cop-out.
well, right, because it wasn't just for Oracle that the U.S. dollar was surging,
Right,
it was
of
for all
course.
these companies.
Yeah.
But I just thought it was interesting that I hadn't seen any notable price reductions. Well, so many are still hiking. I mean, seeing still good things with this name. Over 50% cloud growth as far as their revenue. Now there's still parts of their legacy business that aren't growing at that same clip. But again, we were at all-time highs yesterday. I think maybe just this goes to show this was a very, very high bar.
Okay, that is very true, especially when you run up as much as you do. So, especially when you are building the world's biggest supercomputer access with all their NVIDIA chips, you think that's going to pay for itself, even though there's a lot of expenses in the meantime, $2.5 billion of expenses. For the most part, it should be a positive for NVIDIA and NVIDIA, though, because they are spending. The thing that I do think is still pretty telling, Kev, is that these companies are reporting how much they're spending on chips, but it's so concentrated in Blackwell that the rest of the semiconductor group is getting quite soft. It's getting a little bit heavy, that chart now. Even with NVIDIA, it's still so close to its highs.
That's because no one, well, I mean, I don't know. I'm not an expert on this, but it seems no one's been able to close the gap on NVIDIA.
Right.
We keep waiting for some competitor.
Yeah, AMD's about to break to a 52-week low, by the way.
Yeah, and AMD is almost a major fail by AMD. I think Oracle, by the way, one last thing on Oracle, 179.59 is the 50-day moving average. That it went through like a knife through butter today. So I'm going to watch that the next couple of days and see if it gets back up there.
So very real sell-off.
Because the 200-day is way down there, 144.
Yeah, you don't want to start exploring that area.
No.
Supermicro also down 6.5%. That was trying to get back through $50. Looks like it failed, Jenny. So another frustrating one for folks today.
You know, but so Supermicro's story, I mean, like, you have to have a strong risk appetite, because what price activity has shown us is that there is a lack of faith in execution from a management standpoint. I know that they've eased some of those fears, and I mean, at least ensuring that they're right now not getting knocked out of the NASDAQ for the time being, but that's still a looming fear. They still have to undergo this whole accounting process with a new auditor. And I think that when you have a name that moves like this, I would say I sort of want to see like an improved business plan from the company. Oddly quiet they have been throughout this entire thing. I mean, defend if you were not really guilty of wrongdoing. I'm just shocked they're not releasing more and more statements like this is the plan, this is like the clear path. They haven't really done that at all. They've been oddly quiet, which to me says there's some issues below. But I mean, only Supermicro could be up 45.5% this year, while being off of its highs made this year by 66%, off of lows by 140%. You have to understand that this is a name.
We're out of support here.
Conviction. It's no longer a fundamental story, really, and it's going to be then, I think, at risk for some of this headline in the news cycle that has weighed on shares, frankly.
Yeah, you're definitely subject to.
This is going to be tough.
When you're saying things like, I'm confident the company won't get delisted, it's just it's high on the list of things that you don't want to have to defend.
You know,
60-45s.
Stock a lot. And Jenny's right. There's either some other story, or these gentlemen are some serious poker players, holding on to a hand and patient and waiting. Because you're right.
Yeah, that's true.
You would think there would be comments from them, and they are silent.
Yeah.
They said they found no evidence of misconduct, and that was like the most we've heard from them in weeks.
Yeah. All right. Well, shares also, I think, just had to deal with technical resistance, because it was at $50 for 2 months before it broke down, basically like 48. So.
And then it got back up 2 days ago to 49.86.
Yeah.
It could see 50.
And it was quietly the best performer in the S&P 500 last week. Really on not a huge fundamental improvement again. So if you like risk, this is a fun name, but I need to know about execution going forward.
Yeah, fair enough. All right, cool. Thank you very much, guys. Good stuff. SMCI, chips down, cloud down 2. Thanks, Kevin Hanks. Thanks, Jenny Horn. Hard to get the market too far up when you've got those groups dragging. Let's talk about the big picture and the earnings potential going into 2025. Ed Klissel is the Chief U.S. Strategist at Ned Davis Research, one of the premier equity research shops on the street. Always great to see you, Ed. Thanks for being here.
Thanks for having me.
Okay, so how much of your expectations for next year are policy dependent? How much can we glean from just the momentum of the economy and secular forces in momentum already?
Yeah, so the main thing to take away is that we're entering 2025 in really good shape. You know, the main drivers of the bull market the last 2 years are still in place. That's disinflation, earnings acceleration, and broad participation within different styles and sectors and stocks. There's been a misnomer about the narrowness of the rally. Now, I have my fair share of concerns as we get into next year that disinflation isn't going to be around forever. We get to the second half of next year, we can talk about the details of July, but inflation goes back up. And also, we're going to be suffering from the law of large numbers when it comes to earnings growth. So we're going to get a slower pace of earnings growth. Earnings still growing, but at a slower rate. And then when that happens, you throw in a lot of these Trump trades and all these potential policy shifts from the new administration, you could get a narrower market. So I think all these risks are definitely out there, but I'm not going to act until those things actually come to fruition. Because look, over the last couple of years, I've had my economic concerns like just about everybody else, and if I acted upon them, would have missed a heck of a bull market. So we want to wait for the whites of the eyes before we pull the trigger.
Okay. All right, so Ed, taking it kind of from the top down then, growth expectations for the S&P 500. Take me through where we're at, how that's developed, and what's powering it. We're going to, in the midst of your answer, bring up a graphic that breaks it down. You guys do a pretty good job of showing kind of what is behind the earnings potential, so take me through it.
Yeah, so for our target for the year for the S&P is 6,600, and key to that, of course, is what's going to happen with earnings growth. And so we do a top-down analysis. So we're going to start off with GDP growth. You throw in inflation, and then S&P 500 sales have grown on average at about 0.5% faster than nominal GDP. So that gets you sales growth 5.9%. Now, I'm going to talk about margins, and at this point in the cycle, when you're talking about this far into a bull market, you tend to get a little bit of margin expansion. So we're adding another 0.5 point or so for that, and then of course we're talking about earnings growth, but really what we care about is earnings per share growth. And the last couple of years, buybacks have been averaging about 2% of market cap. So you throw another 2% for that, and you get 8.5% earnings growth for the year. Now, consensus from the bottoms-up analyst community is around 16%. So we're quite a bit below that. I would just throw on the caveat that that's kind of how it goes. Analysts start off around 16%, and then it usually ends up closer to 8%. So this is not abnormal for the bottoms-up community to be, a little bit more optimistic than the top-down community like myself.
Okay, so then if there are surprises policy-wise, does it essentially add to the case, or do you just kind of say policy could kick in either direction, negative or positively, let's just net it out at zero?
I think there's downside risk here, Oliver, and the reason for that is, first of all, with the Fed, if inflation does bottom out, maybe it already has, and we're dealing with higher inflation from housing, and then also if there are tariffs, the goods deflation that's been really helping over the past couple of years goes away. The Fed's going to be done. And then from the tax standpoint, I think the rally post-election is just relief that we don't have to deal with a lot of tax hikes, and I think that's very reasonable. But really, we're talking about an extension of the 2017 tax cuts. I think it's going to be very difficult to get a lot of new tax cuts through. So from a sentiment standpoint, I get it for now, but we get into 2026, I'm not sure you're going to get a whole lot of new stimulus. In fact, we could be getting the opposite, and the market may price that in as we get later into 2025. That's how the market tends to work. It looks forward several months, and it could be discounting some more restrictive policy.
Okay. How about the productivity potential of AI? Where does that specific secular theme start to bear fruit for the broader economy, Ed? Do we see it that way at this point, or is AI just more of a top-line growth engine for a handful of companies?
I don't think that's really going to be a 2025 story where we get it for the whole economy. Now, I do think that it is something that it's here to stay, and it will become a very nice productivity enhancer. But in terms of your average company being able to deploy AI to make their employees more efficient, or maybe not have to add as many employees as a result to help their own profit margins, that just seems to be a little bit early. And so it's going to be more of an issue of the same companies benefiting. Now, I think there could be a transition from hardware more on the software side of AI, and that may be where some of the benefits are. But in terms of the overall economy and really helping out, outside of the tech sector, probably too soon.
Okay. The potential then for the rest of the market to catch up to the earnings and the growth potential of those big companies all at the forefront of AI, does that limit the, that's where it seems the tough gambit here still is, because those are where you're going to get some of the juicier valuations, but it's also where you've got a lot of the growth. We're looking at small cap EPS potential on the bottom half of this panel. It looks like it's trying to catch up. How much real growth momentum is there, Ed?
Yeah, so the law of large numbers is really going to come in on the large cap side, particularly the Mag 7. They've just done such a great job, and they're still going to continue to probably grow their earnings faster than the rest of the market. actually turned the corner. They're still below their parts. And so, I would love to, there's lots of reasons to like small caps here with the Fed cutting rates, economic growth looking okay, and they're fairly cheap. But I think the burden of proof is on small caps. They can actually produce superior earnings growth. So even though things have gotten less bad for small caps, they really haven't turned the corner as you asked.
Reed
They still have
Springs.
to deal with the reality of the situation that there's a lot of unprofitable companies, particularly in the Russell 2000 index. And if rates are going to be a little bit higher, that means it's going to be more difficult for them to refinance. And that's going to be a challenge moving forward. So we're going to split the difference. We like mid caps.
Answer.
If you say, let's get out of the large cap space, go to mid, a lot more higher quality companies don't have to deal with unprofitability issues, but still can benefit from some of these cyclical tailwinds that could help them out.
All right, split the difference. I like that. Mid-cap trade into 2025. So is that also kind of splitting the quality spectrum, growth versus value as well?
Yeah, growth value hasn't really done a whole lot.
It's not ripping.
Large cap space. To us, it's really about cyclical over defensive. Of course, there's cyclical growth. And
Dang, man,
cyclical
puts
value.
really paid off
Coming
good.
Out of a presidential election, there tends to be a nice rotation.
700-800%.
The Fed is cutting rates slowly, like it's doing. That tends to help cyclical areas too. So we've upgraded consumer discretionary to more cyclical growth, energy financials more cyclical value, and downgraded healthcare and utility, which of course more defensive. And so yeah, we would think kind of like small caps, cyclical value should be the place to be, but from a technical perspective, it just hasn't borne out yet. And so we're gonna wait for that technical confirmation and kind of split the difference on growth value and just say, hey, this is more cyclical over defensive rather than a style tilt.
All right. Like the details on the sector and the.
I looked at my tax bill; it was up 100%. I'm going, what?
For next year as well. Seems like a good chunk of growth. A little inflation still mixed in. Throw on some buyback though; it all adds up to some pretty decent potential.
She got me on hold right now. That freaked me out. Personal tax.
Sure.
Yeah.
Been working quite well. Vion, international telecom stock, it's up 81% on the year. We're going to introduce you to the mid-cap business when we come back. It's having a pretty great 2024.
I probably don't. I'd go out and look at my car and see if it was in my stuff, but I'm sure when I
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
I just walked in there and asked them if
Knock, knock. Number one broker here for the
They had
number
my
one
facade on
hitmaker.
there.
Thanks for swinging by,
she said
Carl.
yes.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
It was on the 10th of, I think it was on the 10th of, I think it was on the 10th of November.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
deep dive. Shares of international telecom business of VEON are up big on the year, pushing close to a double, 82%. We've got the CEO joining us to talk about the business as it undergoes some strategic and locale shifts as well, including now listed on the NASDAQ. Con Terziolo joins us, CEO at VEON Group. Con, thanks so much for being on the Schwab Network. Appreciate your time.
Thank you very much for having me.
So tell us about your business, firstly, and also maybe some context on your guys' move, because you were Amsterdam-based, but you're also moving to Dubai. You're also Amsterdam-traded. Now you're U.S.-traded as well. So how do these things fit together with what seems to be a very big year for your stock?
Sure. First of all, we are the largest NASDAQ-listed company, headquartered in Dubai, and we only and exclusively trade in NASDAQ today.
Okay.
And it is really an important thing to understand that we are a frontier bellwether. We are probably the only opportunity for American investors to participate in a phenomenal growth opportunity in Central and South Asia as well as Ukraine. We operate in 5 markets: Ukraine, Pakistan, Bangladesh, Uzbekistan, and Kazakhstan. Approximately 520 million people live in these countries that we operate in, and 1 out of 3 is our traditional telecom customers, and 1 out of 4 of the citizens living in these countries are our digital services customers. We identify ourselves as a digital operator, practically operating not only in the telecom space, but also in financial services, entertainment, education, and healthcare. And practically, we would like to be relevant to our customers in these terribly underserved markets in every single minute in a day. That's why we invest in fintech, in financial services. We almost have 30 million customers across these countries in financial services offerings. That's why we invest in entertainment. We have another 30 million customers enjoying our OTT and IPTV services. We have almost 20 million customers on our healthcare platforms enjoying either the insurances we provide or healthcare information or online consultation with the doctors. And this is the opportunity in the markets that we operate in, which allows us to grow our business double-digit in US dollars. Today, in the last 2 quarters, we have been disclosing this specifically. Our direct digital revenues, which is generated through our financial services, entertainment, education, and health verticals, have now reached 12% and growing at 40% year on year. Whereas our traditional telecom and infrastructure business grows at 7.2%. So that's the background of the growth that we are observing in our stock price in the last 12 months, over 75%. And actually, if you would dare to look at the last 24 months, you will see that our stock price has tripled from where it was before.
Okay. Con, tell me about the primary business of the, I guess, the telecom services, and then I'm curious about the financial side of it as well. What are the main, I guess, like channels or services that people are consuming content-wise? And then the part 2 that I wanted some other detail on was the financial services side. Are you helping people, are you setting people up with accounts, with loans or something, or what's going on there?
So, you know, first of all, the main characteristics of the market.
Is Lisa on?
We choose them very particularly. These are large population countries who has a relatively young demographics and who are utilizing practically languages which are not mainstream and terribly underserved. I mean, in the markets like Pakistan, for example, we have a huge financial services arm. We have
this Jim.
Customers. We have 20 million of them on our digital wallet. We have a microfinance bank, and we particularly focus on small and mid-sized businesses and rural area customers. And we are issuing 120,000 nano loans every single day. And this is, of course, a huge contribution to the economy as well as empowering women and including small businesses in financial inclusiveness. The typical customer that would borrow us at maybe a $30 from us would be a taxi driver who needs to fix his flat tire or fill up his tank to serve for the day, or a housewife who is buying flour, eggs, and sugar to cook cookies and sell in the marketplace. But this business model allows us to reach out to millions of people. And today I'm proud to say that maybe not in terms of the top line, but in terms of number of people we touch, we are the #1 financial services institution in Pakistan. And the same story in Kazakhstan or Uzbekistan, where we capture our customers through telecom offerings, but then we move those customers into areas where we either deploy financial, entertainment, or educational healthcare services. And of course, enterprise services for the customers who are functioning in the countries that we operate in. And in the next generation, what we will call augmented intelligence services, to make sure that our customers who speak Urdu, Punjabi, Bengali, Uzbek, Kazakh, or Ukrainian have the same access to augmented intelligence services, so that they can be the best doctor in the world while they are in Dhaka, or best teacher while they are in Islamabad, or a best farmer when they are in Astana. And that's really the prospects of growth I see in our markets.
You recently launched a Gen AI lab with Amazon Web Services, your Kyivstar, so a Ukraine-based business. It seems like you want to be connected into the tech cutting edge as well, and it seems that makes sense from the financial standpoint, also from the digital and the comm standpoint. I imagine that AI can help you kind of either smooth the costs or the workload, the human capacity of having to have such different language-based services. Take me through how AI is going to boost the business.
Absolutely, and the opportunity that we see in AI is not only related to the productivity gains that many people are betting on, but really driving revenues. As I mentioned if you would augment the competencies and the skills of your customer base.
No, I'll pay it a little bit later.
Teachers tools that would make them a better teacher.
Okay, thank you.
Tools to a doctor or a nurse that would make them a better doctor, a better nurse. This is an unbeatable value proposition. What can be better than offering yourself a better version of your capabilities? And that's the area we are focusing on. That's why we announced this partnership in Ukraine with Amazon Web Services. We do have a technology company in Ukraine employing more than 500 software engineers, developing these large language models in Ukrainian. We have today actually also announced a large language model in Kazakhstan, in Kazakh language, in partnership with the state university. And again, our objective is to make sure that not only the lucky 7 languages in the world that has a large research libraries can benefit from augmented intelligence, but all the countries in all the languages that they speak are capable of consuming this unique technology.
Very cool. It seems like the market is just starting to appreciate some of the offerings as the valuations are still quite low for the amount of potential it seems like you're driving. All that add up to double-digit growth next year. It seems like top-line growth has been in the single digits. Does that hit DoubleCon?
Well, we in the first 9 months of 2024, we have actually hit double-digit growth, which I'm very happy with. And in local currency...
Yep, this is Jim again.
Yeah.
Did it get sent?
Yeah, I just sent it to you, so you know that just now sent his spam, so.
Oh, you just now did?
Yeah, I just now sent it.
There it is, I got it. Okay. Thank you. You're a sweetheart.
Okay, thank you.
Yes, bye-bye. Big massive dump. So I got print. How do I transfer this over? Save. Save as. Documents. Let's write tax. So I'll go to email, special offer, tax relief. Optimal tax relief, tax problem solved. Special offer.
Some breaking news for you real quick. In the last few moments, Albertsons is down, Kroger's up. You can probably guess it. It ain't gonna happen. Almost $25 billion deal blocked by the federal judge. Been looming for some time. Maybe better for Kroger shareholders in the short term. Stock's up 5%, but obviously not good for Albertsons. And it seemed like the market had been holding out some hope despite what has been just a persistent, unrelenting pressure by the government on anyone trying to make deals. So groceries ain't gonna happen. Handbags ain't gonna happen. Tech, not happening. So when you hear policy shifts into 2025, anything that allows deals to get through is gonna be a huge shift. So, all right, let's talk some options flows. Let's look at the technicals. Kevin Green joins me. Let's look at that. Is it still a wedge KG, our shape, that kind of upward trending, really thin triangle? Because we're starting to get a little soft here.
Oh, I gotta call this other company here, see what they
We're
wanted.
pretty much not going to use it moving forward. I still have it up there just because if we do kind of retrace, there might be some levels that might be key there. Going back to the Kroger thing, what's actually very interesting, just real quick, is that there's been options flow on Kroger all morning, hitting that $60 strike. So it's interesting that we actually did see that announcement actually drop here. You look, we're, across the board, you're seeing a lot of activity, Oliver. I know we're going to go over the levels, but
Hello, who's this?
was very interesting. Obviously, we saw what happened with Google.
I had a phone call.
We're starting to see more and more individual names starting to catch a little bit more bids.
Hello?
When it comes to the equity options flow, Boeing is another one that's popping here today too. So this is something that we kind of highlighted late last week, earlier this week, where the index side might be a little bit boring, but if you look under the hood, you could actually create a little bit of volatility within this market, and that could be a good driver either to the upside or the outside. But
Yeah,
if you're looking
I got
at the
a
levels for today,
call from y'all.
yes, we are seeing a little bit of a breakdown. And what's actually very interesting, if we kind of look at the morning levels that we set earlier this morning
spam?
here, we're getting kind of close to that 60.25. We got the 60.29 here today. Still a little bit of a bounce and a little bit of a hammer candle that's taking place right now. So
Take me off the call list.
on that hammer candle, that might be a bottoming formation going into the close. Maybe we get a close right above it. But I also have this channel, and you'll see this channel from Wednesday of last week, kind of getting extended out here. Tuesday and Wednesday of last week, kind of getting extended out. We're kind of back into that range, and that's something that you really don't want to see. That's kind of the first level being broken from a technical standpoint. So let's see if we actually get a little bit more range bound over the next couple of trading sessions if we close within that little channel. And if we break down even further, then I think some of those negative dormant areas on the open interest is really going to kind of come into play. Once again, that 6,000 level is going to be a key one. A lot of positioning sitting there. So not the day that you really wanted to see. It's still only down about 0.3%, so marginally down if you kind of think about it. But the trend itself is something that I don't think the market really is kind of prepared for in terms of a meaningful pullback here. because we're only going to be around 20 to 30 points away from the 2030 moving average. So we'll keep that on the radar as we have CPI coming out tomorrow, which obviously could drive a little bit of volatility as well.
It does look like that last little tick down there that we're getting basically today, a little bit steeper. We had been kind of just getting, you know, a little bit of kind of slower, kind of negative consolidation, but this kind of does start to look like we're slipping a little bit, coming down to test the real negative dealer pressure levels that you've got in there. So I guess maybe we should be a little bit attuned for volatility the rest of this week.
Yeah, for sure, and you are seeing volatility move up. I think VIX is at around 14.5 right now. You know, what makes this kind of very interesting for today's session, Oliver, we obviously have an event risk that's taking place tomorrow, CPI. Everybody's going to be focusing on it. You have some of those inflationary type of sectors or those that can kind of weather the storm and have pricing power really actually prosper today when you're kind of looking at consumer staples, even financials for the most part. I mean, they're up almost 1% today if you're looking at JP Morgan. Backed off here a little bit. That's another sector that can kind of benefit from, you know, higher interest rate environment, or maybe seeing the 210 curve kind of widen out here a little bit. And then you kind of have, outside of, you know, Google, communication services a little bit weak, information technology, if you're looking at NVIDIA is getting destroyed right now on an intraday basis, and it hasn't really found its footing. So that's kind of the environment that we're in. And you can actually see that earlier this morning when it came to the S&P 500 equal weight and just the S&P 500 in general. You saw this massive divergence between the two, where the concentration of fund flows were kind of going into the mega cap names, and that could be a flight to safety type of trade that's taking place, rightfully so. And then kind of throughout the day, you started seeing the Mag 7 kind of fall by the wayside a little bit, pretty much by NVIDIA, and you started seeing a little bit of broader participation for the most part in the market in some of those you know, non-cyclical areas in pockets of the market.
Okay. Yeah, the equal weight is a good one. You pointed that out to me this morning, and it's a good demonstration of the kind of weakening around the edges of that breadth, that rotation stuff. Pulling back pretty significantly now. I mean, it's been slow.
Tesla pulled back like I said it would.
Moves, but it's every day now. I mean, it's basically a week running where they just kind of keep hitting, chipping away, chiseling away at a lot of the post-election winners.
It has been, and actually, if you actually look at the divergence or the difference,
I guess down to the assessment.
The equal weight in the S&P 500, just this morning alone, it was actually one of the bigger divergences we've seen since March or April of this year. What's actually very interesting about that is that the S&P 500 continued to melt up to the upside because it was a concentrated type of rally. So we don't know if that's the type of environment that we're going to be in again, where a lot of money flows are just going to go into the mega cap names because they have cash on the balance sheet, uncertainty around tariffs, uncertainty around inflation, and we have this kind of concentrated type of market taking place here. The last thing I will say, though, even though we have some red days, you know, 2 or 3 red days in a row, liquidity is looking great. This is probably the most liquid book depth that I've seen in the S&P probably almost all year. We're averaging around 90 to 95 contracts on the bid and ask. The high for the year on a totality basis is around 85. So this is not a lack of liquidity type of sell-off that's taking place. There's some backers here that's really picking up these selling flows as well, which gives you a little bit of confidence here if you're a bull in this market.
Great point. Especially because, you know, liquidity gets worse if people are forced to make moves, and when it's nice and smooth, to your point, it looks like it's still kind of in that realm of healthy correction or consolidation, still very much so. Appreciate it, KG. Good context, good charts. Thank you. Let's go to the NASDAQ. When we come back, we're going to talk some IPOs as the pace seems to be picking up. Also developing story in banks with JP Morgan giving a little tease on next year's
James Howard, your order's confirmed. What?
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insight.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go, at 12 p.m. Eastern on the Schwab Network.
Another breaking news item. Can you guess what it is? It's another deal blocked. This one, though, perhaps a little bit more, I don't know, justifiable. Who knows? I'm not going to editorialize too much, but it's very clear that the administration does not like big deals getting done. Nippon Steel will not be buying U.S. steel.
Man, I'm going to get on out of here. I got so much stuff going on right now.
Perhaps one that maybe both sides more agree on, but either way, just another example of...
I got a notice here from McAfee web browser that they charged me $600. That's bullshit. I mean, I haven't had this service in 10 years. So I'm going to get out of here. I got to take care of personal stuff. That's a scam. Don't worry about it. You sure? They said they charged me. Transaction ID and everything. Your payment has been received. I talked to McAfee one time, asked for a job.
That number has not yet been assigned. Please contact technical support.
Oh, that number hasn't been assigned. Today's the last day of your individual McAfee subscription. You'll automatically renew. I hope your services meet the expectations. Your security is just... We disabled links. For your security, we disabled links if you believe that it's safe. Huh. That hasn't. They get you to click on the which is so you know you're familiar with this. McAfee's dead, or supposedly. I think he paid him off, but Huh. It's Tuesday, December 10th. Subscription will renew every 12 months. Okay.
Names that are anticipated to get in. Always a busy day going along with triple witching, but again, given the recent performance in some of the large caps or mega caps at the top, some of the weightings could change. So there's still some dynamics that are in play to keep an eye on. But it's usually a big day. It's exciting for the companies getting in, but this one seems to be a bit more unique, given some of the recent dynamics. So there's still some variables at play that haven't necessarily been determined just yet.
All right. Thanks a lot. Appreciate it, Max.
Thanks,
Good timing on the deals, too, for some fresh perspective from one of the big homes of deal making at the NASDAQ, Max Cabasso. Let's go to Jenny Horn for developing a story into the banks. JP Morgan had a little bit of an intraday swing today from a report on their income guidance. Jenny, take me through it real quick.
Yes, they now expect their net interest income to beat expectations, which is reversing some earlier guide that the street and analysts specifically had gotten a bit far ahead of themselves. So at this Goldman Sachs financial conference earlier today, JPM's head of consumer and community banking did say the key revenue source will probably come in about $2 billion higher than current estimates. And when they did release their third quarter results, the CFO did talk about the fact that consensus
I was just talking to
net
Dawn.
interest income in 2025 was around $87 billion, and that was even a little toppy. So now they feel as though things have changed. The rate outlook has firmed up on average by about 40 basis points. Higher in 2025 than it was just a year ago. Consensus has also come a hair off of the $87 billion mark. They now expect that to top by about $2 billion. Earlier today, Citi CFO also did highlight that their own net interest income has also been better than expected this year. They expect to hit the high end of their overall revenue guide for 2024, calling for around 80 to 81 billion. So encouraging, we're hearing it from both banks, and I think a very stark reversal from the pessimism we heard pile on into their last earnings reports. Now we're actually hearing some good news into earnings, which will be in about a month or so from now.
All right. JPM down a little bit, popped earlier, gave it back though, so still above 240 at least. Thanks, Jenny. Good look at some intraday action there. Gave it all up. All right, when we come back, we're going to talk some bonds. Colin Martin joins me to discuss big picture pre-inflation ahead of the bell.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Stocks under some pressure. Bonds kind of been that way, but have been fairly quiet since a little selling this morning. Colin Martin joins me, taking us into the bell, director and fixed income strategist at Schwab Center for Financial Research. Colin, we've got inflation tomorrow, and we've got bonds still pretty much in the low fours, but the last couple of days, yields trying to creep up. Does that make it interesting?
That makes it a little bit interesting coming off the low we saw on Friday, kind of the lowest we saw over the past 2 months. When we look at what to expect tomorrow, I'd say yields right now are likely reflecting those consensus expectations. That's what we've seen over the past few inflation reports. As long as the data comes in, meeting expectations, even if a little bit hot relative to what we're looking for or what Fed is hoping for, if they meet expectations, we haven't seen much of a reaction to the bond market. So even though we're expected to see core CPI come in at 0.3%, at least that's a consensus expectation on a month-over-month basis, that'd be the 4th straight month with that reading. That's too high for inflation to get down to the Fed's 2% target. But again, if it does that, markets I think are priced for that. If we're looking for what could happen, either upside or downside, if we saw a number come in a little bit hot, I'd expect to see Treasury yields rise. That might not be enough to take a rate cut off the table next week. The implied probability of that's over 80% right now, but it likely changes the timing of the potential cut after that. Markets and we are expecting a pause at some point in early 2025. If we get a hotter than expected reading, it's more likely that pause will probably come early in the year.
Okay. And
all righty. For your security, we disabled links in this email. Yeah. Well, I opened the email up. It's just so weird, looks so original. Your payment has been received. I don't like that.
Some stop earnings this afternoon. We're going to talk about a session that did unwind some, and then some more. The Russell now down 0.5%. It's about a third to 0.5%.
Wait for the CPI number. That's the big deal.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos,
The dark web.
articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Personal property, thank you for holding. How may I help you?
Yeah, is this Dawn?
Real-time example.
It's not. She's unavailable at the moment.
Okay.
Can I help you?
Yeah, I was talking to her. They had
Catch
thrown
me
another
on
call on
Fast
my
Market.
assessment.
Weekdays at noon.
So
Okay.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
I got that information. I'm just going to go ahead and run up. It's okay if I just run up there and get this all straight?
Absolutely.
Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only thing that you need.
Oh, I gotta take this girl. It's Schwab.
Have a choice in how you invest with Schwab.
Binge watch the market with
You got to really watch your stuff anymore.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
It's
and
3
on
o'clock.
all
Good. I'm out of here.
streaming services.
I looked at my tax bill and I said, what? It was double last year. I'm going, what the heck happened here? And they raised it last year quite a bit. So I'm going to run down. I got my little form that I got told them that I totaled my car out. And then I see this McAfee thing. I'm going, what? $600? I haven't had that service in 15 years. Been a long time. So yeah. And I'm too old to be keeping an eye on this stuff. I just want to make it so all I want to do anymore is just trade stocks. I don't even want to own a car. Maybe when I get ready to retire, I'll move to Big Island. But I'm going to get out of here, get this straight with the county clerk. I freak out. I mean, I got to get, if something happens, I got to get it done right away, or it's on my mind and I can't think or do anything. So I don't know if you're the same way. So I'm going to be out of here. I really had a good day today. That last trade didn't turn out too good. I ended up losing $600 on that one, so 650, close to it. But I wasn't paying attention. I could have got out even, or a little bit under even. I could have got out even. I could have won on that trade. I was up by the time it came back to the second time up. And then all of a sudden it just took off. Boom. So I really appreciate y'all. I'm going to get out of here and take care of this situation. I won't be the same until I get it done. You know about it, Joshua? I almost got a job with McAfee. I talked to him on the telephone. Yeah, this was back when he started that coin. He got in trouble with that coin. That was back, what, 8, 9, 10 years ago? And I said, hey, won't you let me work for you? Be your chartist artist. And that's before I knew what kind of guy he was. And I said, oh, man, he's wanted for murder. He's down there making some kind of drug down there in Mexico. I said, I don't know if I want to do anything with this guy. He'd have got me killed or dead or something. So I'm out of here. Y'all be good.